Bloomberg Terminal here. Here's your company, folks. They got a market cap of about $3.7 billion. This company's got revenue, about just right around $1 billion. $1.2 billion is the forecast for 2024. EBITDA, which is what I look at, because that's, or actually you guys are a real estate company, so operating income $300 million. So this is a real size company, some heft. You got about a $5 billion of debt on your balance sheet. Where's the growth going forward?
It's across all of our communities. Our job is to transform that raw land, that land bank, as you referred to it, into income-producing assets by meeting the demands in our community. And like I said, across our portfolio, our multifamily is very tight, high 90s occupancy. We need to build more. So we're moving very quickly to start that next multifamily project in the Woodlands and the next one in Summerlin to meet the demand that's in that community.
So it's better to stay, I guess your strategy is to take your existing communities, the Woodlands outside of Houston, Summerlin and Vegas, and expand those as opposed to saying I'm going to Phoenix or something.
Well, it's funny you should say that. 2 years ago, we went to Phoenix and bought 37,000 acres in a community called Terra Vallis. We're entitled for 300,000 residents and 55 million square feet of commercial space, roughly the size of St. Louis. We've already under contract and sold over 800 lots to home builders at over $700,000 an acre to meet the housing demand that exists in the West Valley of Phoenix.
So who builds the homes? Do you build the homes, or do you go to D.H. Horton or Toll Brothers or one of those guys?
We sell to all the public builders, a lot of large regional private builders as well. We try to be Switzerland, sell land to whoever bids highest and delivers the best product.
What's this interest? We've been in this interest rate environment for the past couple of years of much higher rates. We all grew up, it seems like, over the last 15 years with zero interest rates. How's that impacted your business's higher rates for longer?
It's been an accelerant. And it's absolutely contrary to popular opinion, and it's contrary to the headlines that we read every day that higher rates is killing homes, they're less affordable. But really what it's done is it's taken out supply. There's almost no resale out there.
You're right.
Because so the home builders and new home construction, which is our business, are thriving. We've seen greater demand for those new homes than we have seen in a long time. And if you add in that last month, for the first time in decades, new home pricing was less expensive than resale. New homes have typically traded on average for 20 years 17% premium. Last month they were less expensive.
Interesting.
And it's really pushing a lot of buyers that want that quality of life in our communities to buy new home construction, and that has been an accelerant on our business.
I'll tell you, just D.H. Horton, just today, the stock jumps to a record high as their third quarter earnings beat estimates.
Look, sometimes I'm lucky, not good. I think it was about 6 months ago, I thought that 2024 would be the golden age of home building.
Right.
Rates would start to tick down a little bit so that we'd see more demand in buying homes, but not so much that we'd see resale pick up. And the record margins that public home builders have been printing, 25 to 30%, which to me, I don't remember that in my career, just going to remain strong.
So when you're selling land to a D.H. Horton, you're like, I'm not giving you a break on this. And I just saw your earnings yesterday. You guys are crushing it.
We put them out for bid, and we bid based on a couple of different factors. One is price per acre, but other is our builder price participation. We were expecting a home to sell for, call it $500,000. If it trades for $600,000, I get about 20% of that upside.
Okay.
To make sure, it's a little bit of schmuck insurance, right? If the market rips, I want to make sure I get paid for my dirt appropriately, so we have a little true up at the end when the homes are sold.
Interesting. That's so smart. What do you expect interest rates to do here? Here, this global Wall Street, that's all we talk about, it seems like. You're on the ground actually in the business. Yeah, look, if I knew for sure, I wouldn't be talking to you. I'd be on a beach somewhere. I do think, rates will start to come down towards the end of the year. I think it'll be a modest decrease. I don't think there'll be anything massive that will shift the tide, so to speak. And I think it'll be continue to be good for new home sales, continue to be good for home builders, and continue to be good for the value of our land. All right, very good. And we'll see. Again, D.H. Horton came up with some big numbers today. So that new housing market remains very strong. And if you've got quality properties like, the Woodlands or, Summerlin, good spot to be. David O'Reilly, thank you for joining us. David O'Reilly, he's the CEO of Howard Hughes, trades on the NASDAQ. The ticker is HHH. It's got a market cap of $3.6 billion, up 1.4%. Today. We appreciate you coming in. Very well. Looking at the markets here, S&P 500, a little bit softer here than we were earlier, up about 0.1%. The Nasdaq's actually down here, had been trading up about 0.2%. We're now off just 13 points here. We'll keep an eye on that. I'm going to call it out for Tom Keene. The VIX 14.4 here. Looking at the yield space, 10-year Treasury 4.16%. That's pretty steady on the day. WTI crude oil steady as well, just above $82 a barrel. And gold hitting another high today here, 24.62, about $3 today. And Bitcoin, in honor of Matt Miller joining in just a moment, it is off slightly, $64,250. With our news in New York City, Michael Barr.
Thank you very much, Paul. Former President Donald Trump is expected to deliver his acceptance speech for his party's nomination this evening at the Republican National Convention. Trump says he rewrote his speech after the assassination attempt against him. This morning, Trump told the crowd, "God was with me after the rally shooting." Vice presidential nominee J.D. Vance continues to introduce himself to the nation. This morning, he spoke at the Faith and Freedom Coalition breakfast at the RNC in Milwaukee. He had high praise for former President Trump.
Remember that this is a guy who delivered for social conservatives more than any president in my 39 years of life. I think he deserves a little bit of grace, and he deserves a little bit of trust, and I hope that we will all provide that to him. I certainly know that as his running mate, I will.
And a footnote, before former President Trump speaks tonight, Hulk Hogan will reportedly deliver an address. Nearly 24 congressional Democrats are now urging President Biden to step aside and let someone else face Donald Trump at the polls in November. Meanwhile, Biden is off the campaign trail. He was supposed to speak yesterday in Las Vegas to a Latino civil rights and advocacy group. Unidos U.S. organization President Janet Murguia took to the stage to make an announcement.
I was just on the phone with President Biden, and he shared his deep disappointment at not being able to join us this afternoon. The president has been at many events, as we all know, and he just tested positive for COVID.
Biden is isolating in Delaware, the White House describing his symptoms as mild. At round one of the Open in Scotland, American Justin Thomas is on top of the leaderboard at 3 under in the clubhouse. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have more Fed speak. Federal Reserve Bank of Chicago President Austin Goolsbee suggested the central bank may need to lower borrowing costs soon in order to avoid sharper deterioration in the labor market. He didn't say how soon. We have a shift to the markets now. We have the NASDAQ down 0.3%, 59 points. The Dow up 0.1%, 44 points. The S&P 500 down 0.1%, or 6 points. The 2-year yield, 4.44%. That's little changed. We have the 10-year yield at 4.17%, and that is little changed as well. Quick check of currencies. We have the dollar stronger, Japanese yen weaker at 156.62 against the dollar. We have the euro weaker, the British pound weaker, Bitcoin down about 0.5% at 64,092. What's moving the markets? Oh, we've been talking about a Tex-Mex restaurant, Chuy's Holdings. It's up right now, 47%. Darden Restaurants, you know them. They own Olive Garden, Longhorn Steakhouse. They agreed to purchase the company, so there you go. And then you have Domino's Pizza on the flip side, down nearly 12%. Had a tough second quarter. Discounts, new product launches couldn't really help it out enough. And the numbers are in for Prime Day. Yes, U.S. shoppers spent $14.2 billion online during Amazon's 2-day sale, up from 11% a year ago, in line with estimates. That's according to Adobe. Paul, the average household spent about $152. That's down a little bit from last year. But the top-selling products, protein shakes, Amazon's Fire TV stick, and Glad trash bags.
Sure, who doesn't need those?
I got 2 packages on my doorstep yesterday.
Now, did Mr. Mateo, did he participate in Prime Day?
Yes, he did. He's
Okay.
the shopper in the house.
Very good.
I got another umbrella to put on the beach and in the softball field because we need another one.
Sure,
you know?
who doesn't?
2's not enough.
Very good. All right, Lisa Mateo, thank you so much. We appreciate that. Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. Alex Steele is off today. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcasts. As Lisa was just mentioning, U.S. shoppers spent $14.2 billion during a 48-day Prime Day. I was not one of them, but that's up 11% from a year ago, as Lisa was reporting. So pretty solid results there. You got to like that if you're an Amazon follower. Poonam Goyal, she is an Amazon follower. Senior U.S. equity e-commerce and retail analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey via Zoom. Poonam, the numbers Lisa was just reporting, $14.2 billion, 11% growth year over year. That seems pretty good to me. What do you think?
Yeah, the numbers are great. They continue to show that shoppers are focused on sales and they're seeking value. And when Amazon and others have events such as these, they do drive traffic and conversion onto the platforms. So really good numbers, likely some pull forward and spend. So you will probably see things will taper off a little bit after the Prime Day sales event, but nonetheless, a very strong start, it seems, to 3Q for Amazon.
Yeah, I was just looking at eMarketer, which I know is an independent group that kind of looks at this stuff. They were expecting U.S. shoppers to spend $8.2 billion on Amazon during the event. So I guess better than expected is the way to think about it.
Yes, I mean, the numbers are a little different because the numbers that Adobe reported are not just on Amazon, they're total online sales.
Gotcha, okay.
But nonetheless, very strong results, and they are better than Adobe's initial estimates for a 10.5% increase.
Average household spend $152 on Amazon on Prime Day. That sounds like a good number as well. How does that stack up?
It's a good number. We expected Amazon shoppers to shop less this year on Prime Day than last year, according to our own survey that we ran ahead of Prime Day. So not surprised there, as shoppers are crunched for cash and they are trying to be picky and choosy on where they spend and what they spend, shopping really on the lists that they had going into Prime Day. So we're seeing a little bit of that. But overall, more shoppers joined Prime Day this year, reported by Amazon, which proves to be even more encouraging because, when you see that, that trend hopefully holds up and drives more shopping on the platform, even after Prime Day.
You see numbers like the Amazon Prime Day number, the 11% growth year over year. It seems like a really strong number. We had retail sales earlier in the week, came in better than expected. I know the consumer's hurting out there. I know inflation's hitting a lot of folks really hard, but it doesn't seem like we're seeing it in the spending. How do you guys think about it? What do you hear from the companies that you cover?
Yeah, I think it depends on the retailers that you're looking at. I do think that, we've talked about this in the past where the value customer is trading down. We've seen that in the results earlier this year at Walmart, where numbers are strong because they are driving in more customers into their doors and online. And then the middle, the department stores, they continue to get squeezed to the large extent. And I think that trend will continue. So I do think that where there's the right product, the right price, customers are going there. They're still going to experiences. They're going for convenience, which is where Amazon plays a big role. But they are being picky and choosy, and there will be some bifurcation when they report between the numbers, because not everyone will do well, as we're hearing and seeing in these numbers.
It's only mid-July, but I guess people with kids have to start thinking about back to school. My guys are all out of that stage, thankfully. What's the back to school season look like this year? What are the expectations?
Yeah, the expectations are for back to school season sales to grow, and Prime Day is going to help with that. This year's Prime Day event came a little later in the season, which means that more back to school shopping likely occurred, dorm shopping, etc., on the Prime Day sales event. That said, you will see people buy backpacks, you will see them buy supplies, you will see them shop for dorm room stuff and apparel. But at the same time, where are they shopping for that? I think the retailers that are going to drive that spend are continuing to be the same. It's going to be the Amazons, it's going to be the Walmarts, the Targets, where they can get the value that they're looking for.
So what is the expectation for the holiday season this year? Are you guys forecasting growth in holiday spending? Because I know that's the big season for retailers.
We are expecting growth this holiday season, but I do think there are challenges as we enter this holiday season. Keep in mind that the retail calendar is different this year, so it is a tougher calendar comparison. Last year was very, very strong. Last year had some extra selling days, so the calendar shakes up as being a headwind. And going into the holiday season, that said, with elections and just so many other things happening this year, we do think the consumer is going to be a little diverted. So retailers will have to work harder to capture their spend. And it will be a tougher holiday season, but we do see some growth still this year.
What are we seeing just in that dynamic, Poonam, of the bricks and mortar versus e-commerce? Because we've gone through, I'm going to say, almost a generation of downsizing retail footprint in the United States. And I kind of got the sense that during the pandemic, that kind of slowed, if not reversed a little bit. Where are we on that dynamic between I need to own some brick and mortar versus, I can kind of go lean more heavily on retail, e-tail?
Sure. So I think, we'll always need brick and mortar stores. I don't think they go away, but we've talked about this before. I do think we need some balance, and we're still continuing to push forward on that balance. There will be more consolidation in retail. I think it's necessary because we still are overstored, but at the same time, we have retailers coming in from abroad that are expanding, whether it's the Primarks, once again, a value play, or whether it's the Aldis and some of the grocers. We are seeing them take space as they encroach on the U.S. landscape. That said, our estimates call for retail sales growing to a third, e-tail sales growing to a third of total retail sales, up from 25% last year. So still high single-digit, double-digit growth in the online landscape for the next 5 to 7 years, which means that people will be shopping less at brick and mortars and more online. And we saw that trend come back. Right after the pandemic, you saw this rush to stores because people wanted the experience of seeing things, touching things, being out there. But now they've normalized again, and we are seeing the shift back to shopping more online.
All right. Interesting stuff. Poonam Goyal, thank you so much for joining us. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst, Bloomberg Intelligence, joining us via Zoom from Princeton. Talk about Amazon again, the Prime Day, that 48-hour period where people just go nuts on shopping on Amazon for some of those deals. Stock's off 1.8% today. Amazon's up 21% year to date, though, and it's got a market cap. You ready for this? $1.92 trillion. So just an amazing story that continues to go. And again, when you think about Amazon.com, it's really now a technology play on their cloud business, AWS. That's what's driving all of the profit, and it's been a big driver of the stock's performance as the tech story takes over for the retail side of the business here. But still, that's a big part of Amazon. Looking at the markets, we've gone from green to now red. S&P off about 6 points. The Dow is flat, and the Nasdaq's off about 0.3%, so a little bit of a rollover in this market.
Your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Strong earnings from Taiwan Semiconductor, and this after chip stocks really took a hit yesterday on concerns about tougher trade restrictions on China. We get more from Bloomberg's Kriti Gupta.
They have a lot to do with government contracts that were awarded by the Biden administration to a lot of these companies to bring a lot of that manufacturing home onto U.S. soil. So you saw the stocks pop every time they got one of those grants from Intel to Micron and you name it.
Well, right now, its ADR is down about 0.5%. United Airlines pointing the finger at carriers who have been slashing prices to try and capitalize on record summer travel. It said its third quarter profit will fall short of expectations. Sid Phillip covers the airlines for Bloomberg News.
Summer travel is basically when they make most of their money. And for carriers like United and Delta, they were expected to be sort of raking it in during the summer season. And that isn't happening. That airlines talking about how that's being impacted by overcapacity in the general market from the low-cost carriers.
United down, up nearly 2%. And shares of home builder D.R. Horton, they are, well, it looks like they're up about 12%. It reported weaker than expected orders in a quarter high with high mortgage rates. Then you have Nokia, ADRs right now. They are down 6%. Quarterly sales in the second quarter missed estimates, and they were the lowest since 2015. That was due to weak investment in mobile network upgrades. Shares of Abbott Laboratories, that's where we're headed to next, down about 1.5%. It boosted its full-year adjusted EPS forecast. And Novartis, that closely watched prostate cancer drug, well, it disappointed, and that took the shine off of its raised profit forecast. Right now, its ADRs down nearly 4%. And some changes could be coming to Warner Brothers Discovery. The Financial Times reporting the company considering splitting its streaming and studio business from legacy TV. Their shares are lower. That is your Bloomberg Company News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, you're listening to Bloomberg Intelligence program here. Paul Sweeney, Alex Steele is off today. Bloomberg Intelligence, 475 investment professionals around the world covering 2,000 companies, 130 industries, equity research, fixed income research, commodity research. They do it all. We feature them on this program in Bloomberg Intelligence. And we also feature world and national news. And with that, we go to New York with Michael Barr.
Thank you very much, Paul. White House officials believe former House Speaker Nancy Pelosi backed Representative Adam Schiff's call for President Biden to withdraw from his re-election campaign. That's according to a Reuters report citing a top White House source with direct knowledge of the matter. Blackstone executive and billionaire Democratic donor John Gray said he hopes President Joe Biden weighs the intense physical demands of running the country for another 4 years.
Well, the president is a good man. He has been a wonderful public servant. And like Speaker Pelosi said, you know, he's gotten the votes in the Democratic primary. This is his decision. But I would hope he considers the really extreme physical toll of this business, of this job, I should say, over the next 4.5 years. And so, again, his call, but it is a very challenging physical job.
Gray's comments come as some Democratic donors have said they will withhold any future contributions until Biden is off the ticket. And Biden is also dealing with another issue. He has been diagnosed with COVID and had to cut short a campaign stop in Las Vegas yesterday. The president's doctor said in a statement that he has mild symptoms. Dr. Celine Gounder, editor-at-large for public health at KFF Health News, has more on President Biden's COVID diagnosis.
Older people, even those who have been vaccinated and boosted, are at increased risk of developing a more severe case of COVID.
Dr. Gounder spoke to CBS. The White House says the president will self-isolate. Day 4 of the Republican National Convention wraps up tonight in Milwaukee. Day 3 was about the GOP vice presidential candidate.
My name is J.D. Vance from the great state of Ohio.
J.D. Vance told his story of growing up in poverty. Former President Donald Trump will wrap up the convention with a speech tonight. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Poll.
All right, Michael, this story is for you here. I've been in this investment business for a long time. The value of sports teams just never goes down. So look at this. The looming bidding war for the NBA expansion team expected to be granted to Las Vegas is shaping up to be the most competitive and expensive sports deal in U.S. history. The list of potential suitors spans LeBron James and his backers to the company that owns the Red Bull brand, according to people familiar with the situation. Get this, Michael. The total price tag, including building a new arena, has the potential to hit $7 billion.
And you know what? When I've always said this, and all the experts have said it, you know when you make the money on an NBA team or any sports team, when you sell it.
When you sell it.
And that's what's going to happen. The arena could cost whatever.
Yep.
But when they sell it, they're going to get their money back.
Exactly. And in this Bloomberg News report here today, they have just a chart with some of the most recent transactions. Washington Commanders in the NFL, $6.05 billion in 2023. The Denver Broncos, $4.65 billion in 2022. And the Phoenix Suns in the NBA, $4 billion. So the numbers are massive, and they just go up and up and up.
It just makes me realize I can't even afford a cup in the in the stadium. But I tell you, it's the money is out there, and that's the reason why a lot of these sports entities are saying, you know what, we'll take a lot of minority investors now because it takes a lot of money to buy these teams.
Yeah, it does. And boy, owning a team in Vegas just seems like the best of all worlds. I mean, you just got a great, vibrant city. And now that all the sports leagues have embraced betting,
yeah,
I can't think of a better market to be in.
Well, yeah. And it used to be that Las Vegas said, you know what, even though there's online betting, we're not going to bring it at first to our state in Nevada.
Yeah.
But then someone said, you know what, that's silly.
Yep, very interesting. All right, Michael, thanks for chiming in there. I knew that was a story you would like here. Boy, so again, the NBA looking to get to Vegas. We had a little football game there last year, the Super Bowl. So it's good to be in Vegas, as always. A little bit of red on screen. We're going to have more coming up. I can't believe who's darkening the door, but we'll see what happens in the next hour. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, folks, it could all go off the rails in this hour. Darkening the door is one Matthew Miller, fresh off the television set. He's going to sit in with us for the next hour. Matthew, thank you so much for joining us.
It's a pleasure to be here. It's been a while, and there is a ton going on right now.
There absolutely is.
I mean, I note that the Dow is up. On my show, no one cares about the Dow Jones Industrial Average. It's up for 7 sessions in a row.
Exactly. I know. It's been just kind of ripping here. We started off the day with some green on the screen. Now it's kind of mixed out there, but we'll get to all that stuff here. Geethan Raghunathan's going to join us. She's going to preview Netflix earnings. That's a good story, and it's all about the subscriber growth there. Old buddy of yours is going to join us, Matt. Joe Brusuelas, chief economist at RSM, going to get his economic call there. So
great economist. I've known him for almost 2 decades.
Yep.
And he was in my motorcycle gang.
Really?
Yeah, it was me, Joe Brusuelas, Rosie.
Okay.
A couple other guys.
I have a moped. Can I join that? I have a Vespa scooter.
Vespa's welcome.
Piaggio. Very good. All right, let's start off this hour like we do with Mr. Charlie Pellet.
Thank you very much. Welcome on board, Matt Miller. We have got the Dow higher. Nobody cares, according to Matt Miller. We've got the S&P, NASDAQ, both in the red right now. But perhaps the key takeaway at this hour, little change. We got the Dow up 10, swinging between gains and losses right now. S&P 500 index, we'll call that unchanged. And NASDAQ right now down 19, drop right now of just about 0.1%. A rebound in stocks is waning as a rally in chip makers failed to prop up the broader market. The euro fell on bets of the European Central Bank will be cutting rates in September. 10-year, 4.16%. The 2-year right now, 4.43%. Spot gold, little changed, up $9 the ounce to $24.67. And a retreat for crude, West Texas Intermediate, now at $82.54 a barrel, lower by 0.4%. Wells Fargo strategists are upgrading U.S. banks on the so-called Trump trade. Chris Harvey is head of equity strategy at Wells Fargo Securities.
We didn't expect what happened this weekend to happen. And what that did, it made the probability of Trump taking the presidentship from likely to highly likely. And then suddenly, we weren't talking about the fundamentals anymore. We were talking about policies. We were talking about tariffs. We were talking about taxes. We were talking about regulation.
You can hear more of the conversation with Chris Harvey of Wells Fargo on the Surveillance podcast. You can download it wherever you get your podcast. Briefly, Taiwan Semiconductor Manufacturing is lifting projections for 2024 revenue growth after quarterly results beat estimates. Taiwan Semi right now down 0.6%. Again, recapping, S&P little changed, lower now by 0.5 point. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Matt Miller, the Matt Miller, sitting in for Alex Steele today. It's Paul Sweeney as well. Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that is where you can find us.
Oh, speaking of Bloomberg Podcasts, I have one.
Oh, what do you got?
It's called Hot Pursuit.
With Hannah.
With Hannah Elliott on the West Coast, me out here in New York. We talk cars, and more cars.
Can't imagine. She's got quite the social media going. I mean, she's very active, and she's all over the world in some of the best cars I've ever seen.
Yep, she's constantly flying around, testing out the most expensive supercars and hypercars. Plus, she's deeply connected with all of the biggest collectors around the world and the auction houses. Yep. So she basically covers the high end, and I do like American muscle and trucks.
There you go.
But it's a great podcast. Hot Pursuit. Get it wherever you get your podcasts.
Bailey Lipschultz joins us here. He covers all the equity markets for Bloomberg News. Bailey, what are you looking at here today?
I unfortunately don't have a podcast, but maybe one day I will.
I can't believe you don't.
I don't know what I would talk about.
What do you say in your review? I mean, doesn't your boss say, Bailey, You have no podcast.
I think that actually is what the conversation goes. Then I shrug, and then we move on with our lives. But anyway.
Well, you can be on our podcast today.
Oh, yeah, exactly. So, it's a win-win. I made guest appearances. Matt, as you mentioned, Dow up again, all-time high for the Dow. All-time high on an intraday basis for S&P 500 equal-weighted index, so SPW. Nice. Okay. So it's the catch-up trade, the broadening trade, if you will. Keeping an eye on home builders, this coming after D.R. Horton jumped more than 11%, record high, 3Q. EPS beat expectations. Analysts.
This is fascinating to me, by the way. As President Biden floats the idea of capping rents at 5% increases, you have home builders hitting an all-time high. Do they doubt his ability to push legislation through?
As we say, tongue-in-cheek.
I would just say more, you look at the expectations that while inflation and interest rates are high, people need to buy houses. So you're looking at, there's still so much pent-up demand. When we go back to some of the conversations we had a year ago, no matter what, people would agree that there wasn't enough of a build-out of new homes since 2008. So you're seeing maybe some of that right-sizing. Broadly speaking, though, REITs have also been on a tear. Again, part of that kind of catch-up trade, if you will.
Last hour I interviewed in studio here David O'Reilly, the CEO of Howard Hughes, and they own the Woodlands community outside of Houston, which is awesome.
Yep.
They own Summerlin outside of right in Vegas, which is another huge community, golf courses, all that kind of. They're like 95% sold, and they have like a gajillion of acres in their land bank that they're putting out the bid to the D.H. Hortons and the and the Toll Brothers.
Well, if they're renting any of those properties, they'd be subject to the cap at that size. But I want to point out, speaking of podcasts, there's another one that we have on Bloomberg, Odd Lots, with Joe Weisenthal and Tracy Alloway. They recently had Jim Milstein on from Guggenheim Securities, and he's got an idea that could unlock billions more in capital for home builders, which is, and he used to work for the Treasury, right, which is using Fannie and Freddie to pass on loans to these home builders at government costs. So I just think it's a fascinating a podcast. And if you're interested in home builders, you should definitely check out Odd Lots this week.
Very good. What else you got for us, Billy?
Looking at another stock that's up, probably near and dear to your heart, Paul, I will say Warner Brothers Discovery up 6%. This coming after a Financial Times report. It's considering separating its streaming and studio business from legacy TV. Number of options being floated. Paul, I don't know how you feel about.
Well, it sounds exactly like I was just saying earlier. I have the pitch book that I would have made already in my head. I can already see every single slide in that pitch book about why you should do this.
We bring things together. We break it up. You know, rinse and repeat, make some money on fees. Stock down even after today's rally. It's on a 6-day winning streak, still down 31% in the last 12 months. So could be a bit of short covering, maybe a bit of bottom feeding. One stock that certainly is not faring well, Domino's, down as much as 13%. Biggest intraday drop, guys, since May 2012. Oof. They surprised investors by cutting their international store growth target, saying that their franchisee Domino's Pizza Enterprises is going to be the driver between that need to suspend the long-term guidance. They were talking up 1,100 new global stores in the near term. And really, when you look at that, that was a target unveiled 8 months ago. So you bring out the long-term. You cut it back.
I don't even need Ozempic to stay away from Domino's.
Yeah, you're from Ohio.
If you're ordering Domino's pizza, you've given up on pizza.
All right, here's my Domino's thing. My 28-year-old son, when he was about, 12, Domino's was way out in front of everybody with an app. And being the 12-year-old, he thought he was very cool. He maybe just got his phone.
I remember that.
And every weird hours of the day and night, Domino's be knocking on my door. I'm like, what the hell? And I yell up to him. I say, get your ass down. Get down here. So, but
they were very good. They were very good at that. Now obviously Pizza the Hut has an app as well. And I would say of the 3 publicly traded pizza makers, well, first of all, I think they're all awful options for good pizza, right?
But you didn't have good pizza in Ohio.
The best pizza in the world is made in Bexley, Ohio. There's a little mom and pop shop called Rubino's. Rubino. Rubino's. Okay. I grew up eating there. My parents grew up eating there. My grandparents grew up eating there. There is no better pizza than Rubino's in Bexley, Ohio.
I take it back.
See, yeah, that's where you struck a chord, apparently.
I did. All right, Billy, thanks so much for joining us here. Billy Lipschultz, he covers all the equity markets for us. We appreciate it. All right, we're going to talk to an expert on the media space. He Geetha Raghunathan. She's a U.S. media analyst for Bloomberg Intelligence. She joins us via Zoom. Hey, Geetha, before we get to Netflix, I know that we're reporting after the close here tonight. What do you make of this news? This sounds like something you would write, Geetha. You put out a research report saying you should split up your streaming businesses in your studio from the stuff that people really don't want, like the networks. What do you make of that? Is there value there? Is there an opportunity there?
There probably is, Paul, as you well know. I mean, obviously, the stock, Warner Brothers Discovery, has been under tremendous pressure. So the stock itself is down about 70% over the past 2 years. And we know why that's happening. I mean, they have a huge debt load of about $40 billion. Wow. And EBITDA is under constant pressure. So when they combined these two companies and the deal closed about 2 years ago, they promised $14 billion in EBITDA. This year, that's going to be less than I think it's less than 10 billion. It's probably around 9.7 billion. So it's a far cry from what they promised. And the thing is, there's just no visibility into future earnings because, TV advertising is under considerable pressure. So yes, theoretically, I mean, the plan sounds good because studio and streaming, that's really the growth assets. That's where the future lies. So you kind of separate that from the beleaguered, TV networks business. It sounds good on paper. The question is, how are they actually going to execute it? Because TV networks brings in 85% of all Warner Brothers profit. So it's really the cash that is being generated from the TV networks that's kind of feeding into the studio and the streaming businesses. Streaming basically generates nothing at this point. It's just barely breaking even. And studio, as you know, Paul, is a hit or miss business. So it's going to be hard to actually execute, I think.
How are they doing with the advertising tier? I have noticed lately that, when I'm watching Hulu and they force the ads in there, I can't. I just don't have the patience to sit through it. And so I'll switch and watch something else. Netflix has introduced that tier at a lower price, right? Are they making money on that? Are people watching it?
It's still very, very early days. So they haven't given us any real numbers around advertising. All that they've said is that they have 40 million monthly active users. So we think that translates to maybe about 20 million subscribers on that ad tier. That's still small potatoes when you compare it to the whole global subscriber base of around 275 million subscribers. So they have ways to go. But I think they are definitely going to get there. And this is really going to be the biggest growth driver for the story going forward, because there is a lot of there's a lot of thing that they can get in terms of revenue that they can generate in terms of advertising, and they're doing a lot to do that. So they are investing in live sports programming. That's what advertisers like. They're investing in these 2 Christmas Day NFL games. They have WWE content. They're investing in lots of sports documentaries. They have the Mike Tyson Jake Paul boxing bout that's coming out a little bit later in November. So they're doing a lot that I think will make them a very appealing option for advertisers.
All right, Geetha, let's switch to a gooder story, a better story, which would be Netflix reporting numbers after the close here today. What are you looking for?
So, Paul, as much as they try to drive or steer the conversation away from subscribers, we still come back to subscribers. So this is at its core a subscriber story. Consensus is pointing to about 5 million new subscriber adds. I think investors are looking for something like 6 to 7 million, just kind of given recent download data and recent engagement metrics. So it looks, investors are looking for something closer to last year's 2Q, which is, again, that 6 million mark. And then again, it's not just the subscriber numbers. We're obviously going to be looking at other numbers too. The revenue growth, which they are guiding to, is about mid-teens levels, as well as operating margin. And it's going to be interesting to see whether they're going to take up those free cash flow estimates. That right now is at about 6 billion. That's what the company has guided to, or whether they're going to revise their guidance for operating margin, which right now stands at 25% for the full year.
What are you watching? You watching anything Netflix?
No, but I'm watching The Bear right now. I just finished Ripley, which is a Netflix thing. Awesome.
And The Bear is like an FX thing, right?
Yes, FX Hulu. That's awesome. Season 3. So, yeah,
what are the shows, Geetha, that are doing the best? I mean, I see in the story that Bridgerton apparently is keeping subscriber growth robust. What else?
That is the #1 show on Netflix, and it was the #1 show on Netflix for the second quarter. We ran some numbers. We found that just in the second quarter alone, that was the most watched show across the world. Of course, the most watched show for Netflix, 1 billion hours. 1 billion hours streamed for just that one show in the second quarter. And of course, they have
5 minutes. I don't get it.
And of course, they have a host of other shows. But if you just look at the Emmy nominations, which came out yesterday, it's Disney actually that's leading, and The Bear,
Yep.
Shogun,
Yep.
and I think Only Murders in the Building. Those were the 3 biggest nominated shows.
All right, great stuff. As always, Geetha Raghunathan, she covers all the media stuff for Bloomberg Intelligence. She is our go-to analyst on all things media. All right, I'm all in on this pizza thing from Ohio, Rubino's. First of all, great sign outside the restaurant. It's like from 1940. Great sign, Rubino's Pizza. Okay, but the big issue is, what are they doing slicing up? The pizza looks great.
It's delicious.
How
it's
do you
like
slice
a thin,
it? Where's this pizza
crispy
slices?
crust sliced into squares instead
Why
of
squares?
the.
What's a square thing? Who does that?
I don't know, but you know what?
Is that a
that's what I
Midwestern
grew up
thing?
with. So to me, it makes sense. I understand if it doesn't to you, being from the New
There's a
York
concept
area.
of a pizza slice. Is that a concept you guys have?
No, you don't go and buy a slice. You can only go and buy pies, and then they cut them up into squares for you. And you play pinball there. You're drinking Mr. Pibb, and then maybe afterwards you go over to Grater's for some ice cream. It's a fantastic Friday night.
And I tell you, it looks like they haven't really updated it since the 50s, right?
I would say they don't need to.
They don't need to.
Although, if you call Rubino's on a busy weekend, nobody answers the phone.
Nobody. Yeah.
No one.
Yeah, too busy. I mean, the pizza looks phenomenal, so it might be worth a road trip. So that's
It's honestly worth a trip to Bexley, Ohio, just for the pizza. It's that good.
But am I going? It's Columbus, really.
Yes.
Right? It's Columbus, but Bexley for the locals. Okay. All right. So what's your go-to pizza there?
What do you mean? I just pepperoni pie. Yeah.
Just pepperoni. Okay, that's your go-to thing.
I don't know if they have anything else.
All right. All right. What else are you working on? What are you driving these days?
So I actually just got out of a Mustang, which was interesting because 2 weeks ago I was driving this new Mercedes AMG SL63.
Wow.
210 grand. It's got a big twin turbo V8 in the front. Actually, not so big. 4-liter twin turbo V8 in the front. It's a 2-door, 4-seater convertible. And I was thinking, this thing isn't nearly impressive enough to justify a $210,000 price tag. Real disappointment, to be honest. And then I get into this $60,000 Mustang GT, also got a V8 in the front, a 5-liter V8, no turbos, right? Naturally aspirated. It's a 2-door, 4-seater, rear-wheel drive, and for 60 grand, I'm having twice as much fun as I was in the $210,000 Mercedes. So that's the story right now. Okay. I'm looking to get into some Ram trucks. I was just talking to the CEO of Cummins, and of course they make the diesel engines for the big Rams.
Of course. Yep. All right, so you're all over the place here. All right, I'm very happy with my X3, the best vehicle I've ever driven, and that's even compared to my 5 Series, which with the.
But there's no stick.
There's no stick.
And do you miss it?
I do, but it's the rest of the car. The BMW X3 is so superior in terms of ride and everything that I'm okay. I'll live. All right, coming up, Joe Bruce-Wellis. He's the chief economist at RSM. We're going to get his economic call on this U.S. economy. That's coming up. This is.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks lower across the board. The Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000 all in the red right now. Looking at a drop of 27 points in the S&P to 5560, down 0.5%. NASDAQ down 163, a drop right now of 0.9%. The Dow lower by 119, down 0.3%. Bottom line here, stocks struggling to gain traction as big tech fails to prop up the broader market. 10-year at 4.16%, with a 2-year now yielding 4.43%. Spot gold up 0.3%, up $7 the ounce to $24.65. And West Texas Intermediate crude down 0.2%, $82.71 a barrel. Netflix shares lower by 0.8%. Netflix will be the big event after the close of trading. Geetha Raghunathan is a media analyst with Bloomberg Intelligence. She was interviewed moments ago right here on Bloomberg Intelligence.
This is at its core a subscriber story. Consensus is pointing to about 5 million new subscriber adds. I think investors are looking for something like 6 to 7 million, just kind of given recent download data and recent engagement metrics. So it looks, I mean, investors are looking for something closer to last year's 2Q, which is, again, that 6 million mark.
Bloomberg's Geetha Raghunathan. One other media note, sources tell Bloomberg Apple is having discussions about licensing more films from major Hollywood studios as it looks to bolster its Apple TV Plus streaming service. Recapping, S&P down 28, a drop right now of 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Matt Miller sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well here. We had a raft of economic data recently, including today. We had the initial jobless claims. Came in a little bit higher than expected, but I don't know. The question, I think, is, has this Federal Reserve already gotten us a soft landing? I don't know. It feels like it. We'll check in with a professional who does this stuff for a living. Joe Brusuelis joins us in studio. How good is that? So he gets a gold star. He's the chief economist over at RSM. Joe, how's our Fed done here in landing this economy?
Okay, so, you know, when we look back on this in a number of years, we're going to think the Fed did an extraordinary thing, a real policy achievement in bringing the U.S. economy in for a soft landing after hiking the federal funds rate by 550 basis points. You know, if the Fed was truly data dependent, we wouldn't be waiting for a September cut. They'd be cutting now. As a matter of fact, if you're all out there, look at the TAYL on your Bloomberg terminal.
The Taylor rule. I love that function, actually.
You can estimate the Fed's reaction function using 4% as a non-accelerating rate of inflation and unemployment. That's the Fed's estimate. And I would suggest a neutral rate of 1.1. You get an optimal rate of 3.9%, which implies the Fed's policy rate, people, is way too tight.
Why do you choose a neutral rate of 1.1? Isn't it higher?
No, I think it's actually, well, the Fed, John Williams thinks it's 0.5. No, I'm double that. And it indeed may be higher. That's something that's unobservable. We do our best to make that estimate, Matt. But I think that that's appropriate given where the economy is and the structural changes that we're going through. Because I think we're all pretty much here in Wall Street in agreement that rates are going to be higher for longer because inflation is not going to be what it was for the 20 years prior to the pandemic. It's just not, due to the distortions around movement of supply chains back to friendly countries and the geopolitical tensions that are going to cause problems no matter who's in the White House.
Now, if we get a Trump presidency, I'm fascinated by some of his proposals because the whole premise of the Republican Party is that Biden caused this inflation and Bidenflation is bad and they're going to stop inflation, right? But Trump wants to cut taxes. I'm happy about that.
Yes, I know you are.
I'm not fighting against that. But he wants to basically give us a ton of cash. Plus, he wants to put tariffs on everything. That's inflationary, right? Those two things are inflationary. And he wants to stop immigration and deport all of the illegal immigrants that are already here. So that would tighten the labor pool. That's inflationary. Seems like everything he wants to do is inflationary. Is he just not going to follow through on this stuff?
No, actually, after the 4 years of Trump, I actually take him at his word, literally. That's what he intends to do. Right, so if you look at expectations on Wall Street, matter of fact, look at the WIRP screen, Fed funds probabilities. market's pricing in 100 basis points of cuts over the next 5 meetings. Okay, if Donald Trump is elected, that's a big if, and if he
It's not a very big if.
Well, I don't want to go there.
The
Matt.
odds are strong.
Yeah, I agree, and I see that, and we're all adjusting our base case for 2025 as we speak. But if he gets in, and if he follows through on this, unemployment rate's going to fall. Wage prices are going to go up. The Fed's going to be worried about a wage price spiral, right? Then the Fed will reverse course and begin hiking rates. And there's where we get into what I think is the single biggest economic and financial risk of a potentially second Trump administration, the independence of the central bank. I'm not talking about personalities. Whether Powell is fired, stays, goes is immaterial. It's the instrumental independence of the Fed that's at risk.
I'm glad you mentioned that. Jason Furman, who was the head of the National Economic Council for Obama, right?
Yep.
He tweeted out that he has selected recently announced policies and ranked them in terms of how consequentially bad they would be. Number 1 is the 10% across the board tariffs. This is Furman's opinion, not mine. Number 2 is the $4.5 trillion of tax cuts. Number 3 is threatening independence of the Fed. I would have thought that'd be a little bit higher. Number 4 is permanent tax-free tips. I don't see why that matters. Nobody ever claims tips anyway. And then number 5 is the 5% cap on rent increases that Biden has floated.
Okay, so number 5, I just want to be on the record, that's not a good idea. It will make things worse. And I mean, not just on the supply side of, there won't be an incentive for builders to build homes. People will not want to move, and we'll have the same problem in the rental market we have in the home buying market. That's not a good move. But, I follow Jason. By the way, Jason Furman is an excellent economist, and I envy the people who get to take EC10 over at Harvard from him these days.
Oh, right. He's a professor at Harvard.
He's a professor at Harvard.
That's
right, and that course is absolutely fantastic. But the thing is, you know what? The people who follow him wrote back. They disagreed with him. It was the Fed independence that was number 1. I think Jason was taken a little bit aback by that.
Well, I think his premise is that it wouldn't be possible to threaten Fed independence the way Donald Trump seems to want to, but still, you've got to rank them in order of the actual threat.
I saw Liz Truss was at the GOP convention.
Oh,
yeah, they might want to be thinking about what a head of lettuce means. Because if they were to try to do something like that, we would begin talking about the bond vigilantes, whoever those guys are. By the way, I live in Austin, Texas these days. I've seen one of the guys from ZZ Top, and I'm like, that's what a bond vigilante is.
Sweet.
Right?
That's a great face to put to the bond
That's what a bond vigilante looks like. But they will be back quickly, and it will be painful if the GOP attempts to do that or do something more ridiculous, like devalue the dollar, right? Yeah.
So we got the 10-year Treasury at 4.16%.
Yeah.
Where's that going to be year-end, do you think?
Okay, so my year-end target was 4.2 with some downside risk. I still think that's, intact. I think that when the Fed gets to the point where it begins to telegraph it's cutting rates, probably right after the July 31st meeting, you begin to see the front end of the curve begin to move down. Because what we're going to be doing here is, this is a good thing, right? Is we want the price of money to be positive. We want a term premium that's positive on the yield curve, right? We're going to get a disinversion of the yield curve next year. Hey, guys, this is what's supposed to happen. This is what financial markets are supposed to look like pre-2000 and, pre-GFC, right? Yeah, we're going back to the future, and it's a good thing.
So we will have then, we will have had 2 years of inverted yield curve and no real recession.
Well, Matt, as you know, I'm a firm believer in that the yield curves predicted 11 of the last 3 recessions. I dropped that rule of thumb a long time ago. Don't get me wrong, we pay attention to it because it shows stresses and strains across the yield curve. Stresses and strains across financial markets, but it's not the predictor that it might have been, back in the 80s or 90s.
Back when Paul was at Duke.
That's right.
Back when Paul was skipping Cam's courses
to go play golf. So the golf course is right across the street.
How
from the
can you
business
resist?
School. I mean, exactly.
No
World
way.
class good.
Who was your professor that he's
Cam Harvey.
Cam Harvey.
Yeah.
So
Really?
Yeah.
Oh, I didn't know that. How cool.
So he's So he's out of the Chicago school guys. So the primary risk, it sounds like, from your perspective, is this Fed holds rates too high, too long.
Too high for too long, and of course, oil. Right. Those are the real 2 big risks. But I don't think that investors or firms have really priced in what friendshoring means, what the relocation of these supply chains means in terms of a permanently altered structure of pricing, both domestically and globally. That we're going to have higher inflation. We're going to have higher interest rates, right? And I do think that's going to be an ongoing issue, again, regardless of who wins the White House.
I want to get your take on the markets quickly. We only have a minute left, but as an economist, what do you think of the fact that Gina Martin Adams has written about the S&P 493, right? The companies that aren't the giant mega cap tech stocks have been in an earnings recession for 6 quarters. And they're finally going to start to post some growth. At least that's the hope. Do you watch earnings season?
Oh, very closely. We actually use the artificial tool on Bloomberg to go through and look at the key earnings that really are important to our firm. Look, no one likes the overconcentration of risk in the Mag 7. Mm-hmm. I'm happy now it's beginning to broaden out. That puts a smile on my face. Although I think that we generally are underestimating the positive productivity shock that artificial intelligence is going to bring to the U.S. and global economy. That too should begin to spill over as we're in the second phase of AI where we're past the euphoria. Right. Now, how are we going to use that, right?
Yep. So we'll get to that. That's the next big thing in this market. How do you use AI? Joe Bruce-Wallace, thanks for joining us. Appreciate that. Joe Bruce-Wallace, Chief Economist, RSM, joining us here in studio. With our news in New York City, here's Michael Barr.
Thank you, gentlemen. Top Democrats say the pressure from party leaders and friends will cause President Biden to leave the race as soon as this weekend. That's according to Axios. It comes as White House officials believe former House Speaker Nancy Pelosi backed Representative Adam Schiff's call for President Biden to withdraw from his re-election campaign. That's from a Reuters report citing a top White House source with direct knowledge of the matter. All of this comes as President Biden was diagnosed with COVID and had to cut his campaign trip short in Las Vegas. He is said to be self-isolating in Delaware. J.D. Vance mixed his personal history with a populist message as he accepted the vice presidential nomination at the Republican National Convention.
When I was in the 4th grade, a career politician by the name of Joe Biden supported NAFTA, a bad trade deal that sent countless good jobs to Mexico.
Bloomberg's Laura Davison has more from Milwaukee.
He and Donald Trump, he said, would not cater to Wall Street and instead focus on the working man. He, unspooled his personal history throughout the course of this speech. And Vance is only 39 years old, and he referenced the financial crisis, and he blamed what he called, quote, Wall Street barons for, the housing affordability crisis we have today of, the market crashing and then, builders being put out of work and then there being low supply. And he kind of creates this through line, also blaming illegal immigration for there being too much demand for housing.
Bloomberg's Laura Davison. Tonight, former President Trump will close out the convention with his address. Russian court officials say closing arguments in the espionage trial of U.S. journalist Evan Gershkovich will be held tomorrow as the proceedings picked up speed. The court says Gershkovich attended a trial session for a second day behind closed doors today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Another day of selling. A slight bounce off the bottom. Emphasis on slight for the S&P 500 index, but very close to session lows. Down 31 right now. 55.57 on that index. The S&P down 0.5%. The Dow now down 177. 41,025, a drop right now of 0.4%. NASDAQ lower by 0.9%. The Russell 2000 also lower, down by 0.4%. 10-year at 4.16% with a 2-year 4.43%. Gold up 0.3%, 24.66 the ounce. And West Texas Intermediate crude just about unchanged on the day, up 3 cents now, 82.88 a barrel. Stocks are struggling to gain traction as big tech failed to prop up the broader market. Weekly jobless claims, meanwhile, up again. And with that story, here's Bloomberg's Vinny Del Giudice.
There's evidence the party may be winding down. Initial jobless claims posted the largest weekly increase since early May, kicking the tally to the highest in almost a year, 243,000. Continuing claims, a proxy for the number of workers on unemployment, also increased, rising to the highest since 2021. The outlook is in doubt. The U.S. unemployment rate is up, reaching the highest level since 2021 in June. Vinny Del Giudice, Bloomberg Radio.
Shoppers spent $14.2 billion online during Amazon's 48-hour Prime Day sale. That is up 11% from a year ago, and in line with estimates, according to Adobe. Amazon lower now by 2.8%. Again, recapping, stocks are declining 55.55 right now on the S&P, down 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Matt Miller sitting in for Alex Seal today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Looking at the airline business, United Airlines, they said the third quarter profit will fall short of Wall Street's expectations as U.S. carriers slash ticket prices to lure domestic travelers, keeping even the industry's largest players from fully capitalizing on record summer travel. Let's bring in George Ferguson. He does this stuff for a living. He's a senior aerospace, defense, and airlines analyst from Bloomberg Intelligence. George, again, I haven't been on a plane in a long time that wasn't packed to the gills here. If the airlines can't make money now, when can they? What's happening in your industry?
Yeah, so I tell a lot of people, right, you can't confuse airplanes being full with profitability, right? Everything depends on the price paid by those folks flying. Really, the industry is just suffering from overcapacity, right? United confirmed that today. Delta told us the same thing earlier. We saw Alaska results come out today as well. Their load factors down, yields flat, load factors down, telling me they can't fill airplanes at the right price point. We need capacity to come out. Everybody's pointing to an inflection point in 3Q. Today United said that, they'd get down to maybe after mid-August, maybe 2-3% growth in capacity. I think that's just still a too high level of capacity growth, right? This isn't an economy that probably year over year grew about 1%. I think that number ought to be tied much closer to GDP growth. You just talked about in the update about unemployment rising, right? So the U.S. economy appears to be slowing a bit. So I think those things are working against the airlines right now. A bunch of capacity has to come out, I think, to get back to pricing power, and that's what's needed to get profitability going.
So how does that happen? I mean, do the airlines themselves pull capacity out? Don't they have competition in this market? Don't we have regulators to ensure that?
Yeah, so how does it happen? We're starting to see some of it happen. Today, Alaska announced that they were going to add more premium seating to their
Can I just pause here for a fun fact, sure. George?
Sure.
For a long time, Paul Sweeney thought that the Eskimo on the Alaska Airlines tail was actually a picture of Jerry Garcia.
I did.
Yeah, actually, he's told me that. And
I love it.
I'm not sure what that says about Paul Sweeney.
Exactly.
I mean, what an airline to put a picture of Jerry Garcia on the tail.
They're so cool.
All right, so sorry, go ahead.
So we're starting to see capacity come out with these announcements like Alaska, where they said, hey, we're going to we're going to add more premium seating, which usually means a bit less capacity in the marketplace. Frontier's going to block your middle seat so you can get a premium seat out of Frontier. That obviously brings some capacity out. But what you really need is you need airlines to start parking airplanes. And I think that's hard too, right? So United, Delta, all jazzed up about this inflection point. But look, I would note that there's a lot of very fast-growing, low-cost airlines in the U.S., Frontier, Spirit, even JetBlue, right? They lease a lot of airplanes. You fly airplanes you lease because you got to pay that lease payment no matter what, right? So I think it gets difficult here, and it takes a little while to get capacity out. Maybe next summer, I don't know.
I was talking with the CEO of JSX the other day on my new television program. It's called Bloomberg Open Interest. Tune in weekdays 9 to 11. And they fly fascinating routes. For example, they'll fly from the Westchester Airport to the Naples Airport, right? Or some airport outside of LA into Palm Beach. So are we going to see more of these upstarts, George?
Well, so we always do in the industry, right? So the beautiful thing about this industry is when people sell airplanes, someone buys them cheap and starts flying routes like that. And there's always someone that wants to come to this industry, right? It's got just a heavy allure. Everybody wants to own an airline. That becomes one of the challenges too, I think, in sort of making money in this industry. But the big folks, they'd love to have more maybe the ultra low cost point at those smaller airports, but you just don't get the demand out of those smaller airports, to really fill big airplanes. And so that becomes part of the challenge. I think right now, one of the bigger parts of the challenge is definitely business is we heard United say 100% of what it was in 2019. Obviously, that gives you sort of no growth since the pandemic. They're saying the share of revenue in the cabin is lower. That's always at a really nice price point, and business likes to go different places than leisure does, so it diversifies your routes to a certain degree, but you need enough of it to go to those other destinations. So business just isn't back enough, I think, to let the big full-service carriers move into maybe some smaller-size airplanes, more diversified destinations, and get competition off those sort of heavy volume routes. And I think that's part of the problem too.
Hey, Matt, once a year, George Ferguson goes on this boondoggle with all these other airline people. They go to either Paris one year, and then the next year it's London for these air shows where the big airlines and the aerospace companies buy and sell aircraft.
We see Guy Johnson.
Yeah, it's a total scam. But anyway, George is going next week to Farnborough in England. George, what do you expect there? Are we going to see some big orders? What's Boeing going to do? Do they have to go do like a mea culpa tour in Farnborough?
I think they are. I think they'll be holding customers' hands, talking to them about all their quality changes, how it's going to make a better airplane, and sort of giving them an update on when they're going to get deliveries. I don't see this being a big sales show. It is a sales show, but I don't see sort of Airbus and Boeing walking out the door with bags and bags of orders if you put them in bags. I just kind of think it's going to be pretty muted because of both those supply chain challenges and U.S. Airlines earnings season showing us that maybe too much capacity in the U.S. We heard Lufthansa warn already. Maybe there's a little too much capacity in Europe. I think people really expected a much harder bounce back from the pandemic. Again, still missing some of that business travel, economy slowing, just not there. So I think it'll be a bit of a muted sales show at the show.
All right, George, thanks so much for joining us. Appreciate it. As always, George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. But always at those air shows, you see these monster deals. Emirates Airlines buying, 57.
It's true.
Airbus
and they're often a surprise. So, tough to predict. But I feel like both of the members of our airplane-making duopoly have already got order backlogs going out years. Right. So what difference does it make?
Yeah, what difference does it make? And Boeing's got its problems. I mean, George talks about the builds. They're building like 35, 36 737s a month. So that needs to be well north of 40 for them to start getting into some cash flow there. Keep an eye on that. S&P 500 off about 0.7% here, and the NASDAQ off 1.1%. 10-year Treasury 4.16%, up just about a basis point here. We're going to have more coming up. This is Bloomberg. Good morning.
Your company news headlines on Bloomberg Radio.
SunPower shares are plunging after the solar company told dealers it will no longer support new installations and is halting shipments. The company has lost more than half its market value this year as it contends with a decline in the rooftop solar industry as well as internal issues. SunPower right now down by 17.5%. After the close of trading, all about Netflix. On average, Wall Street analysts are forecasting second quarter subscriber additions of about 4.9 million. That would follow estimate trouncing additions of more than 9 million users in the first quarter. Netflix shares trading lower ahead of its report. Netflix down now by 1.1%. Ford is investing $3 billion to build its highly profitable Super Duty F-Series pickup trucks at a plant in Ontario, Canada. And with more on the story, here's Bloomberg's Kimberly Adams.
Charlie, that plant had been earmarked to make an electric sport utility vehicle that the company previously delayed by 2 years. The automaker will open the plant in 2026 and will employ 1,800 workers making large work trucks. The move adds 100,000 units worth of Super Duty production, and Ford is on pace to make about 400,000 of the trucks a year. It underscores the changing market after slowing growth in EV demand led Ford to put off a 3-row plug-in model until 2027. Ford reports earnings next week. Charlie?
And that's Bloomberg's Kimberly Adams reporting Ford shares are higher today on a down day for the rest of the market. We got Ford up now by about 2%. Taiwan Semiconductor now slumping 2.6%. It did lift projections for 2024 revenue growth after quarterly results beat estimates. And those are some of our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we got Matt Miller sitting in for Alex Steele today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Bloomberg Intelligence, 475 analysts covering 2,000 companies, 130 industries on a global scale. That's the investment research that BI brings to you, and we tap into them during this Bloomberg Intelligence program. We also go to Michael Barr in New York City for our World in National.
Thank you very much, Paul, Matthew, and Charles. It is the fourth and final day of the Republican National Convention in Milwaukee. Day 3 was about Vice Presidential candidate J.D. Vance, the U.S. Senator from Ohio. This morning, Vance headlined the Faith and Freedom Coalition's God and Country Breakfast. He talked about the former president and the assassination attempt against him last weekend.
It's just such an honor to be on the ticket with him. It's such an honor to stand with him after what happened last Saturday. I'm sure that you've heard a lot of people say this, but you will never be able to convince me that that last second turn of a head was anything other than a miracle.
Former President Donald Trump will wrap up the convention with a speech tonight. Meanwhile, with public and private Democratic concerns over Joe Biden's health mounting, the president just tested positive for COVID. Bloomberg's Ed Baxter has more.
The president doesn't seem to be able to catch a break, but the White House has released a statement saying he apparently has caught COVID-19, says he has mild symptoms, but is going back to Delaware to self-isolate. So it has taken him off the trail and removed the hope of counter-programming to the Republican convention. And it comes with several news agencies saying that party leadership is warned about the risk of his candidacy. The White House has issued a statement saying Biden is the nominee of the party and plans to win. Ed Baxter, Bloomberg Radio.
New Jersey Democrat Bob Menendez is telling allies that he will resign from the U.S. Senate. That's according to NBC. According to people familiar with conversations, Menendez was convicted Tuesday in a New York court of all 16 counts, including bribery and charges of being a foreign agent. Senate Majority Leader Chuck Schumer and fellow New Jersey Senator Cory Booker have reportedly called for Menendez to step down. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul and Matt.
All right, Michael Barr, thank you so much. We appreciate it. Matt, here's a story I know you're fascinated with. Hedge fund billionaire Ken Griffin paid Sotheby's $44.6 million for a nearly complete Stegosaurus skeleton on Wednesday, the most ever paid for a fossil at auction. Is that a case of just too much cash in the pocket?
I'm not sure. I haven't been in the market for dinosaur skeletons.
Nope.
So I don't know. I do know that for that amount of money, you could get a Ferrari 250 GTO.
$44 million?
I think the last GTO sold for about $48 million at auction in Monterey. So, and to me, that's always what I benchmark in terms of really expensive things, right? A GTO is one of the most coveted possessions you could have. I guess behind a dinosaur Stegosaurus skeleton. The interesting thing, I think, is that he's able to spend this much money very easily, right? He has $42 billion. It was 9 times what the auctioneer thought it was going to sell for. They thought it was going to go for $6 million. And $45 million is interesting because that's what Elon Musk is giving to a Trump PAC every single month.
Nice.
We haven't heard yet from Ken Griffin. We know he's met with Donald Trump and some of his allies, but we haven't heard yet from Ken Griffin that he's going to give any money to this PAC. We've started to hear more and more people in Silicon Valley that are giving money to the Trump PAC, including Andreessen and Horowitz, who hadn't previously given money to Donald Trump. So he's getting more big money supporters. And my question is Ken Griffin going to add his name to that list?
He said he was going to wait to see the vice president choice. So now that we've seen Mr. Vance selected, maybe that'll get him off the sidelines. But here in this case, Griffin, the 55-year-old founder and chief executive of Citadel, aims to lend Apex, which is the name of this dinosaur, to a museum in the U.S., and that's according to a person close to the collector. So at least everybody else can get to see it in this museum. Balance of Power with Joe Matthew. Kaylee Lyons is next from the Republican National in Milwaukee. Matt Miller, thank you so much for sitting in for Alex Steele. Balance of Power right now.
Live from the Republican National Convention in Milwaukee, Wisconsin, to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons, and it is the final day of the RNC. We are awaiting night 4 and the acceptance speech of former President Donald Trump. The first time we will hear him speak as the official nominee of the Republican Party, and of course the first time he will be addressing the nation on camera, at least, since surviving an assassination attempt last weekend.
Pretty remarkable, because we've seen him every day of this convention, which is somewhat unusual in the traditional world of politics, but nothing is traditional with Donald Trump. He's been in the hall getting a round of applause, and we've even seen scores of people wearing bandages on their ears in solidarity with the former president, Kaylee. But you were in the room last night for J.D. Vance. It's a big night out. Very well received in the room.
Oh, absolutely. The energy was pretty incredible. There were chants and cheers quite often in his speech that really focused a lot on who J.D. Vance is, at least in terms of what he thinks about policy, populism, the working man. Key themes in his remarks last night as he officially accepted the nomination as Trump's vice presidential candidate. Joining us now with more, Bloomberg's Laura Davison and Stephanie Lai, who are with us now. So it's interesting to consider here that we heard J.D. Vance last night, not necessarily being an attack dog, but clearly speaking to a very specific group of voters. He's calling out the working man in specific states, which he said by name multiple times: Michigan, Wisconsin, Pennsylvania. Is J.D. Vance on this ticket to expand the base, or just speak directly to that and leave the expansion to others, Laura?
Well, because of the Electoral College, Trump doesn't necessarily need to expand the base if he can win in these blue wall states, Michigan, Pennsylvania, and Wisconsin. And that is where Vance, he spent all of his time talking to those people. The Biden team has signaled for months that their path to success is through those states. Trump has already, been polling very well in some of those southern states, Arizona, Georgia. So if he is able to win just 1 or 2 of those, it's game over for Biden. Of course, it's also important to remember the backdrop of what's happening here, in that we started the week with, it looking like Biden would stay in the race after the assassination attempt against Trump on Saturday. The winds have totally shifted on that front. So this is a very live ball on sort of what Vance could bring to the ticket and what the campaign looks like even in 2 days from now.
Well, let's bring our viewers and listeners into the room. J.D. Vance from last night.
Wall Street barons crashed the economy, and American builders went out of business. As tradesmen scrambled for jobs, houses stopped being built. The lack of good jobs, of course, led to stagnant wages. We're done, ladies and gentlemen, catering to Wall Street. We'll commit to the working man.
So there you have it, Stephanie. The Republican Party is the populist economic party now. This is the platform.
This is something that we've been hearing from folks for the last year. And in fact, this really does feel like a key realignment in the Republican Party. A lot of the messaging that they've put out, and something that Vance does particularly well at, is mentioning that, the Republican Party can be a very diverse party. It doesn't matter what race you are, what economic class you are. As long as you believe in their American first agenda, they will welcome you.
It's really something, though, Kaylee. You were there last night to hear Donald Trump Jr. talk about the fact that he was friends, this kid from Trump Tower, this kid from Appalachia. How do you strike themes of economic populism when you're a billionaire?
Well, but that's what they've been trying to do with Trump all along, right? Saying that, yes, this big real estate developer from New York was able to tap into something within the American people that Joe Biden or previous Democrats were not able to do. And also makes me question what tone we're likely to hear from Donald Trump himself tonight. Of course, we've heard in the aftermath of what happened in Pennsylvania last weekend, he ripped up what was supposed to be, in his words, a humdinger of a speech. He wants to focus more on unity. But if he speaks for an hour and a half tonight, Stephanie, are we going to be able to stay on that unity message for the duration?
It's always very hard to tell with Donald Trump. You know, he has prepared remarks on his teleprompter, and oftentimes, you know, we'll get a copy in advance to see what he'll say. And more often than not, he'll sway from time to time. But, you know, given the fact that this is going to be live casted by many news stations, there is a good chance that he'll just stick to the script. But, you know, we never know.
We never know. But this is the night that he has been looking forward to, I guess you could say, since January 6th. The mindset that Donald Trump is going to bring to the podium tonight is a real question after what happened last weekend. Is he a changed man? We keep hearing references to divine intervention in the room. Is that what we'll hear?
It's almost certainly. He's been mentioning God a lot more. There's been, you know, lots of references from people talking about, you know, that God saved him. You know, just think about a couple months ago, Nikki Haley was talking about how, you know, this primary is akin to more of a coronation. Now it might seem that it's almost, you know, sort of a divine intervention or, you know, sort of some crowning and ascendancy of the gods. This is, you know, going to be really the high point for Trump. You know, he has worked up to this. His previous two conventions were racked by either the pandemic or by internal party squabbles. He now has everyone rowing with him and has even appointed his next heir that is really a person who came into politics in the mold of Donald Trump.
Well, and J.D. Vance also made a point yesterday to point out that he has been alive for fewer years than Joe Biden has been in Washington. J.D. Vance very much went after Biden at multiple times during the speech, and I wonder to what extent Trump will as well, given the developments around the Biden candidacy, Laura, we have seen in just the last 24 hours. First, Adam Schiff, the congressman from California, calling him to drop out. Then a COVID-19 positive test that has sidelined him. Now he's isolating in Delaware. Then reports from outlets, including ABC, that Chuck Schumer has essentially told him that he needs to leave the race. Hakeem Jeffries, according to the Washington Post, told him that he's imperiling Democrats' hopes of holding on to either chamber of commerce. And CNN reporting Nancy Pelosi has told him polling suggests that he can't win. So is Trump about to deliver his big speech? If he's peaking now, is this the crater for Joe Biden's reelection campaign?
It's not looking great. I mean, if Donald Trump is having, you know, the luckiest week of his life, he survives an assassination attempt, his legal troubles all but go away, he's, you know, giving his big speech, this has got to be Joe Biden's unluckiest week of his life, where everything around him seems to be crumbling, and now it's not as much of a question of will he step down, but, you know, what are the next steps that need to happen, and when will this announcement come?
If somebody wrote the book, nobody would believe it. It would be, you know, unrealistic fiction, but here we are living this. This means also Joe Biden's off the trail for days and days, canceling interviews. What do they do with this time that he has to think?
Well, I think for Democrats, it's really about getting the party back together and figuring out what message do they send to voters, because a lot of this right now doesn't necessarily look good on the party. And so they can spend this time really focusing on, you know, recalibrating what their message will be. Now that they have J.D. Vance on this ticket, they can also start attacking, you know, whatever stances that he's had in the past to try to sway voters. You know, he's quite a firebrand politician, and so they can pull from a lot of his previous statements and try to make the case.
Yeah, sure. Really great to have both of you with us. Good luck on your reporting this last day of the convention. Laura Davison and Stephanie Lai with us on Balance of Power here on Bloomberg. Let's get inside the hall right now. Bloomberg's own Tyler Kendall joins us on this day 4 of the Republican National Convention from Milwaukee. How's it look, Tyler?
Yeah, hey, Joe. Well, as you've been talking about, when former President Trump takes the stage tonight, he will officially accept the Republican nomination. And if we look at some of the speeches over the past few days, it might give us some clues to what he's going to focus on. And you've mentioned Senator J.D. Vance in his speech last night. He really used it to reach out to voters in some key battleground states. That includes Michigan, Wisconsin, Pennsylvania, all states that President Biden won in 2020. And I want you to listen to this one bite where he is naming these states specifically and how he tailored his message not just to voters but to some specific workers and industries.
It's about all of us, and it's about who we're fighting for. It's about the auto worker in Michigan wondering why out-of-touch politicians are destroying their jobs. It's about the factory worker in Wisconsin who makes things with their hands and is proud of American craftsmanship.
Now, notably, a new Emerson College poll out today shows former President Trump leading President Biden in 7 key battleground states. Those include the 3 that I mentioned before. So it's going to be interesting to see how the Trump campaign really looks to impact and reach these voters in these blue state walls. Now, of course, we also have learned that former President Trump did rewrite his speech after that attempted assassination over the weekend. He said that he rewrote it to include a more message focused on unity. So we're going to have to see how that all plays out. Of course, Joe and Kaylee will be watching to see how he targets President Biden as all this new reporting comes out that more senior level Democrats within the party are urging him to step down, and how he threads that needle between his criticism of President Biden, but also Vice President Kamala Harris.
All right, Bloomberg's Tyler Kendall, thank you so much. And as Tyler mentions the building pressure on President Biden, I would just point out the headline just crossing the Bloomberg terminal from the Washington Post that says Obama, the former President Barack Obama, is telling allies that Biden needs to reconsider his campaign. The pressure is continuing to grow on the Democrats, Joe, as the Republicans seem quite unified here in Milwaukee.
The walls are closing in, or I guess the other cliche we would reach for is the image on Bloomberg Daybreak this morning of Joe Biden sitting in a chair painted into a corner. These couple of days where he's going to be recovering from COVID will be key. This is a remarkable moment that we come together here in American politics.
It has just been an incredible sequence of events the last 4 days, as this is day 4 of the RNC and the convention here preparing for Donald Trump's speech tonight. Again, the first time we will hear him addressing the nation since that attempted assassination in Pennsylvania last weekend. Joining us now for more on all of this is Senator James Lankford, who is here with us in Milwaukee. So, Senator, as we think about the fact that this RNC is happening against a backdrop of what was a terrifying and tragic event for the country last weekend, it has raised a lot of questions about what exactly happened last weekend and what needs to happen going forward. And you were among a group of your colleagues last night that spoke directly to the director of the Secret Service, Kimberly Cheadle. As we've seen, it got a bit contentious as things move forward. You yourself weren't necessarily engaging in the behavior of others like Senator Marsha Blackburn. But did you learn anything from her? Are you getting answers to the questions you have?
So I think the frustration the 4 of us had, it was Marsha Blackburn, John Barrasso, Kevin Kramer, and myself that had a moment to be able to visit with her in her suite to say, we just had a phone call with you 4 hours before. We were given 5 questions among 100 senators. There are a lot of unanswered questions, and our issue was we need answers to questions. I serve on the Homeland Security Committee. We're looking for time with her directly, with some of her leadership, and the questions are getting larger rather than smaller. And the initial questions were, why wasn't that roof covered? Why is there a roof clearly within the line of sight that no one was covering? The second big question that's coming out now is 15 minutes before President Trump actually took to the stage, there was already a conversation between local law enforcement and Secret Service that there's a suspicious person with a rangefinder that they are identifying, that they're trying to be able to find, that people had pointed out. There was already this sense and this flurry around that location to say there's someone here that looks dangerous. And Secret Service let him go on stage anyway. They didn't say pause for 10 minutes until we can find this guy. They just let everything move forward while they were still searching for someone they saw as a threat. That's a very obvious question to say, why didn't they just pause everything until they found a person that they'd already called as suspicious?
You're painting a picture of multiple failures here. Like they say, it takes, 9 things to go wrong for an airplane to crash. It sounds like we had a lot of them, and there could be more coming. I don't know if you want her to step down, if you've made that clear now, but if she doesn't quit, to what extent can Congress, can the Senate move her out of that job?
Well, the House will have hearings. She's already agreed to that. Yep. Homeland Security is pushing to obviously have hearings as well. This is a good thing to be able to do to get this information out. It does twofold. One, gets the facts out to the American people. One, it also pushes down the conspiracy theories out there that are not factual. Right. Both those things need to get out, but people need to be held to account. The question is, there was leadership on site at that location that could have made a call to be able to protect the president, and this gentleman that was murdered and others that were injured, that all could have been prevented. So the question is, who did not make the call? What accountability is there? The 3 levels that they have was Secret Service one level, federal law enforcement the next, local law enforcement at the next level. There was communication there that was coming back to Secret Service, and Secret Service wasn't communicating back in a level. We need to know more about that. And yes, I do think the director is going to have to leave. She's going to have to resign on this. There will be real accountability. This is the ultimate mission for the Secret Service, is to be able to protect the president. And they were an inch away at that point from having a catastrophic failure for that, and still the death of one individual in the crowd.
It's absolutely unbelievable. I'd like to ask as well about another Homeland Security issue when it comes to the border, something we have heard a lot about
I've worked on a little bit.
arriving in Milwaukee. And yes, indeed, sir, that you have. And we've heard, in fact, from some of your colleagues, like Senator Haggerty, who was here with us in the studio just a few days ago, suggesting that the deal that you had worked hard on, that the White House had agreed to, was never serious in the first place. Is anyone really still engaging in the serious conversation that you yourself tried so hard to engage in for months?
Yeah, I am still working on this. I'm going to continue to be able to work on it. I have the unique position. I serve on the Intelligence Committee and Homeland Security Committee, so I have access to a lot of classified information to be able to see what's coming at us. And 2 years ago, there was a huge shift. There were fewer and fewer people from the Western Hemisphere, more people from China, Russia, West Africa, Pakistan, places that we don't normally get folks in, and it's criminal organizations internationally that have now become travel agents to be able to move people in. It was pretty obvious what was going to happen. They're going to start moving people in, and then they're going to move their people in. 2 months ago, we had 8 ISIS-affiliated individuals that were picked up in the United States and then deported from there. Why were they here in the first place? Because this facilitation network is now in place. So for me, I'm going to work with anyone who's willing to actually stop what Joe Biden is doing to the country right now. And if we could get Democrats together in the Senate to say we can change the definition for asylum, we can make this stop, I'm going to do it. And quite frankly, we had a young lady in Houston that was brutally raped and murdered just a month ago that could have been prevented if we had actually shut the border down during that time in February. So there are things Joe Biden can do right now. He's had authority to be able to do. And
He signed a few executive orders.
He has signed a few executive orders. They've slowed it, but they've also redefined the numbers as they're coming across. Everybody's talking about, well, the numbers are way down. Actually, what they've done is they've now defined if you come to a port of entry, they're not listing that in the main numbers. So they've changed the definition more than changed the actual quantity of people coming across. So that's one big challenge, is to actually push back on media that's saying, oh, the numbers have dropped, when they actually haven't dropped. They've just changed the way that they're counting it. There are executive actions that can be done. There's great frustration among Republicans to say, do what you can already do. But I'm telling you, if we don't change the way we define asylum, none of this gets better. So yes, it was a very serious proposal to be able to try to get us to resolution. In the United States Senate, you've got to have 60 people agree to move something. That means Republicans and Democrats have got to sit down and talk about hard issues and make adult conversations into a dialogue about how do we solve it.
Well, I don't know where you get your patience from, Senator, but as I see the Republican Party platform, number one, the first item, seal the border and stop the migrant invasion, is the language. Does part of you want to walk in that room and say, I led you to water and you didn't want to drink? How does this get easier?
It doesn't get easier in the mindset. I would tell you, if President Trump is elected, or I can just go back and look at the 4 years previous, very different than what we've had the last 3.5 years. We've had more people illegally cross our southern border in the past 3.5 years than we had in the previous 12 years combined. And my statement to the Biden administration is, if you don't want to do the Trump policies, do the Obama policies. Do something. President Obama was a fraction of the number of people illegally crossing that we have under President Biden. So there are things that they could do, they should do right now, they're still choosing not to be able to do. But whatever, and whoever is elected in this November, and I hope it's President Trump, but whoever is elected in this November, they're still going to have an issue with the legal definition of asylum. What we had in that bill was doubling the number of deportation flights, dramatically increasing the number of Border Patrol, number of ICE agents, building more wall. We had things that every president's going to want, including changing this very loose definition of asylum that has been a pain to every president.
All right, Senator, it's great to have you with us here in Milwaukee. Thank you so much for your time. It's Republican Senator James Lankford of Oklahoma joining us here on Bloomberg TV and radio. We'll have more with the House Intelligence Committee Chair Mike Turner just ahead on Bloomberg.
This is Balance of Power on Bloomberg TV and radio, live from Milwaukee at the Republican National Convention. I'm Joe Matthew, alongside Kaylee Lyons. We thank you for joining us. As we dig in for day 4, Kaylee, Donald Trump tonight. This is the moment that he's been waiting for.
The first time he will address the country as the Republican nominee officially, once again, as he accepts that nomination. And of course, the first time we will hear from him in a forum like this since he survived an assassination attempt in Pennsylvania last weekend.
Yeah, that's right. Reports claim the U.S. had information about a plot from Iran, as we've told you, against Donald Trump. Iran denying those claims, calling them malicious, which may not be a surprise, but that is the reason, reportedly, why security was enhanced the day that this happened. And joining us now to talk about this, among other issues at this RNC, is Congressman Mike Turner, who chairs the House Permanent Select Committee on Intelligence. Mr. Chairman, welcome back to Bloomberg TV and radio. It's great to see you here in Milwaukee, of all places. I hope the convention's going well for you, because we're talking about a lot of serious issues around this, including this matter. And I'd like to get your thoughts on Kimberly Cheadle and the questions that you have for the agency. But as the chairman of the Intelligence Committee, what can you tell us about this threat from Iran?
Sure. Well, you're absolutely right about the convention. The energy level is extraordinary. The convention is going very well. The people that are here are just so moved by Donald Trump's life having been saved, and really the message that he's got coming out of this convention of reversing the Biden administration's policies on the border, national security, and of course, the economic. With respect to the director for the Secret Service, obviously I have, other members of Congress have, the Speaker has called for her resignation. I think at this point it's important for President Biden to stand up. She needs fired. I mean, it's clear the agency is not working. It's inexcusable and outrageous, the failures that occurred. It could have resulted in the death of Donald Trump. They clearly were not adequately protecting him that day. You had Senator Langford here who said they knew there was a threat before they let him on the stage. And as we all know, because we witnessed it, they didn't take out the threat. They didn't shoot the shooter until he had already shot Donald Trump, which could have been a fatal shot. And with respect to this Iran threat, this has been publicly known that Iran was targeting former President Donald Trump and members of his cabinet in retaliation for the killing of Soleimani. Yesterday, when we received our briefing, I asked Director Wray, this has been a known, continuous, and existing threat. The new information that we have doesn't really give us any greater heightened threat. It's just an acknowledgement of the fact that the threat is continuing, and shouldn't have the security that was around Donald Trump already have baked in that level of threat. And he acknowledged, he said, yes, absolutely. And he himself, you could tell in his tone, he's surprised that the Secret Service was not responding, recognizing that there was a state actor threat, in addition to just the general threats that were out there to a presidential candidate.
Well, we've also heard from Director Wray this notion that we could see an increased risk of terror, whether lone wolf or otherwise, something that at the time he said it and since I think we've all found quite concerning. Is there a sense that what we saw take place in Pennsylvania on Saturday is something we could continually see as we move forward through this election cycle? Just how heightened is the security risk for even everyday Americans right now?
Sure, absolutely. You made an excellent point. As we know, Director Wray has gone around openly saying that the lights are flashing red, that we're the highest level of a threat for a potential terrorist attack since 9/11. And he specifically cites the border, that there have been people have been able to cross the border as a result of the Biden administration's policies that have affiliations with terrorist groups and organizations and intend to do Americans harm. That, as you just said, should also be factored into the protection that happens at these rallies, because it's not just the president, it's also the people attending. So that it is an increased threat. And it is one, I think, that also goes to the condemnation of the Biden policies for the border, that individuals have been allowed to come into the country that could perpetrate a terrorist attack.
As you arrive at the Capitol to work every day, security is a factor. With these recent developments, do members of Congress, once and for all, need to be provided a security detail?
Well, I don't know. I mean, several members do have security
based
details.
On threat level, but
right.
Shouldn't that be across the board at this point, Mr. Chairman?
I think that we're okay right now, that when we're in secure places, there is security provided. I think the Capitol is secure, and I think that way we know that there's a sufficient protection.
Well, the Capitol certainly, I would imagine, is going to have even increased security next week because you're expecting a visit from Prime Minister Benjamin Netanyahu of Israel. I feel like that has gotten lost in the shuffle of the developments of recent weeks as it comes to the presidential race, but it's a high-profile visit at a time where there is still a hot war raging in the Middle East. What does the latest intelligence suggest about the trajectory with which that war is moving, as we keep hearing what feel like head fakes about progress towards some kind of ceasefire agreement? Based off what you've heard, what are you expecting Netanyahu will say to you and your colleagues next week?
Well, I think he'll certainly assert the need for Israel to defend itself and the right for Israel to exist, and remind us of the horrendous terrorist attacks and the killing of innocent people and the taking of hostages that occurred, on October 7th, and that even before that, Israel was living under a constant barrage of missile attacks that the Iron Dome would respond to, but nevertheless still resulted in loss of life and property in Israel as a result of these thousands of missiles that were being sent. Part of their entering into Gaza and trying to dismantle Hamas is, of course, dismantling that missile system, their capabilities to launch into Israel. I think his message is going to be very important because he's also going to be hearing the messages back of both support, but that this needs to be resolved. I know Director Burns of the CIA has been doing shuttle diplomacy, attempting to get a deal with Hamas where we could have a period of ceasefire where the hostages could be released. Director Burns has been doing an excellent job in those negotiations.
Will Israel go to war with Hezbollah?
Clearly, again, Israel needs to be able to defend themselves, and there are again thousands of missiles that are in southern Lebanon
to keep Israel
right. And so there's that balance of how do you make certain that your adversary's capabilities can't be used to kill your population.
Mm-hmm. So that's one live war that's happening in the world. There's another happening on the European continent, and the vice presidential nominee, who we all heard speak last night, is a bit skeptical of the U.S. continuing to provide funding for Ukraine. Does the selection of J.D. Vance concern you when you think about the future trajectory of what Russia could do if victorious in Ukraine? Is there something that Senator Vance is missing here?
Well, if you listen to Donald Trump's campaign, and certainly the Trump family, why they say that J.D. Vance was picked because of his compelling story, which is an American story of success, and I think their attractiveness to that is really resounding, I think, with American people. I haven't seen many vice presidents that have a significant impact on foreign policy. And Donald Trump has been very clear that his effort is not to abandon Ukraine, but to end this war. And I think that's what we all want.
We've been talking a lot about Joe Biden and his not only health now as he's come down with COVID, but his mental acuity. You see all the reports that we see. It looks like he's lost the Hill, the Democratic leadership on the Hill. Is there a security component to this? As the chairman of the Intelligence Committee, do you worry about his state of mind and whether that presents a security problem for the United States? I'm sure I'll get lots of tweets about this, but is that a real question?
Absolutely, and this is what I've described it as, is that we really have this vacuum in the administration of decision-making, indecisiveness that has occurred. There are 5 to 10 major policy issues that are gumped up in the Oval Office for which we can't get decisions. Now, I think his national security team, which is a very good national security team, has sort of dissolved into a NATO-style committee where if they all agree, we get great policies. But if they don't agree, then action shuts down because we have indecisiveness coming from the commander-in-chief. And I think that's our greatest threat. If they walk into the Oval Office today and tell him, Mr. President, we have a crisis and we need you to make a decision, I'm not confident he can.
Are you confident that Kamala Harris could?
Well, I would be not confident as to the decisions she makes. If she does make it, if she is presented with a decision to make and makes one, I think her policies would be much more dangerous than what we're seeing even out of this administration on foreign policy.
Yeah, I don't want to bring it too far down the road on hypotheticals, but if he actually leaves the race here, does that change the calculus for Republicans in this election cycle for Donald Trump or down ballot races?
Well, I don't think that, I mean, the Democratic Party is for an open border. They're for this out-of-control spending that has resulted in this high inflation.
So it's 6
and they've embraced, right, and they've embraced the abrupt withdrawal from Afghanistan that was resulted in, just total destabilization in the area, and have supported the Biden administration's restrictions that have been placed on President Zelensky in Ukraine that have resulted in this stasis, this stalemate, this unbelievable, loss of life that's continuing to occur on Ukraine instead of allowing them to win. So I don't think, regardless of who they pick, that you're going to see a big policy shift, and that's what it would take, I think, for the American public. The American public want that border closed. They know, as Director Wray has said, they're less safe today because of what the Biden administration and the Democratic Party has done with the border.
Well, we heard about the border from Senator Vance in his acceptance speech last night, in part talking about the fentanyl that is crossing over. And he also drew a line not just to the border issue, but to the issue of China, something he spoke about quite passionately on multiple occasions during the speech. Let's just remind ourselves of a bit of what the vice presidential nominee had to say.
Now, thanks to these policies that Biden and other out-of-touch politicians in Washington gave us, our country was flooded with cheap Chinese goods, with cheap foreign labor, and in the decades to come, deadly Chinese fentanyl. Joe Biden screwed up, and my community paid the price.
Of course, Sir Senator Vance, Donald Trump have spoken out in favor of putting higher tariffs on goods coming from China. There's been a lot of conversation as to whether or not we're going down a road that could ultimately lead to a decoupling of our economies. How does the economics factor into the actual relationship and change the theater when we're thinking about the Pacific? If we're starting to cut China off more economically, does that actually make the world more dangerous because they may be less likely to cooperate with us?
Well, I think what you're seeing is, we already have a global, trade economy that I think has brought greater prosperity around the globe and even to the United States. But we see that we have gone too far. The vulnerabilities that were evident during COVID in our supply chain and our manufacturing, where we weren't making the things here that we need in order to be able to survive. And then the second is we have a great workforce that is underutilized, and it's underutilized because we've allowed jobs to leave that ought to be in the United States. And, Senator Vance is actually, saying words that in Ohio are incredibly important. We've seen so many manufacturing jobs that have left that need to be brought back to the United States, and that's going to be an issue and certainly is a topic for this administration.
You're going to be in the hall tonight for Donald Trump's speech, I suspect?
Yes.
We just got the speakers lineup here. Dana White, Hulk Hogan, what's the message?
I think this, on that unity message, this really is the all-American team, right?
Wrestling leagues are uniting here?
Everybody's coming together, and I think they're coming together because they recognize that the Biden policy has been destructive to the United States, and the policies that Trump pursued in his first term that he's going to pursue in his second term will right that.
Is there anything you haven't heard from the speakers thus far, J.D. Vance or otherwise, that Donald Trump needs to address before this convention is over this evening?
You mean
in terms of policy? Obviously, we had foreign policy night last night. We've had an economic policy night as well. But the American people are voting on a number of different issues, knowing that, for example, on the Republican platform that was officially adopted, there was no federal abortion ban. Are we speaking to all of America when we're talking about unity here, or is there more that could be done to reach out to groups of voters that may not be all in on Donald Trump as the delegates assembled here are?
Well, I think what's also important in this is it's not just a document that's the platform for the Republican Party. It's that Donald Trump has a record. I mean, one of the things that you're going to hear tonight is that he's going to say not just this is what I think we ought to do to make America stronger again, to bring the economy back, to close the border and make certain that we're a safe country. He's going to be able to say, I was doing it. When Biden came in, it's not just that Biden won the election, it's that Biden reversed the policies, and now we have the detriment conditions as a result of what Biden did.
All right, Chairman, it was great to have you here in Milwaukee. Thank you so much
for
being so generous with your time. That is the chair of the House Intelligence Committee, Congressman Mike Turner of Ohio. We appreciate it. Now, we do want to take a quick check on the markets as the major indices once again are selling off after starting the day in positive territory. Let's get the latest with Bloomberg's Abigail Doolittle in New York. Abigail?
Well, Kayla, yeah, it's not looking very good for stocks at this point. We do have the S&P 500, Dow, and NASDAQ all solidly lower. In fact, the NASDAQ 100 looking at its worst 2 days of the year, right now down about 0.7%. That's true, too, for the other two indexes. And we have something today that we did not have yesterday. And yesterday, of course, for some of the indexes was the worst day since 2022. That is real fear creeping into the picture. We can see this through the VIX index. This is a measure of uncertainty. It started off the week at a 12, so this has nothing to do with the assassination attempt on the former president. It has to do with some uncertainty, I would argue, around the current president. We now have it closer to a 16 handle. That is a really big move up. That's another way of saying that investors are not so complacent as they were before. And again, with the intensified pressure that we're hearing, reports about Democrats urging President Biden to step down, to step aside. We do have this spike on the VIX, in the VIX today. The laggards on the day, it has everything to do with what was selling off yesterday. We have chips down, and you mentioned earlier we had a rebound attempt earlier in the day. And actually right now we do have NVIDIA and Broadcom flipping back higher, which is interesting because lots of movement for those stocks. It wasn't so long ago that they had been down, but Apple and Amazon lower. Again, I would argue some of that has to do maybe with the JD trade, his talk about being tough around big tech, taking a chunk out of those stocks. But finally, let's check in on those odds around who may be our next president, the betting odds. This is really interesting. So now the betting odds, the predicted betting odds are saying that Donald Trump has a 64% chance. Joe Biden is now at a 13% chance. But in white, take a look at this. Kamala Harris now at a 30% chance. So this matches the spike that we saw in the VIX, this uncertainty around who might be on the Democratic ticket and the growing sense that it may not be President Joe Biden.
All right, Abigail Doolittle in New York. Thank you so much.
Thanks, Abigail. Joining us now as we continue our coverage from the Republican National Convention here in Milwaukee is Congresswoman Ashley Hinson of Iowa. Great to see you here.
Good morning.
In Milwaukee. We're still trying to thaw out from our trip to Iowa.
Yeah, that 22 below was a little brutal,
sure.
right?
It's really something, though, when you bring yourself back to that moment in time and where the Republican Party was, where the contest was, as we were chasing Ron DeSantis and Nikki Haley around on the campaign trail. Yep. There was a night this week when they all spoke, and Doug Burgum was added to that list last night. Unity has been a theme here, we're told, but started to get a little chippy last night with Peter Navarro and some of the others. What are we going to get? Which Donald Trump are we going to get tonight?
Yeah, I think we're going to get a Donald Trump the unifier tonight. I think our message has been very clear this week. Republicans are united behind Donald Trump. Iowa takes its job, obviously, in vetting all the candidates every caucus season very seriously. First in the nation. We're so proud of that. And I think we've done a good job of that. Every candidate you heard speak on the floor last night, when I think about the Republican bench, the people who are serving all across the country, I'm so proud of the people who've stepped up to help execute on this agenda to move our country forward. So I think that's what we'll hear from President Trump tonight. And I'm sure he's had just an incredible week watching these speakers, but also reflecting on his life and his legacy and what he's experienced since Saturday.
Well, of course, we'll all be watching as we look ahead to his speech this evening, but we also got a speech from his selection for vice president in J.D. Vance last night. We just played a little taste of it with Chairman Turner, the idea that he talked a lot about the working man, but also a lot about countering China.
Right.
I know you sit on the China Select Committee. I'm sure you have thoughts on how that relationship would move forward under a Trump-Vance administration. But knowing you also come from Iowa, do you worry about the repercussions of going harder on China on things like tariffs that could blow back on, say, American farmers with something done in retaliation?
Yeah, well, absolutely. Every economic lever we pull, China's going to try to pull something else, right? And so we have to be very deliberate in any tactic we take or any legislation we pass, right, to try to hold them accountable. I think what I've heard loud and clear from Iowans, whether they're farmers or manufacturers or just small business owners, is they're tired of getting ripped off. They're tired of being undercut by China. So it's our job to make sure we're being competitive and we're laying out the policies to do that. So our committee, that's been the sole focus, is to try to say, hey, what economic levers do we need to pull? What investments do we need to be making to reshore things? What do we need to be doing diplomatically to develop relationships around the world to counter the efforts by China? So whether it's chips or other manufacturing that we need to reshore here, that's been our focus. Fentanyl is a huge problem in this country, and our committee actually did put out a really in-depth report about what China's been doing, what they've been up to. They've been directly subsidizing production of fentanyl just for export, right? It's illegal for their own people to make it for their country, but just for export. That, I think, says everything you need to know about China's intentions. They want to flood the world with this poisonous, dangerous fentanyl.
There's something called the Farm Bill that's not getting enough talk because it's a pretty big deal, and I know it is for your farmers in Iowa. It's also a big deal for progressive Democrats who want to see higher allotments for SNAP, for food stamps, and things have been gummed up. Your colleague in the other chamber, Joni Ernst, told us there will be no new farm bill. We're going to have to kick this thing and maybe take another swing in a lame duck session. Is that how you see it?
Well, unfortunately, with the timing and that expiration of even our extension expiring in a few months, if you would have asked me 3 or 4 months ago, I was hopeful. The House has certainly passed its farm bill out of committee. I'm hopeful we're able to get it on the floor. But
what does that mean for farmers, though, in Iowa? What are they not going to get because of this?
Well, I think if we are able to do another extension, really this is about certainty for them, knowing where things stand. So we will absolutely be working on moving that forward. I will continue to hammer our leadership and say, hey, guys, we need to get this farm bill done. It's critical for them to have that certainty. But I would hope we are at least able to, knowing what we know about the dynamics in the Senate, get an extension passed sooner rather than later. I was actually out in the district, visited one of our FSA offices, for example. So they're the boots on the ground from USDA helping our farmers get access to the programs that they need. And they're like, we just don't want it to be the last minute, right? We can navigate this if we know what we're dealing with, and it's just about the questions, right? It's the uncertainty. So I'm hopeful we're able to get something done soon. And I care about all those programs, right? I care about the SNAP program and making sure that's funded in an appropriate manner. I serve on the Ag FDA subcommittee, and so we've been taking a look long term at how do we make people healthier? How do we reduce healthcare costs for everybody? How do we make sure people have access to the food they need? But also, how do we make sure our producers have access to the programs that they know and trust?
To get that done, though, do we have to wait until the election? Is this all going to happen in the lame duck session at the very end of the year?
I wish I had a crystal ball to tell you, but it's looking that way. So again, I'll be pushing to get the extension across the floor as quickly as we can, because it is a vital program, and I wish we would have gotten it done last year, but obviously the dynamics are a little bit interesting right now in Congress, as always, right? Yeah.
That's a good thing, though, isn't it? This could be actually a very productive lame duck session, depending on how things go. You take the pressure of the election away, and look what happens.
Right. I think people will be more willing to make a deal, right, and come to the table and negotiate. And I think that's what we should be doing. And I think you've heard that a lot in the messages out of convention. Last night, they were saying, hey, we might not agree all the time. And that's okay. We can have that. And that's what JD said, right? We should be having those discussions. And so I think it's going to be critical that once we get past the election, we're able to put that aside and get these things done. I know as an appropriator, we got all 12 of our bills out of our House committee. I know that September 30th deadline comes the same day every year, and yet Congress still can't get its act together. So I'm hopeful that we're able to push those bills across and then get something done in the lame duck.
Well, as you speak about what we heard from J.D. Vance last night, something else we heard repeatedly with different phrasing is this idea that J.D. Vance and Donald Trump are not going to be in it for Wall Street or for big business. We kept hearing about the working man.
Yeah.
Is this a metamorphosis, if you will, of the Republican Party? Because we have traditionally thought of the Republican Party as the party of business. So has something fundamentally changed here?
I wouldn't say it's changed. What I would say is I think we're trying to help a rising tide lifts all ships, right? That's kind of what we're looking at least my perspective is we need to be focused on policies that help lift up every American, no matter what walk of life you're from. What I appreciate about JD, especially the senator and hopefully our next vice president as this pick is I think he has so much context to draw from in terms of helping guide President Trump in the agenda. Don Jr. spoke a little bit about that, right? So he's, from Trump Tower, and then you've got JD from Middletown, Ohio, right? So, and they're going to be working together to advance this agenda for all walks of life. So I'm inspired by that. I'm a 41-year-old mom of 2 boys, and JD's a 39-year-old dad to 3, right? So I love that we've got kind of a good old-fashioned working parent coming in as our potential vice president this cycle.
It was remarkable listening to Don Jr. last night talk about this kid from Trump Tower becoming close friends with a kid from Appalachia. I guess there's something poetic about that, but how can you be an economic populist if you're a billionaire?
Well, I think you work with everyone, right? We've seen, I don't know if you've read Trump's books, but I read The Art of the Deal after he was our nominee in 2016, because I wanted to know kind of how he thought.
Sure.
And I think you see a man who has gone down and had those conversations with all the people who build his buildings. He's been there for the working man, and I think that's exactly how that happens, and that's what we're seeing out of both President Trump and out of our vice presidential pick.
Well, I suspect you're going to have a big night in the hall tonight, and it's great to talk to you before you get in there. Thank you.
I'm pretty fired up, so it's great to be here.
I can see that. Representative Ashley Hinson of Iowa, thank you for being part of our conversation and our coverage today on Bloomberg. Of course, the other story we're following here on another split-screen day, Kaylee, is the situation involving Joe Biden. He's been sidelined with COVID, and now calls from Capitol Hill leadership for him to drop out of the race.
Indeed, and a new one now, or a new report at least, coming from the AP, that Pelosi has warned Biden his candidacy may stop Democrats from winning the House. This, of course, echoes what we have heard from other outlets, including CNN. In just the last 24 hours, it's been incredibly difficult for the incumbent president.
That's true, who, of course, says he's staying in this race and still has many supporters. We spoke with one yesterday, the mayor of Milwaukee, where we sit now, Cavalier Johnson, talked to us about the impact the RNC on the city and his own support for Joe Biden. Here's part of that conversation.
There's only one person in the United States who has ever beaten Donald Trump in a political contest, and his name is Joe Biden. He has an outstanding record to run on over the course of the last 3 years, and he's got tremendous plans for a second term. This also reminds me of what happened in 2020 during the Democratic primaries, right? We had people on the front end who voted, and then we said, hey, why don't we let the diversity in the Democratic Party speak? And then South Carolina came, and Joe Biden had all the support in the world, and now he's president of the United States. So let's allow for minorities, for African American, particularly African American women, to speak in this election.
But the data would suggest that more and more they are turning away from President Biden.
Well,
you don't believe that?
Well, I can tell you this. I go out and I speak to my constituents. We were having a conversation just about festivals and things like that on the ground in this city. I go out to all those festivals and I engage with voters, particularly African-American voters and African-American male voters too. I ask them the question about the election coming up. Just real talk. Are you voting? Are you registered? Some say yes, some say no. Many of them have said yes, and I say, okay, who are you voting for? Just real talk, just me and you. Sure. And they say, we're voting for President Joe Biden. There is no other person to vote for. And there's reasons for that, because they know that Joe Biden has delivered for black people in this city and in this state and across the country. And, they know what they would get under a second Trump presidency. Yeah. And so my understanding from talking directly with my constituents is that they are voting for President Joe Biden.
Part of our conversation with the mayor of Milwaukee, Cavalier Johnson, as we are all here gathered for the Republican National Convention. It's, of course, day 4, and we're awaiting Donald Trump to accept the nomination officially and speak later tonight. So joining us now as we look ahead is Bloomberg Opinion Senior Executive Editor Tim O'Brien. Tim, we also want to talk to you about what's going on in Biden world, but the fact is we are here in Republican world very much this week. Donald Trump, in leading up to his speech, has suggested he is making changes in the aftermath of the attempted assassination. Last week, it was supposed to be a humdinger, he said. Now it's going to be about unity. Knowing what we know about Donald Trump, do you think he can stick to that message throughout this entire speech this evening?
I think watch your watch. He may during the speech. I think Donald Trump is not normally disciplined around his own habits or strategically on the political landscape, but he has been, he was very on point during the debate. I think he sort of let Joe Biden belly flop all by himself during the debate. He had the presence of mind in the aftermath of the assassination attempt to pump his fist and create a very, epic, telegenic moment. But after like day 1 this week, the unity message started to get sort of churned out the window. Stefanik came on stage and sort of ate unity alive. Ron DeSantis ate unity alive. I think Donald Trump will probably, I think that the Republicans and the people managing the RNC have been very shrewd about how performative this event is. They've kept abortion off to the side. They've done outreach to veterans, outreach to people of color, outreach to the Jewish community. You had Sean O'Brien of the Teamsters give a speech that in any other season would be seen as something for the DNC, not the RNC. But, I'm going to wait and watch beyond the convention to see, does this actually, if Trump gets elected, does this become part of how the Republicans govern from the White House? And I do not think peace, unity, and kumbaya are going to be what the Trump White House will be about.
Well, of course, you know Donald Trump better than most people ever will. You wrote the book on Trump. Trump Nation, The Art of Being the Donalds. Bring us inside your imagination on the stagecraft tonight, because we're talking about a showbiz genius in Donald Trump. I remember 16 when the curtain came up. What was it? Queen was playing.
And the blue
We Are the
smoke.
Champions. Yeah, the silhouette. I mean, real powerful optics. I've been looking at people in the hall here with bandages on their ears. To what point or what extent are they going to leverage show business tonight?
I mean, to the full extent. They've got such great momentum this week. I think the assassination attempt, thankfully, it was unsuccessful. And I think that he and everyone organizing this event is capitalizing on the goodwill, I think, that came out of it, that he wasn't killed. And then this kind of Teddy Roosevelt bravado is also something they're building on. And Donald Trump is a media addict. He lives for the spotlight. He is not a strategic thinker. He's not a particularly sophisticated thinker, but he understands symbolism and emotion and performance in his bones. So I think you're going to see a lot of that tonight. I think he's going to get introduced by Dana White, cage fighting specialist.
After Hulk Hogan.
After Hulk Hogan.
there's cage match convention.
It'll be interesting to see how the kind of handoff to Trump goes. But he's come in the other nights he's been in, he's done sort of a WWF entrance through the tunnel. So he's very aware of that. So yeah, I think you'll definitely see some of that. And it plays to his strengths. It would be a good capstone for a good week that they've had here in Milwaukee.
Well, if it's been a good week for Trump in Milwaukee, it's been a pretty rough week for Joe Biden elsewhere.
Yes, it has been.
A positive COVID-19 test yesterday that has now sidelined him. He's isolating in Delaware, reporting now from multiple outlets about senior Democratic leaders in Congress, Pelosi, Schumer, telling him not only that he probably can't win, but that he will drag other Democrats down with him. New polling out from Emerson today. Trump ahead in all 7 swing states and in Virginia. Is it over, Tim?
I don't know that it's over. I think that Joe Biden should do the right thing and step aside. I've said that in 2 columns since the debate. I think he did a great service in a perilous time to take the country across a bridge from a very troubled post-COVID economy and post-COVID society into the economy's been booming, that we have rational people in the federal government. And I think a year ago, he probably should have said, I've done my service. I'm going to hand this off to someone else. He didn't do that. And I think the clock ran far too long. I think the party has been pushing him quietly to move along, and he didn't move along. And I think it's unsettling that it appears that, one of the gatekeepers around this decision is his son, Hunter. That doesn't bode well for the decision-making process. Some of his other gatekeepers are veterans like Mike Donnellan. But I think they're protective, as opposed to thinking strategically what's good for the down-ballot races in the party. And I think now that this stuff's becoming public, I think it shows the extent to which, the pressure's really moving in on him.
We only have a minute left. If he does drop out of this race, are Democrats going to look beyond Kamala Harris, or do they need to quiet talk of alternatives?
And I think Kamala Harris, for a variety of reasons, has to be the first pick. Yeah. I think what will be really interesting is who her running mate might be. That the Democrats should be smart about that. And I think if they have the right lineup there, you're going to see this race reanimated, and some of that swing state dynamic might shift a little bit.
Really great to have you in Milwaukee.
Thank you for having me. It's a
Enjoy
privilege.
night 4 here. Bloomberg Opinions. Tim O'Brien. Find his work on the terminal, OPIN Go, and of course online. Kaylee, we've got a lot coming up in this next hour. On the second hour of Balance of Power, live from the Republican National Convention in Milwaukee, including Republican Congressman Jason Smith, the chair of the House Ways and Means Committee. We've got a lot more, so stay with us right here. Alongside Kaylee Lyons, I'm Joe Matthew on Bloomberg TV and radio. Live from Milwaukee, Wisconsin, to our TV and radio audiences worldwide, welcome to Balance of Power on Bloomberg TV and Radio, day 4 of the Republican National Committee. And we're glad you joined us. I'm Joe Matthew alongside Kaylee Lyons. And we come together at a remarkable moment in political history here, Kaylee, as Donald Trump prepares to accept his party's nomination tonight. Joe Biden is sidelined with COVID, with calls from the leadership on Capitol Hill, Democrats, for him to drop out of this race.
Yeah, and of course, this is as new polling from Emerson suggests that Biden is still lagging by an even greater margin behind Donald Trump in all 7 key swing states. And another state that we don't typically consider to be swing, the state of Virginia, where, according to Emerson's polling, Donald Trump is ahead by 2 points. It's been a pretty rough week for Joe Biden, and Donald Trump is about to cap a pretty good week from him, of course, that began with surviving an attempted assassination.
So once again, over the next hour, we'll be following the bead on both of these parallel storylines. And with us now, Bloomberg's Julie Fine and Gregory Cordy as part of our coverage from Milwaukee. Great to see both of you. Welcome to day 4. This is the big night here, Julie. Donald Trump, after what we heard last evening from Don Jr., from Peter Navarro, a little bit of a darker shade on the unity message here, more red meat. Does that continue tonight? What are they going to hear from their savior?
Well, it will be very interesting because he keeps preaching unity, unity, unity. If you want to look at J.D. Vance last night, he had his moments certainly with the red meat on the policy, but a very measured tone, a very, this is my life, this is who I am. I think you're going to see from the former president tonight a little bit of the red meat, but I think he too will try to talk about his personal story in his life, tap into the emotion of it, and see how that resonates with his base.
Well, as we consider what we heard from J.D. Vance last night, and you're absolutely right, Julie, it was very measured, and he was very specific with who he was trying to speak to. The working man, not Wall Street or big business. Workers in specifically Michigan, Wisconsin, Pennsylvania. He's going for the Rust Belt, Gregory, and he made that abundantly clear.
Yeah, he name-checked those specific states a number of times, and he included Ohio in there. That's the home state. But what he's saying is, look, I come from the Rust Belt. I represent Rust Belt values. I know how the economy has failed people in the industrial north of this country, and I can diagnose the problem so that I can fix the problem. And he went way back to at least the great financial crisis, or if not before, to say it started with Wall Street, and that's what started all the dominoes tumbling with unemployment, with immigration, with all of the things we've seen in this country over the past 15, 20 years to bring us to this moment. It was interesting, it sort of brought us back to what brought Trump to prominence in the first place. So much has happened over the past 8 years, so much with Trump rhetoric, and it was sort of a back to the roots of the Trump movement.
Great reporting this morning that J.D. Vance's campaign plane has a decal ready, but it's not in Milwaukee. When he gets back to life here in Washington, he's going to hit the road. To what extent will the campaign leverage J.D. Vance to travel while Joe Biden is sidelined?
Well, I think J.D. Vance is going to be in the states that you just mentioned. He is the swing state guy, and he is going to capitalize on the Rust Belt. So I think that is where you're in smaller cities, too. I don't think you're necessarily going to see him in the capital. I think you're going to see him in the Rust Belt, small towns. He will be telling his story. I mean, I noticed last night when he said hillbilly. And that was certainly to capitalize on his story in his book so that people, then turn around, buy the book and learn more about him. So I think you will see him in those areas predominantly. I think you will see the former president in bigger cities.
Well, and as he introduced himself to a larger swath of the country last night, he also introduced the country to his mother at one point, who was there in the hall, seated next to the Speaker of the House in the box of Donald Trump. It was a very moving moment. I was there on the floor. I think it was emotional.
Chanting JD's mom.
JD's mom was getting the chants in the room. Pretty remarkable. But if we could just return, we're here on Bloomberg TV and radio. We are the channel of business. To the other things we heard from J.D. Vance about not being for big business, calling out Wall Street barons. For a Republican Party that traditionally has been pro-business, is this not just an evolution of like a Trump movement, but an evolution of the party itself as no longer being business friendly? And if it's not Republicans, Gregory, is there a business-friendly group of the American political class?
Yeah, and what's remarkable is that for all we've just been talking about with J.D. Vance's humble origins life story, he also spent years in San Francisco working on tech and venture capital. So he knows this world. And it's a very interesting sort of juxtaposition of understanding that world, but also being sort of offering a critique of it. He says he's pro-tech, but anti-big tech. He's for what he calls little tech, right? He wants the startups to have a shot. He's against Wall Street, but he's for small business. And so he's going to have to kind of do a little bit of a dance here. He wants to go after congressional or campus college endowments and tax those, right? And so he really... It's attacking in a different way, but he's going to the wealth of this country and portraying sort of an anti-elite kind of message.
Yeah.
That's comes out in a slightly different way from the Democratic critique of capitalism, but it is still a critique of capitalism.
I want to turn you both to what's happening with Joe Biden right now. The leaks are getting hot and heavy because he has not been responding, apparently, to private conversations. We're talking Pelosi, Schumer, Jeffries, pushing him to that point. Now you add COVID. And the White House released a letter from the doctor yesterday, which is what you do at times like these, invoking or describing his symptoms, a runny nose, a cough, and general malaise. Indeed, invoking Jimmy Carter. Are we serious? Do they need an editor to work with the doctor?
Well, it's been just one piece of bad news after another, of course, for Joe Biden, and this clearly doesn't help. And we already have this national image of an old and tired president, and now he's old, tired, and sick. And unfortunately for him, when you're president, you can't really avoid the glare of the spotlight. And so we saw him get on the plane, get off the plane last night, looking tired. It recalled that moment when President Trump had COVID, came back or went to Walter Reed to get treatment, and looked, if I can say, terrible. That's not what Americans want to see in their president, and it's going to renew all of these questions that were already swirling the campaign. It's just really unfortunate timing for Joe Biden.
Well, and on the timing, it's happening simultaneously with the Republican National Convention, in which Republicans, including J.D. Vance last night, are spending a lot of time attacking Joe Biden. What has to change for everyone gathered here in Milwaukee if it is not Joe Biden leading the Democratic ticket, leaving it?
Well, I think, first of all, to return to your point about the general malaise, over and over again, I hear from people, I'm sure all of you do too, who is advising them? How is this message, like you look at the message of the Republican Party, somehow they are able to sell to people, we're for the little man. And then you've got the president who rides the train. I mean, and they can't sell that message. So, and now you wonder in this situation, you know, who is speaking to them. So here you have everybody. I can't tell you, you were on the floor last night, so have I been. How many people saying, well, we don't even know who he's going to be running against. Like here, people already think this is a done deal. This is decided. These are a crucial few days coming up for President Biden. But here's another thing you have to remember. If he does decide to make a change, he's COVID. You're not going to run in from people are, you know, you're not going to run in front of a camera and the next day or two. I think the Democratic Party has bought themselves some time to figure out what they're going to do next. And the more that does get leaked or the more information that gets out about President Biden, it is taking some focus away from the Republicans.
Yeah, well, time is everything, because 1 month from today, we won't all be here sitting in Milwaukee. We'll be in Chicago at the Democratic Convention. Everything has a clock. Julie Fine and Gregory Cordy, thank you both so much for joining us as we turn now to Bloomberg's Tyler Kendall, who has a closer look at a preview of what we might hear in Donald Trump's speech tonight. Tyler?
Yeah, hey, Kaylee. First, some clues on how former President Trump might approach his speech tonight. We've been talking a lot about how J.D. Vance approached his speech last night, reaching out directly to some voters in some key battleground states like Wisconsin, Michigan, Pennsylvania, all places that President Biden won in 2020 and that Trump needs to win this time around. As you've been covering on Balance of Power, a new Emerson College poll out today shows former President Trump leading in 7 key battleground states. And the Trump campaign also announced that former President Trump and J.D. Vance will make their first official appearance as the presidential and vice presidential nominee over the weekend at a rally in Michigan. But when we really look at the messaging towards targeting some of these battleground state voters, it was interesting to see J.D. Vance last night put forward this more populist message, often using it actually as a segue to talk about China. I want you to take a listen here to how he was talking about that competition and framing that message to battleground state voters.
We're going to build factories again. Put people to work making real products for American families made with the hands of American workers. Together, We will protect the wages of American workers and stop the Chinese Communist Party from building their middle class on the backs of American citizens.
We know shortly after accepting the vice presidential nomination, J.D. Vance called China, quote, the biggest threat the U.S. is facing, and that former President Trump has already started to preview some of his policies, including tightening tariffs when it comes to China. So Joe and Kaylee will be watching for that tonight. Also, we do know that after that assassination attempt over the weekend, former President Trump said that he did rewrite his speech to include more unity. So these are some of the themes that we can expect later this evening.
That's great. Tyler Kendall reporting for Bloomberg here at this Republican National Convention. Tyler, thank you. Tyler will be with us for our special coverage this evening that we invite you to here starting 8 p.m. Eastern Time as Donald Trump has his big speech on this night for Kaylee accepting his party's nomination. We've got a lot to experience today, and with us along for the ride as well, our signature panel, Rick Davis of Stone Court Capital, with us right now, and Bloomberg contributor Jeannie Shanzano, political science professor, Iona University. Great to see you both. Welcome to day 4. It's the big night. Rick, you've been there with your own candidate before, and I wonder what you're expecting. We saw the biggest and longest standing ovation of this entire convention before J.D. Vance got on the stage, when Peter Navarro showed up, hours after being released from prison. He delivered the full retribution package. I went to jail so you didn't have to. If they got me, they're coming for you, Jeannie. Blood on his hands, Alejandro Mayorkas. Which message do we get tonight, that or the unity?
You know, I think it's going to be a combination of factors. I think Donald Trump, because of the unique situation he finds himself in, just surviving an assassination attempt, has got to address that, right? And that can't be anything but a unity comment. But I don't think this convention has been the unity convention by any stretch of the imagination. If anything, it'd be much more Navarro than unity. Okay. And so I don't think they're going to stray too much from the tried and true Donald Trump testimony tonight. You know, his grievances, his views are going to be in full display, just like they are at his rallies. And when I see the lineup of other speakers tonight, this is not the unity group, right? I mean, this is blood and guts, WWE, you know.
Quite literally.
Yeah, so I think we're going to see more of the standard show. And frankly, that's what I'm a little disappointed. I kind of was entertained by Navarro, but so far it's not been that exciting a convention.
Well, so on this idea of unity, it's not just that they're trying to unify the party, but they're trying to bring more people in with them, at least in theory, right? I have heard so much about the big tent since being here in Milwaukee. Has anyone been able to accomplish that? As J.D. Vance last night specifically just talked to Wisconsin, Michigan, Pennsylvania, Ohio as well, looking at the Rust Belt, looking at workers. Do you think anyone has been drawn in? Or it's just solidified the people that were already here in the first place?
You know, I think there have been good speeches sprinkled among them. I don't think J.D. Vance's speech last night was as effective as I thought it would be. To your point, he did reach out to these Rust Belt states. He kept calling them out. But, you know, you listen to J.D. Vance, I think the most effective speakers, quite frankly, have been Donald Trump's granddaughter yesterday. She was adorable. She made him feel, you know, be like this warm grandfather. But then to your point, Peter Navarro, that is who they are playing to. And this gets back to what I think is a big problem for Donald Trump. He has a ceiling that at least at this point seems pretty solid at 47%. So I will admit, not the best of times for the Dems. But the fact that Joe Biden is arguably going to be off this ticket pretty soon, and you know, it's not a matter of if at this point, but when. That is not good news for Donald Trump because he has a ceiling, and unless he is unifying tonight and people feel like he is a different man than the one we've gotten to know, you are hard-pressed to imagine that the people who are saying they are never Trump all of a sudden turn around and decide they're going to vote for him.
Interesting. I think one of the most underrated speeches of the night was J.D. Vance's wife, Yusha. Really remarkable moment for her and that crowd. She introduced him, of course. I just want to go back, though, to this idea of Hulk Hogan, Dana White performing or speaking here. It's not exactly a highbrow message. Rick, does Donald Trump tear his shirt open? They're actually going to be leading into his speech.
Yeah, this is obviously Dana White and Hulk Hogan aren't reaching across the political divide to suburban housewives.
Right. So it's the fight, fight, fight message, and we'll see the image of Donald Trump. That's kind of the optic that we're going to have.
I mean, we've seen this before, right? He's gone to these events, you know, these WWE events, and it's all loud music and pumping and getting your blood going. And by the way, the crowd has been great. If I had to say the one thing that has saved all these speakers, including J.D. Vance last night, wasn't the speeches or the performances, it's the crowd. They have been electric. They get the message, and they saved the speech last night, and they will elevate Trump's speech tonight. This is going to be the most interactive night that we've seen, and I would expect this is going to be uber high testosterone, you know, but it's the base. They're going to leave here, both the people in the Coliseum and everyone who is already a Trump supporter, and saying, that's the guy we love. The rest of America is going to be scratching their head going, I didn't see anything there for me.
Wow.
Well, there's other reasons why the rest of America may be scratching their head, including trying to figure out whether or not they're going to have the option to vote for Joe Biden or Donald Trump in November. Jeannie, you were just alluding to this. You think it's a matter of when, not if. Yet his campaign is speaking on MSNBC right now, suggesting that actually they still think they're on track to victory. They will not release the polling that shows that path to victory. So take that as you will. But seeing what we have seen develop in the last 24 hours, the calls, public or not, as there's been reported from Democratic leadership, a positive COVID-19 test, Jeannie. If it is a matter of when does this happen strategically, what time is the opportune time, knowing you're running against a very, very ticking clock here?
Yeah, I mean, I think it's probably going to be over the weekend. You know,
while
so
he's isolating,
get ready not to rest,
no,
folks.
we are.
I do think he's not only isolating physically, but emotionally and mentally as well. This has been Shakespearean. You guys know that better than I do, all the metaphors. But I do think the worst thing that happened yesterday for the Biden campaign, there was a lot, was Jeffrey Katzenberg coming out and telling them the money is drying up, and not only for your race, but for the down ballot races. That is a disaster for Democrats. Also a disaster, this drip, drip, drip. The party is going to have to respond. Why were you keeping this a secret from the American public? Thankfully, the American public, at least Democrats, have been telling us for a long time in polls that they know what's going on. But this is a disaster all around. He's got to get out sooner rather than later and let the party move forward, because this is a winnable race for Democrats, but he can't be at the top of the ticket. And they're not releasing data because the data shows that he can't pull this off at this point.
He waved to reporters on the tarmac, said, I feel good. He was trying to yell over the noise on the runway there. But Rick, did you see him on the stairs?
Yeah, the pictures are horrible.
Does it matter what he says?
I mean, look, he's 81 years old. He walks like an 81-year-old. It is what it is, right? And he shouldn't be criticized for that. It's who he is. And arguably, he's had a great 3-year run in the presidency. But as a candidate, you know, it takes more stamina. That's just a fact. And at his, you know, advanced age, he's not meeting the demands that his party is giving him. And it's fair for them to then say, it's time for you to move, you know, back in line so that we can put a, you know, team together on the field of play who can handle the rigors of a campaign. Campaigning is hard. And so unless Joe Biden was prepared to meet that challenge, he should himself take himself out.
All right, Rick Davis of Stone Court Capital and Bloomberg contributor Jeannie Shanzano of Iona University will be with us throughout the day as we broadcast to you live from Milwaukee as we're talking about Biden. A spokesperson for Speaker Emerita Pelosi says her talks with him have been misrepresented. We'll have more ahead. Welcome back to Balance of Power on Bloomberg TV and radio, live from the Republican National Convention in Milwaukee. It is day 4, and we're awaiting the speech from soon-to-be officially accepted Republican nominee for president, former President Donald Trump. And of course, as we have continued to remind our audience, the first time we are hearing from him on camera since surviving an assassination attempt last weekend.
Yeah, this is the headliner, and the moment that all these delegates have been waiting for. J.D. Vance last night, the former president tonight. We've seen a rundown on the list of speakers. He'll be preceded by Dana White and Hulk Hogan, of all people, with, I guess the message is fight, 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 as we've been hearing chants on the floor of this convention after that attempted assassination on Saturday.
Yeah, chants of fight, fight, fight. Other chants as well that relate to policy, like drill, baby, drill. Yeah. I was hearing a lot from some energy states delegates last night. It certainly has been a highly energetic convention, and not one without pretty robust policy discussion as well. And we want to continue that now and bring in Missouri Republican Congressman Jason Smith, the chair of the House Ways and Means Committee, who is here with us on set in our studios in Milwaukee. Mr. Chairman, thank you so much for being with us. Among the policy discussions that have been focused on this week, and certainly for us here at Bloomberg, is tax policy. That is your arena. You were able to pass through the House by a wide bipartisan margin a bill much earlier this year. Expand the child tax credit, tax breaks for businesses as well, stalled out in the Senate. Can we first start by asking you, before we even look ahead to what comes in January 2025, whomever is president, is there a chance that can happen with this Congress still?
Absolutely. You know, the tax agreement that you're referring to was a bipartisan effort between Senator Ron Wyden from Oregon and myself, two members of Congress that are not alike politically, but we found the common ground. And in fact, it proved that it was common ground because it passed the House of Representatives in January with 84% of the vote. For anything to pass the United States House of Representatives with 84%, we got 5 more votes than the TikTok bill. So I was quite happy with that. But what I will say is, you know, hearing what Leader Schumer has said in the last couple of weeks, he's gonna bring it up to the floor for a vote, and I believe the votes are there. So it's good. It will help millions of Americans. It will fix several of the tax provisions that have expired from Trump's tax cuts, such as 100% expensing research and development, which is a really important aspect. There's an interest deductibility provision, but then it also does some good stuff on the child tax credit.
So you fast forward to the debate surrounding the 2017 tax cuts, and you've got a really busy year ahead. Mr. Chairman, we've had a long-running debate here, and I know it's going to continue. Kevin Brady has been speaking to us about this, so has Maya McGinnis. And there are questions about how you make all of this happen. I know that there's an effort to increase defense spending. Nobody wants to touch Social Security or Medicare, but we want to make the tax cuts permanent. And if that's all that happens, potentially add a good amount of money to our deficit in the trillions, once again, which I don't think is something that you want to see. So then the question becomes, what to cut?
It's a big discussion. Passing and addressing the expiring tax provision of 2025 is going to be a very, very huge task. In fact, it's the biggest tax cliff our country has ever seen, $4.3 trillion that will be expiring. Every American will face a tax increase if Congress does nothing. We also have a national debt at $34.5 trillion. So we're going to have to get very serious about looking at what is the optimum tax rate for certain individuals, what can help grow the economy, and what can also fund government, and make sure that all the things that are properly and necessarily needed to fund government. I think in a very bipartisan fashion, you see people wanting to protect and preserve Social Security and Medicare. We're concerned about both of those programs because by 2032 to 2033, both of them become insolvent. And so these are programs important to all Americans, but it's going to have to be addressed in a bipartisan fashion. One party cannot do it. It will never stick if not both of them are at the table.
A number of our colleagues here at Bloomberg had the chance to sit down with former President Trump a few weeks ago in Mar-a-Lago for a Bloomberg Business Week piece in which he suggested to them he would like to see a corporate tax rate of 15%. So we're going 6 percentage points lower. Is that realistic Mr. Chairman, given everything you just said about still needing to be able to make sure government is funded appropriately?
There's a lot of things on the table. I think the biggest priority when you look at businesses is Section 199A. It's called the Main Street deduction. It's for pass-through subchapter S's, LLCs, which make up about 70% of all businesses in America, mainly small businesses. They have a 20% deduction that was passed in the 2017 tax code that would help give them about the equivalent tax rate as a C corporation, which is at 21%. That expires at the end of 25. That has to be our top priority when we're looking at addressing business taxes. The corporate tax rate, I'm someone who would always love lower taxes.
So 15% maybe sounds good?
I love low taxes. The president, he loves to make deals, and he knows the art of a deal, and so maybe he wants somewhere between 15 and 21. He would take 10 though. So we got a lot of things to navigate. Every individual tax rate increases. Every tax bracket increases. The child tax credit, which is something that is in the Republican Party platform, goes from $2,000 to $1,000. The standard deduction, which 91% of Americans use to file their taxes, it gets cut in half.
Remember the drive to put the tax code on a postcard to simplify this so people understand what we're talking about here, can predict their own finances? Could that happen under Trump 2.0?
Everyone would love to streamline the tax system.
Reform.
Well, we would back in 2000.
Does Congress even handle it?
2017, when we tried to pass the Trump tax cuts, we wanted it to be put on a postcard. It's difficult. There's a lot of interest. Everyone likes their tax provision. Everyone likes their tax deduction. If we didn't have any deductions and any special tax provisions, you wouldn't even need a postcard. You could just do it like that.
Well, maybe it's not realistic then. Maybe that should not be the aim to oversimplify this.
I think there's a way we can streamline it. I believe the standard deduction actually is a great way that moves more towards doing it on a postcard. And 91% of Americans do the standard deduction. That means they take 0 tax deductions.
Mr. Chairman, we were all struck by polling that we got in today from Emerson that shows Donald Trump in the lead, not just in the 7 swing states, the known swing states, also in Virginia. There's been a lot of conversation about other states like Minnesota, potentially even New York and New Jersey being more up for grabs for Republicans this cycle. So it's with that in mind that I ask you, what about the SALT cap?
So the SALT cap is always a fun discussion. Glad you brought that up. I hear it every day. I've heard it every day up here from my New York and New Jersey friends. We're going to have to find a balance. There's absolutely going to have to be a balance. That SALT cap was put in place at $10,000 per family. And that raised about $800 billion. And that's what they used to help lower the individual rates and actually to extend the child tax credit. And so that expires as well. So at the end of 2025, the SALT cap is unlimited. So it's no longer a $10,000 cap. It's millions if necessary. There's no cap. So that's going to be a big part of the discussion and the tax cuts. And I'm sure there's going to be a lot of negotiation with our friends in New York and New Jersey. And if the elections go well and more Republicans come from New Jersey and New York, we're going to hear even more about it.
It's pretty loud already, that's for sure. I'll tell you, Mr. Chairman, you come on Bloomberg and start talking about SALT, the terminal's going to blow up here in a minute. I was waiting to see the headlines. Where's Donald Trump on this? Do you know?
I don't know where he is, but he signed the Tax Cut and Jobs Act. That was his legislation, and it put the cap. But also understand that the Trump tax cuts was $5.5 trillion worth of tax cuts, and $4 trillion was within it, and according to joint tax, that was paid for by eliminating various deductions, changing provisions such as the SALT tax cut. So it's gonna be interesting in how to navigate this process.
We're talking literal taxes here, obviously, but another conversation we've been having a lot in Milwaukee is about the protectionist policies that both Donald Trump and Vice Presidential nominee J.D. Vance seem to be advocates for, including higher tariffs on China that have been described to us here at Bloomberg as another form of a tax on the American consumer. The Peterson Institute for International Economics suggested it would cost the average middle-income household an additional $1,700 a year. Should we be thinking about tariffs as another kind of tax as well?
We should absolutely look at tariffs as a way to make sure that the American worker, the American farmer, the American manufacturer is treated fairly. If you look at what happened when Trump was president from 2016 to 2020, he elevated a lot of significant tariffs on China. And people were doom and gloom, said it was going to destroy the economy, and it led to the best economy in my lifetime in 4 decades.
But he's talking 60% now.
He's talking to make sure, like I said, Donald Trump is a negotiator. He's talking about making sure that the American worker, the American manufacturer, and the American farmer is taken care of and not taken advantage of. Think about this. When Trump was president, agriculture trade was at a $5 billion surplus. Right now, it's at a $21 billion deficit under President Biden. That is detrimental to U.S. farmers and ranchers, and it's because of the policies that have basically lapsed or not been implemented.
So think about all the things that we've been talking about here, the impact of tariffs. We've got, of course, the impact of interest rates. Inflation is such a major component here. The rent is too damn high. What's Donald Trump going to actually do to lower prices?
I think it's a good way to look at back in 2016 and 20 what he did. When he left office, inflation was at 1.4%, and it was under 2% for the prior 24 months.
Stayed there without COVID?
And I absolutely believe that because COVID was mainly over. What fueled inflation, if you even look at the charts, is right after the American Rescue Plan was passed in the 3rd month of President Biden's office. $2 trillion spending bill. Even Larry Summers, Democrat economist, said this money was not necessary, and it put too much money in the market that led to 20.1% increase in inflation since Joe Biden took the oath of office. That has affected. So to pull that money out, stop the spending, continue to make cuts. There's a lot of money that's still sitting in the coffers and in mandatory spending that came from the American Rescue Plan, that came from the Inflation Reduction Act, that we should look at and we should cut.
Of course, I've heard you speak President Biden's name a number of times during this conversation. Simultaneously, that we are all here gathered in Milwaukee, things do seem to be snowballing, if you will, when it comes to his reelection campaign. More and more calls for him to drop out. What needs to change for your party if it is not Joe Biden at the top of the Democratic ticket?
I would really hope the party that advocates for democracy is what the Democrats do, that they would disenfranchise 14 million Democrat primary voters. That's who they picked. There was other people running for office. They picked Joe Biden.
But if it's Joe Biden's choice to step aside.
If it's Joe Biden's choice, it's fine. But the only reason why all the leaders are calling for his resignation is because it's a political issue, not a medical issue. Because how Joe Biden has acted in the last 6 months is the same he's acted for the last 3 years. They've done a very good job at hiding it. And so it's a political issue because I think they're going to lose. And they want to find someone who can win. That is wrong. That would be disenfranchising 14 million American voters.
So that's going to be the Republican message, though. You're stuck with them.
That is my message.
Wow.
Because that's unacceptable. But if he wants to go, you know, it's their choice if they want to disenfranchise 14 million voters. That's their choice. But Republicans believe in making sure that every vote's counted.
Well, you just said that this is political because they believe that Joe Biden will lose. Do you have the same degree of confidence about Donald Trump's ability to defeat any other Democrat as you do the confidence that he can defeat Joe Biden?
I believe Donald Trump's going to be elected president, whoever is on the ballot. I've traveled this country. I've been to more than 30 states in the last 18 months, helping House Republicans get elected to build the majority. And the movement on the ground is unbelievable. And I'll tell you, I was listening to a little bit of the reporting before I came about J.D. Vance. J.D. Vance spoke to the hearts of people who I represent in the Ozarks and Appalachia, the Rust Belt, people that's always viewed as flyover country. He spoke to them, and that is a movement. So the hillbillies, the rednecks, everyone, I'm a hillbilly, all across the country, he spoke to us. I grew up in a trailer most of my life, a single wide, and we upgraded to a double wide when I was in high school. So that is a voice. We need to make sure our policies represent working class families, small businesses, and farmers.
Thank you, Congressman. It's great to have you with us here. Mr. Chairman, Jason Smith, Chairman of the Ways and Means Committee, with us here on Bloomberg TV and radio, live from Milwaukee, the site of the Republican National Convention, where we're going to have much more coverage ahead, Caitlin.
Indeed, but in the meantime, we want to head to New York, where Bloomberg's David Gura is sitting down with New York Governor Kathy Hochul. David,
thanks to both of you, and welcome to our audience on radio and TV worldwide. Governor Hochul, thank you very much for being here.
Thanks for having me.
So, a lot to talk about. Let me start first, though, with what's in the news. A torrent of headlines about President Biden's viability as a candidate. The Washington Post reporting this morning that President Obama has expressed concern about the viability of his campaign. I think of you as such a stalwart supporter of President Biden. You came out and said that, reiterated that after the debate performance. Has anything changed in these recent days as you've seen kind of the political terrain shift a bit?
What I said when I met the president, literally the day after his debate, he was here in New York City, had a rally, a lot of energy, and then a few days later, all the governors gathered in Washington to meet the president at the White House and ask him some tough questions about that performance and where he goes from there. When he said he is in it to win it, he is going the distance, he is the duly nominated candidate for president from the Democratic Party, once he said he's in, my view is he's going to be in, he's staying. As long as he's staying in this race, I am with him. He has delivered for New York in extraordinary ways that I look forward to talking about even more. And I believe in his vision for our country. So I am with him as long as he wants to do this. And he's been an extraordinary president.
So much of the reporting has centered on conversations that leaders in Congress have reportedly had with President Biden. We're fortunate two of them are New Yorkers, Leader Schumer and Hakeem Jeffries, the minority leader in the House. Have you talked to them about this? Have you registered your feelings to them in conversation?
You know, we have conversations all the time, but when people say they're having private conversations, whether it's with me or the president, then private means something. You don't divulge the content, so I won't be talking about my conversations, but they know as the leader of the state of New York, I have many priorities, but one on the political side is wearing my hat as the head of the Democratic Party to make sure that the path to Hakeem Jeffries becoming the Speaker of the House of Representatives goes right through New York State. Battleground areas like Long Island, where I just was this week, up to the Hudson Valley and over to Syracuse. So I have dedicated an enormous amount of my energy on making sure that we take back the House, because I'm a former member of the Congress. I served in the minority. And the representatives we have now who are in the majority are not giving New Yorkers what they need, and we need to change that dynamic.
So much of the concern that I hear from analysts, but politicians as well, is what this means for candidates down ballot. So let me have you talk a bit more about that. Are you hearing any word, any concern from local political offices, from candidates about how this uncertainty, this vacuum that has opened up since that debate is affecting the viability of candidates running for Congress, running for other office?
I will say this, having been elected in the most Republican district in the entire state of New York, I know that every district has unique characteristics. The issues are different. You cannot take a broad brush and say whatever happens at the top of the ticket will filter down to individuals. A lot of it's personality driven. A lot of it's accomplishment driven. So I think that you cannot possibly do that, but I think there'll be high turnout in our state. I really do. I believe that this is going to create some energy and excitement, and the people who've been loyal to the president from the beginning in districts where they carry by 20% on Long Island will still be there for Joe Biden and our congressional candidates as well. So everybody's talking about everything, but what we're not talking about enough is Donald Trump as a threat to this country. I want to shift the conversation from Democrats who are doing what they're doing, and Democrats have always been an unwieldy bunch. We used to talk about this when I worked during the Ronald Reagan, Tip O'Neill era as a congressional staffer for Senator Moynihan. Democrats are always a little more rough and tumble with our own. But we do line up and get behind our candidates, and that's what I'm expecting to see behind Joe Biden.
As the governor, you have to plan for both outcomes, either a Biden re-election victory or Donald Trump winning the election. Let me ask you about that latter scenario. If past his prologue, there were difficulties that the state had when it came to funding, when it came to policies. What worries you the most about the prospects of that happening, and how do you think through those eventualities?
No, we're always prepared, but infrastructure is critically important. You can proclaim that you're the infrastructure president, not do anything other than issue a press release, or you can actually be the infrastructure president, which is why New York City benefits from Gateway Tunnel, for example, the largest public project done by the federal government in its history. And also private investment, upstate New York. Donald Trump did not deliver Micron to the state of New York. It was the climate that Joe Biden created in saying we need incentives to draw the semiconductor industry back from South Asia, plant it right here in the United States, and I, as governor, was able to deliver it for the state of New York with our own incentives. So that kind of partnership, that relationship that's the largest private sector investment in American history, the largest federal government investment in American history, going on simultaneously here in the state of New York. So I'm going to continue marching with Joe Biden. If it is not him, those are areas where I'm concerned. The investments in our economy, the job creation initiatives, the workforce development, but also the major infrastructure, which creates tens of thousands of good-paying jobs in our state.
You bring up infrastructure. Let me use that to segue to the latest polling. You should note your approval rating is low, 38%, the lowest it's been, but there is a bright light, I think you would say, in that polling when it comes to the decision that you made at the 11th hour to put a hold on congestion pricing in New York. 45% of voters in New York agree with that decision. A pause is inherently temporary. What is it going to take? What will make you lift that pause potentially?
The pause is in place because the world has radically changed since congestion pricing was first initiated in 2019. Inflation is a factor that's affecting New York families. Whether you live in the city, suburbs, whatever. We have to not be tone deaf to New Yorkers who are saying $15 to come into the city right now when I'm a teacher. I'm a firefighter, $3,800 more a year to work in Manhattan. It's a great place to work, but that's an extra penalty of being a New York City worker.
If it were lower, would that be more appealing to you?
There's other ways to deal with this. I will continue supporting the infrastructure projects that were contemplated to be funded by congestion pricing. And those who say I will not will soon see I know what I'm talking about. We'll be talking about this more throughout the rest of this year. Nothing can really happen until the legislature is back. But that doesn't mean that we won't have a path forward that addresses congestion, that addresses funding for MTA projects, and looks at the structure of congestion pricing. And there are other models. In London, they started, for example, at £5, not 15. It takes time. So I just can't do that to hardworking New Yorkers. They want relief. They want someone who actually listens to them, and that's exactly what I did.
Do you regret how this happened? I've talked to a lot of people who say you didn't telegraph this. This wasn't even something that a lot of people thought could be on the table, that you could put this pause in place at a very late hour when everyone going back to 2019 thought it was going to happen. Do you regret the way that it came out and the surprise that it had?
When I reflect back, I would simply say this. There has been a strong reaction by those who have the microphone. The individuals in certain media, for example, and voices that are very strong here from the legislature in the city. But what we're not hearing, what I hear that others are not listening to, are the healthcare workers who are so grateful. The hotel workers who gave me a standing ovation because they don't now have to pay almost $4,000 more a year. The police officers, firefighters, there are countless, the pizza delivery guy, the owner of Patsy's Pizza gave me a hug and said thank you because everything would get pushed down to the consumer and prices would have gone up. So I will say this, if there was a way to mobilize those voices and give the other perspective and have media talk about those who simply say we finally have a governor who pays attention, even at my own political cost. Yes, it was hard to do. But I also said I do not want to wake up the day after and wish I had done something to relieve New Yorkers' pain, and that is real. So that is the only issue I would say. We could have had more of the support that's I know is there. We had 9 lawsuits opposing this. So at any point, any of them could have been successful, and that would have been the death knell of congestion pricing right there. I put in a pause. I did not kill it. I put in a pause to consider the path forward at this time.
There was some speculation that you did this because there was concern about the down-ballot races we were talking about before, that you were receiving some pushback or some encouragement not to do this. Any truth to that?
People can always speculate about my motivation, but they ought to know. I come from a blue-collar community. I know what it's like when you're worried about are you going to be able to send your kids to college and pick up the groceries and pay your medical bills. That's real for a lot of New Yorkers. And whether they're from Staten Island or coming in from Nassau or coming in from the Bronx, it's real. So we will continue focusing on the objectives that are behind congestion pricing, and they are meritorious, and I support them. But let's just give New Yorkers a break.
My last question is going back to the political terrain here in this state. I've been watching the Republican National Convention. Congresswoman Stefanik made the assertion that New York could go red. She's seeing the terrain change dramatically in New York State. Is that something with which you agree? And I wonder if, looking back on the race that you ran in 2022, you're not up for re-election this year, as you look sort of ahead to 2024, 2026, are there lessons to be learned from the race that you ran, which I think was a lot closer than, dare I say, you might have expected and a lot of people expected?
Right, and you look at the unique circumstances of that race.
Sure.
I became governor and had to run instantaneously. Like a year later, I was already up on the ballot. So people did not have a chance to get to know me. And there were strong campaign forces that tried to paint me with all the crimes that were happening in the state of New York. I mean, the ads were so absurd that they actually showed crimes that had been committed a decade earlier in California in ads saying Kathy Hochul's keeping you unsafe or Kathy Hochul supports criminal. It was crazy how successfully the Republicans weaponized that issue against someone who's married to a federal prosecutor. My son's a federal prosecutor, and I've always stood strongly with funding and supporting our police, and my record shows that. So that's the only takeaway from that. That was unique circumstance. They were able to paint me a certain way because New Yorkers didn't know me yet, and now they're able to see what I've accomplished. So we will not be going red as much as everybody at that convention would love to see it. It's not happening.
Governor, great to see you. Thank you very much.
Thank you.
Governor Kathy Hochul, the 57th governor of the state of New York, and I'll send it back to you guys in Milwaukee. Joe and Kaylee.
All right, David, we thank you. Bloomberg's David Gura in a fascinating conversation with the governor of New York, Kathy Hochul. Says New York is not going red, Kaylee. And something that we could bring you exclusively here on Bloomberg as part of our conversation here in Milwaukee. Of course, joining you live from Wisconsin at the Republican National Convention, now entering day 4, but also breaking news once again on Joe Biden. The Democrats seem to be making as much news as the Republicans this week. We just got a letter released from the White House from the president's doctor, Kevin O'Connor, physician to the president here, with an update on his COVID that, of course, we just learned about yesterday. Kaylee, the president's still experiencing mild upper respiratory symptoms, he writes. He continues to receive Paxlovid. He does not have a fever. Vital signs remain normal and will continue to conduct the business of the American people. The question is what he will do this weekend with more calls, including now Democratic leadership, to drop out of the race.
Yeah, notably not a call from Governor Hochul there. She said she is still behind Biden for as long as he remains in this race. But for many, in conversations that we've been having in recent days, it's not a question of if he does, but when he makes the decision not to be. As you hear growing calls publicly from the likes of Congressman Adam Schiff and also reports on private conversations that have happened with Democratic leadership, including Speaker Emerita, Nancy Pelosi, Chuck Schumer, Hakeem Jeffries. It does feel more and more like the president is being backed into a corner as he isolates in Delaware.
Yeah, we're going to be monitoring headlines closely for you here as we add the voice of Stephanie Murphy, former Congresswoman from Florida and January 6th Commission member. It's great to see you in Milwaukee, Congresswoman. I don't know how many Republican National Conventions you've attended, but we've been trying to keep tabs on Democrats and their views as well. This matter of Joe Biden, though, is a serious one. I wonder if you agree with the conventional wisdom that it is not a question of if, but when. Jason Smith just sat here and said Democrats voted for him and are stuck with him.
You know, at the end of the day, there's no procedure or mechanism for anybody other than the president to make a decision to step down. And having been in Washington quite a while, you all know this, people don't usually give up power easily. It usually has to be seized from them. And so I think you're hearing leadership in the Democratic Party trying to appeal to the patriot and to the party soldier that they know President Biden is, and show him that data that maybe his inner circle isn't showing him about the impacts of him staying on the top of the ticket for down ballot races and what that might mean for this country and for the balance of power, so to speak, in Washington come November.
So just to be clear, Congressman, you are of the belief that not only could Joe Biden lose to Donald Trump, but potentially it would mean the Democrats cannot hold on to the Senate and may be at risk of not being able to flip the House.
This race was going to be incredibly close even before that disastrous debate performance. And now he's losing his base. And so it's hard to imagine that you can put together the voters that you need in order to prevail in an election in November when your base is soft, enthusiasm is low, and you're not doing anything to win the swing voters.
Would you support Kamala Harris if this actually does transpire? Or do Democrats need to start from scratch? We're hearing that from a number of Democratic operatives who are pointing at governors from around the country. But of course, Joe Biden has a vice president.
Certainly the vice president should have consideration, but I think at this moment with high distrust of institutions and parties, the Democratic Party deserves an open debate, one that they were deprived of, which is why we are here in this moment. Primary races, no matter how short, road tests a candidate, and we do need to road test the candidate that's going to go up against Donald Trump in the fall.
Well, as we think about Donald Trump, and we just heard Governor Kathy Hochul of New York talking about this as she was trying to, put to bed the questions around Joe Biden. What she said was, we aren't talking enough about the threat that Donald Trump would pose if reelected. Are Democrats doing themselves a disservice, even if they do think they are doing it for patriotic reasons or what have you, to put so much pressure publicly on Biden to step down, making this story about Joe Biden on a week when we have heard from a litany of Republicans about Donald Trump and the policies he's likely to adopt if he does indeed win in November?
Whether Democrats say the quiet part out loud or not, the focus on the current president's mental acuity is front and center in the minds of the American people. 65% of them going into the debate felt that he didn't have the mental acuity to move forward, and that number has just increased. And now it's bleeding into others. Recent polling says that Americans are distrustful of elected officials who defend, who vouch for the current president's mental acuity and ability to carry out the next term. He's putting people in a difficult situation of risking their credibility in order to defend him. I think it's a conversation that deserves to be had in democracy.
I have to ask you about the actual convention that's underway here in Milwaukee. I thought about you when I heard from Peter Navarro yesterday's speech, hours after being released from prison. He talked about the January 6th committee, which of course was the source of the contempt charge that sent him to prison. I am your wake-up call. I went to prison so you don't have to. What was it like for you to watch him on stage in front of all these delegates?
So I have been here in a press capacity with coverage on this. And so it was really, they have managed to avoid talking about January 6th in the previous days of the convention. And he really was one of the first times where some of the normal MAGA kinds of party lines were really up front and center. I am a constitutional Article 1 person. Congress has the right to subpoena people. And if they don't respond, we hold them in contempt. And it was a court and a jury of his peers that convicted him. So, and right now, the Republicans are contemplating holding Garland in contempt for not responding to Congress. And we have to protect the powers that the Constitution gave to the Congress. And if you let people defy subpoenas, whether it's a Republican or a Democrat in control, then you allow them to erode the powers of the Congress.
Be curious to see if the January 6th choir is invoked tonight or talk of pardons. These are some of the questions we have as we wait to hear from Donald Trump. A great pleasure to have Stephanie Murphy with us, Congresswoman. Thank you so much. Former Congresswoman from Florida, January 6th Commission member, the voice of a Democrat at this Republican National Convention. Thank you so much for spending time with us on the early edition of Balance of Power. I'll be back with Kaylee Lyons, 5 p.m. Eastern Time. Special coverage tonight, 8 p.m. Eastern, for Donald Trump's speech on Bloomberg TV and radio. We'll see you back then on Balance of Power.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. It is Thursday, July 18th. Carol Masser along with Tim Stenivek, and we've got a rally, an equity rally team that, Tim, that is definitely running out of steam.
Yeah, we're seeing quite a reversal from what we saw a little earlier in the day. The S&P 500 down 0.6%, while the Dow down 0.8%. We're going to get a full update from Charlie Pellet in just a second. Some of the big cap momentum running, kind of failing right now. Speaking of those mega caps, though, we got Netflix reporting after the bell today.
Yep, it's about subscriber numbers, but a lot more. We're going to talk about that with our Gita Ranganathan in just a moment. Also, speaking of earnings, Novartis, definitely front and center. Shares taking a bit of a hit. This is after a closely watched cancer drug disappoints. We've got the company's CEO. We're going to talk about the business.
Plus, Donald Trump takes center stage at the RNC this evening. We're going to check in with Joe Matthew on the ground in Milwaukee.
And check it out, folks. We've got an IPO. Ardent Health began trading today. It came out of the gate, though, below its IPO price. We're going to talk about that with the CEO also joining us this hour.
All that and more over the next hour. First up, though, check of the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much indeed. More red on the screen on this Thursday with the Dow, the S&P, NASDAQ all declining. A week-long drop in mega-cap tech stocks broadening today to encompass small caps and financial shares. Signs of economic weakness overwhelms optimism about rate cuts. Right to the numbers with the S&P now down 35 at 55.52. A drop in the S&P of 0.6%. The Dow down 363 now, down by about 0.9%. NASDAQ, the composite index, down 141, down 0.8%. And the Russell 2000 index of small cap shares now dropping by 1.3%. 10-year 4.17% with a 2-year right now 4.44%. Gold down $2 the ounce, $24.56, a drop of 0.1%. And West Texas Intermediate crude oil WTI up 0.7%, 83.40 a barrel. We're going to be all over Netflix after the close of trading. Netflix shares ahead of its report, trading lower now by 0.5%. More coming up with our Gita Ranganathan. Also, shoppers spent $14.2 billion online during Amazon's 48-hour Prime Day sale, up 11% from a year ago. That was in line with estimates, according to Adobe. Amazon down now by 2.3%, taking part in that broader tech sell-off. So again, recapping here, stocks lower, S&P right now down 39. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
No Amazon Prime shopping for me. I think maybe my husband. I don't know about you, Tim.
I don't think we did. It's not like a holiday for us because we shop so much on Amazon anyway that it's like,
yay, we're shopping.
No, we don't. I don't think it's as big. We can talk about this a little later, but I don't think it's as big of a deal as it used to be.
Yeah, I agree with you. It used to be kind of a big deal. We all focused on it. All right, what we are focusing on right now is tonight's RNC. It has been a very big week for the Republicans, thanks to the Republican National Convention. It does wrap up this evening, and you will be focusing on what we hear from Donald Trump tonight. Of course, that acceptance speech by the former president. So let's head to Milwaukee, the site of the RNC, and to Bloomberg Balance of Power co-host Joe Matthew. Joe, it has been quite a week for the Republicans, but for politics overall. Let's talk about Donald Trump. He's been around this week, right? That's a little bit unusual. So I'm just curious, what are the anticipations, or what is everybody anticipating about tonight's speech?
Well, it's funny because he's done this before. It is unusual at a political convention to see the nominee, the candidate, before that final night. It's the big unveiling, the bride, on the wedding day. But he's been showing up in the hall every night with the full, UFC-style walk out of the tunnel, and he sits in the family box and with the bandage. And the optics have been pretty strong for him. I will say there are a lot of questions about what we're going to hear about tonight, and we can get into that more specifically. We're first going to have to hear from Dana White, the head of the Ultimate Fighting Championship.
Speaking of
and
UFC.
Hulk Hogan. That's going to be his intro tonight. Yes, UFC, WWE, and it reminds us of that moment last weekend when he put his fist in the air and yelled, "Fight, fight, fight." This is supposed to be the unity convention, but the red meat started to creep in last night, and there are questions about the extent to which that will be the focus of his speech as opposed to bringing people together. We've heard time and again this week that he feels like he was touched by the hand of God, that this changed his worldview after surviving an assassination attempt, and that's the unknown before we go into this speech tonight, whether we see a different Donald Trump.
I guess the question I have, Joe, is if we end up actually seeing that unity message that has been talked about in recent days, and if a message of unity brings the same energy that other messages from the former president have brought.
Well, that's a great question. You know, like I said, we saw the red meat last night with J.D. Vance, with Peter Navarro, who spoke, I think, 4 hours after he was released from prison. He got the longest standing ovation yet at this Republican National Convention. So, yeah, you're right. It certainly works with the crowd, and the optics tonight are going to be pretty heavy duty. It's coming at the same time as well. We're doing this split screen again today with Joe Biden, who's been sidelined from the campaign with COVID. We just, in fact, got an update, a letter from his doctor. And there are questions inside that hall here in Milwaukee about who exactly Donald Trump is going to be running against.
Are they nervous about who he is going to be running against if it isn't Joe Biden?
I don't know if nervous is the word that I would use. I think uncertainty, just like when we talk about it with the markets, I guess brings some anxiety. But I think most Republicans here think that if it is Kamala Harris, it is largely the same equation. It's the same campaign. But let's say a Democrat comes from the Rust Belt, a governor like Gretchen Whitmer from Michigan, Andy Beshear from Kentucky. Would that change the contours of this race? Who would be the vice president as well if it was, in fact, a Kamala Harris ticket? These are all questions right now. There are questions, guys, about whether Joe Biden makes it through the weekend in this race. That is a real conversation now that we've heard from Nancy Pelosi, Chuck Schumer, and Hakeem Jeffries.
Well, speaking of Vice President, Joe, we heard from J.D. Vance earlier in the convention last night. And one thing that I'm wondering about in terms of narrative and in terms of questions is if you're hearing any questions about J.D. Vance's experience and whether he has the experience to be a vice president, it doesn't seem to have come up much. I mean, he's not even 40 years old at this point. He hasn't even been in the Senate for 2 years at this point. And I remember in elections past, when vice presidential candidates had been picked, the question of experience had always come up because, after all, they are just a heartbeat away.
Well, that's true. I think in this case, though, he's going to be running with someone who also proved that you don't need any experience. Donald Trump never held any elected office before he was literally the president of the United States. So I think the idea here in Milwaukee is, hey, this is working pretty well for us right now. And they're in love with Senator J.D. Vance. That message that he brings resonated last evening, and they see him as a 39-year-old version, essentially, when it comes to politics, not personal story, of Donald Trump. He is the heir apparent, the future of the MAGA movement. We have to remember that Trump is 78 years old. As our viewers and listeners look at these images we're showing of these two in the box together, this is a generational choice by Donald Trump, and it's one that was expected by a lot of people.
I mean, bottom line, Joe, in terms of what the former president says, Donald Trump, I mean, are we going to get a better clue of what a Trump presidency would look like in terms of policy? We've certainly heard from J.D. Vance his thoughts, pretty strong thoughts about, kind of feels like anti-Wall Street. So I'm just curious if we get more specifics in terms of what a second Trump term would look like.
Yeah, economic populism was on full display last night, but we do have to remember, Donald Trump is the president here. J.D. Vance is the running mate, wants to be vice president, and they tend to not drive the agenda. There is some sunlight between issues on these two guys. J.D. Vance also thinks Lena Khan's doing a good job and would like to see a higher minimum wage. And I don't suspect that that's going to be the message that comes from Donald Trump. So it's probably worth delineating between these two. I haven't heard the term Trumponomics until I read our Business Week interview with Donald Trump this week. And it's really interesting because he's already had the job, guys. I mean, we have a pretty good idea of where he stands on this. The question is, how extreme will we go with things like tariffs? And as we learned, he'd like to keep Jay Powell on the job. How often is he going to be tweeting for rate cuts, if that's the case?
Tweeting or truth socialing, I guess, is the question, right?
Well,
that's right. We go truthing around here.
He certainly has felt more disciplined. So you do wonder. It feels like a calmer Donald Trump, but we will certainly see what comes out later on today. So looking forward to it, and Joe, and thanks for jumping in here with us right now. Bloomberg Balance of Power co-host Joe Matthew. Joe and Kelly Lyons will anchor tonight's RNC special coverage of Donald Trump's speech that starts at 8 p.m. Wall Street time on Bloomberg Radio and Bloomberg TV. All right, we're not nonstop, of course, watching politics, but we're also nonstop watching earnings, and that's where we're going to go right now.
Yeah, this has Netflix reports after the bell. We're expecting those numbers to cross just after 4 p.m. Wall Street time. Shares may be lower today, but bulls have been boosting their price targets ahead of the streaming giant's results, betting that shows, Carol, like Bridgerton are going to keep subscriber growth robust.
You've been watching, right?
I have not seen Bridgerton.
You're
we
missing.
watch, but we subscribe to all those services.
You are missing out. Okay. The average price target, though, among analysts tracked by Bloomberg has been creeping higher, helped by raises from Morgan Stanley, Bank of America, Guggenheim, and some others. We'll see if that upbeat sentiment is confirmed when Netflix reports after the close today. Let's get to the metrics to watch. It's not just about subscribers, but that's a big one. Return now to Bloomberg Intelligence technology and media analyst Geeta Ranganathan. She's with us from Bloomberg Intelligence headquarters in Princeton. Geeta, great to have you here. Netflix is up more than 30% so far this year. What does it need to show tonight to live up to the run-up that we've seen?
Yeah, absolutely, Carol. Thank you so much for having me. So you're absolutely right that it is the subscriber number, once again, that's going to be front and center for Netflix. I mean, this is a subscriber story. And, you know, it's now been 2 years since that great reset we saw with Netflix, right? When they first lost subscribers and they kind of hit that wall when it came to subscriber growth. But they've completely kind of rejiggered and reinvigorated momentum, especially when it comes to subscribers. They have these new initiatives with the password sharing crackdown, the advertising tier as well. And so we're expecting well over consensus expectations. So consensus is hoping for 5 million new subscriber adds for the second quarter. We think it'll actually come in much higher than that, just because of the engagement trends that we've been seeing, as well as some of the download data and search activity that we've been tracking.
Last quarter when Netflix reported, they reported better than expected results, but the big question there was about what would happen in the first quarter of 2025, Geeta, when they would stop reporting paid quarterly membership and revenue per subscriber. Has Wall Street gotten over that lack of, or that removal of a really important metric?
Not fully, Tim. So, you know, this still is very much anchored, or the growth story and the momentum is very much still anchored to the subscriber numbers. But they have been steering the conversation away from that hyper-focus just on subscriber metrics, right? So the metrics that they now highlight are revenue growth. And so for the first time, we saw that those revenue growth numbers actually slip to high single digits in 2023, but we're back on track. We're back on double-digit revenue growth track. And their whole point is that at some point, you know, you are going to see that subscriber momentum fade. Now, 2024, I think, is going to be a record year. They added 29 million subscribers last year. I think they're going to add something very similar this year as well, maybe close to 30 million subscribers. That takes them very close to the 300 million global subscriber mark. But they do know that there is going to be a limit, right? And so they want to steer that conversation away from just subscriber metrics to revenue growth. And we think that, you know, obviously the next big thing for them, or that they're going to be really kind of beating the drum on double-digit revenue growth, as well as, of course, profitability metrics, right? We've seen a complete turnaround in this business. It has inflected from being, you know, free cash flow negative, burning around $3.5 billion in cash, to now generating over $6 billion in free cash flow this year, maybe about 10 billion next year. So this model has completely turned on its head, and these are the metrics that they're really going to hone in on going forward.
I mean, is Netflix, in terms of the streaming world, it's always the one to beat? That's the one that everybody else measures themselves off of, or that's the one that investors should rightfully so measure everyone else off of?
Absolutely, Carol. I mean, they are in a league of their own. They have the brand name. They have the scale with around 270 million subscribers. They have the content pipeline. And what's even better is that their competitors are all in a very weak spot. I mean, we're seeing so much of noise and so much of, you know, we have the Paramount transaction. Today, there is news about Warner Brothers Discovery splitting up. So their competitors are in a really weak position, and that kind of plays in to their competitive moat and strength. So they really have got this durable advantage over the very long term, I would say.
Okay, so they have the brand, they have the scale. You mentioned that they have the content, though, and it's pretty amazing to see in a relatively short time the company build up an international library that appeals to so many people all over the world, Geeta. What should we be watching for in terms of the content pipeline and in terms of commentary from management, and in that investor letter, which truly provides a pretty good update as to what the company is working on. What should we be on the watch for when that does cross just after 4 today?
Yeah, so obviously you mentioned Bridgerton. That was, of course, the most watched show in the whole of second quarter globally. I mean, this was 1 billion hours streamed just of that one show in the second quarter. So they've had huge success with some of their originals, and we're going to continue to see that. But I think what's really more interesting is that they're getting into completely new genres of content. So live sports, something that they've always kind of stayed away from, that they've shunned, that's a new area that they're entering. So they have, 2 NFL Christmas games that they're going to be streaming for the very first time. They're going to be streaming the WWE content, starting in 2025, and then they have a whole bunch of other sports things that are coming up. They have the Mike Tyson Jake Paul event. They have this hot dog eating contest that's coming up on Labor Day. So they're doing all kinds of different things. But really, the idea is to really drum up interest for their advertising business, because advertising is still very much in its nascent phase, but it has the potential to be a very, very big very big in terms of dollar value. We're looking, right now it's close to nothing, but this could potentially be a $5 billion business next year. And, who knows, maybe 10, 15, $20 billion as it grows and gets more eyeballs.
Okay, very briefly, because I know Carol has some questions about the hot dog eating contest. But before we get there, very briefly, what's more important to Netflix, a paid subscriber at the premium level without ads, or a subscriber who pays but also gets ads?
Right now, I would say it's pretty much the same, or at least they have said that they're agnostic. I mean, of course, if you just kind of look at the metrics, it is the premium subscriber without ads, because we're seeing that, the advertising business is diluting a measure that they call ARPU or ARM, which is the average revenue per member. But I think it's still about them kind of building the infrastructure, behind that ad business. And we've already seen them kind of, take a lot of steps. So it's not just beefing up the content pipeline, they're also kind of expanding their ad tech relationships. So previously it was an exclusive relationship with Microsoft. They're now opening up their ad inventory to a lot of other third parties as well. So all of that, I think, will eventually boost that ad metric. And so, at some point, I think an ad-based subscriber might be much more valuable to them than the ad-free subscriber.
Interesting. Hey, before you go, Geetha, you mentioned Warner Brothers Discovery. We've been watching the stock. It's been up. FT, Financial Times, reporting that it's considering separating its streaming and studio businesses from its legacy TV, so maybe spinning out the Warner Brothers Movie Studio and Max streaming service. What does the Bloomberg audience need to know about that?
Yeah, I mean, obviously, ever since they merged, they had obviously merged Warner Brothers and Discovery. This happened over 2 years ago. The stock price is down about 70%, and a lot of that is because of the pressures in the TV world. When they initially announced the deal, they had expected about $14 billion in EBITDA. This year, they're going to report less than $10 billion. So obviously, the stock has been under tremendous pressure. They're trying to do something here to unlock value. The only problem, Carol, is that this is going to be very difficult to execute, because let's remember that Warner Brothers Discovery is really defined by its TV network business. That's not something they want to hang their hat on, because that's not where the growth is, but it does bring in 85% of total profits. So it's going to be hard to separate that from the studio business and the streaming business, which still really doesn't generate that much of cash.
And I just want you to know that I actually think Tim is interested in Bridgerton and not the hot dog eating contest. I'm just going to say.
You got to watch one hot dog eating contest. You can keep watching Bridgerton, though.
Unbelievable.
They got to have something for everyone.
Oh, Geetha, thank you so much. I know we're going to check in with you after the close, after Netflix reports. So appreciate that preview and covering the world of media, as you always do. Bloomberg Intelligence technology and media analyst Geetha Ranganathan. Coming up next, we're going to get into Novartis trading lower. The CEO joins us.
2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 all trading lower, with the S&P right now very close to the lows of the day. Right to the numbers here. S&P down 41, 55.46, a drop right now of 0.7%. The Dow down 442, dropping by 1.1%. NASDAQ is down 143 points, down 0.8%. A week-long decline in mega-cap tech stocks, broadening to encompass small caps and financial shares. 10-year 4.17%, with a 2-year 4.44%. Spot gold down $5 the ounce, 24.53, drop there of 0.2%. And West Texas Intermediate crude, we'll call that flat on the day at 82.84 a barrel. Apple shares today, we got Apple down 1.9%. It is having discussions, according to sources, about licensing more films from major Hollywood studios as it looks to bolster its Apple TV Plus streaming service again. Apple lower now by 1.9%. Netflix, of course, after the close of trading, down now by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we're watching shares of Netflix ahead of their earnings. Already, though, on our radar, the ADRs of Novartis that trade here in the United States, dropping the most in more than 3 years. This is after sales of the company's closely watched prostate cancer drug disappointed in the latest quarter, taking the shine off a raised profit forecast from the Swiss pharma company. Novartis shares falling as much as about 3% in trading that we've seen, trimming this year's gains to about 14% after sales of the treatment fell short of analyst estimates. A lot to unpack here. So let's get to it with Vas Narasimhan. He is CEO of Novartis, joining us from the company's U.S. headquarters in East Hanover, New Jersey. Vas, great to have you here on Bloomberg. Let's talk about the quarter. You reported profit. That beat expectations. You raised your forecast. Your shares are down. As we mentioned, we hear in the market that there are concerns about how long your growth driver drugs will keep delivering. Why do you think that you're having a hard time winning the market over?
Yeah, look, I think first it's really important to take a step back and see how well we've done over the recent years. When you look at our shares over a 5, 3-year, and even year to date, we're really in a place now where we've been trending at all-time highs. So really today we've just given back a little bit of what we gained in the recent weeks, but still trading really near all-time highs for the company. I think really demonstrating that investors are recognizing the outstanding performance we've had as we've, after $100 billion of transactions, focused into an innovative medicines pure play company. That's allowed us to drive our sales growth in a dynamic way, increase our profit guidance today to even higher levels. And we feel really good now about the trajectory of the company coming out of the quarter. When you look at it, in the next 5 years, we've committed to grow 5% plus, and we have the growth drivers in hand to deliver that. We also have committed to be a 40% margin plus company, and we're already at 40% margin today. So we're delivering against what we said we're going to do. Now, I think one of the things we learned today is it's just really important that every one of these growth drivers hit their targets. Pluvicto's a little bit behind, but we believe that in the long run, we're on the right trajectory. This will be a multi-billion-dollar drug. And more importantly for us, radioligand therapy, this whole class of medicines we're working on, can be a significant $15, $20 billion area that we can build over time.
Pluvicto, let's just go there because that seems to be what maybe is putting so much pressure on the share price. The ADR is down more than 4% as we speak. That is your prostate cancer drug. You seem to have reined in some of the optimism over it. The CFO telling reporters this morning that the next dynamic boost in sales probably won't come until the drug tests a broader label. So I am curious, are you guys reining in the optimism? What are you doing to rein in, not to rein in, but to win over physicians to that medicine in particular?
We're certainly not reining in our optimism on Pluvicto. I think what we're trying to articulate is right now we're on a run rate, if you look at it in the U.S., of around 1.2, 1.3 billion. We're going to add a couple of $100 million overseas. And we always knew in this first indication we were going to reach a max of around $2 billion. Now, the speed at which we're going to get that ramp is a little bit slower than what we've expected from that 1.4, 1.5 level up to the $2 billion level. It may take us a little bit longer, mostly because in the U.S. now we have to get this medicine more broadly available with community oncology, which will take us some time. We're making those steps. We have over 450 centers now providing the medicine. But what that's really importantly going to do is build the base, which allows us, when we triple the size of the population we can address next year, we hope with the approval of our next indication, we'll see another ramp in the sales, again, towards a multi-billion-dollar medicine that we think will drive our growth through this decade and into the next decade. So I think we just want to, be realistic that getting to that next phase in our first indication is going to take time because we have to get into the community. But once we do that, we'll have built the foundation for all our future launches with radioligand therapies.
Okay, well, speaking of the next phase, let's talk about Kisqali, the breast cancer drug for early breast cancer, because analysts have pointed to a 3-month delay in FDA approval for it. So how confident are you, Vas, that you'll win this approval in the second half for a broad group of patients?
We're very confident. I mean, right now with the FDA, we've submitted some manufacturing adjustments that we agreed that we needed to make. We've submitted the stability data, which they always ask for when you make manufacturing changes, and we had a 3-month clock extension. Now, it's important to note with Kisqali, we were already on what's called a priority review timeline. So now we've added 3 months. All it does is put Kisqali back into a normal drug approval timeline. And we believe we're not only going to get the approval, but everything that we've seen suggests we will get the broad label. And I think importantly, what we announced this morning is we've seen now longer follow-up data that continues to show the positive impact Kisqali is having for patients of all subtypes of early breast cancer, along with an outstanding safety profile. So we believe this will be a very significant medicine. We've guided to $4 billion plus in the metastatic setting, $3 billion plus in the early breast cancer setting. So at least $7 billion. And certainly, if we continue to see the data evolve as nicely as it has, it could be much bigger than that. So we're really excited about it. We're going to get that approval, we hope, in Q3, and then we'll take it from there.
All right, better than most how everybody's so into the GLP-1 diet drugs. And you did mention on the analyst call that Novartis is working on a next generation obesity project, not advanced yet to patient trials yet. Are you willing to do now maybe a significant deal to a more advanced pipeline in this area, maybe to give Novartis a more competitive position? Roche did one last fall. It looks like it was a pretty smart move. Roche did very well yesterday and kind of awakened the market once again for the diet drugs. What about you guys and your strategy?
Yeah, we've looked really closely at this. I mean, we've been in cardiovascular disease for many decades, really one of the largest cardiovascular medicines companies in the world consistently over time. And our view is that the current wave of therapies, there are many companies out there. You have 2 very large incumbents that are already doing well, a number of companies chasing them on the injectable GLP-1 or GLP-1 combinations. And then you have oral drugs, and you have a number of companies with oral GLP-1s. In my experience, that when you have situations where it looks to be relatively easy for many companies to come into space, you're going to get payer pressure. You're going to get very difficult competitive dynamics. You're going to get rebate dynamics, particularly in the U.S. And so when we looked at that, and when we look at these deals, we think to play the long game and actually say, where can we bring really differentiated medicines that could hopefully add something new, less frequent dosing, maybe a better tolerability profile, maybe better muscle sparing attributes. And so that's where we've decided to focus our energy. I'm sure you will hear every month on your broadcast about another GLP-1 or another oral GLP-1 or GIP-1 that's come out. But that's really indicating that this market is getting extremely crowded. And I think in our sector, the companies that win are the ones that find differentiated positions with really important medicines that can replace the standard of care. And that's where we're focusing our energy.
But what would you say to investors who may say that you're missing out right now on something that is obviously turning out to be pretty huge, and that, sooner than later would be better to get a competitor in the space?
Yeah, I think when you look at it, most of the drugs we talk about, even the ones that have been recently in the news, are going to be launching at the end of this decade. So I think you have to separate investor reaction to the realities of launching medicines in our industry and developing them. And so, I would say, I think most long-run investors who understand our sector would know it's prudent to think about what is the world going to look like in 2029, 2030, 2031, when a medicine that's in phase 1 finally comes to market. And ask yourself, what would put you in a position to win at that point in time. And that's the strategy, we're thinking here. It's easy we've had it in the past with immuno-oncology, and that time we piled in, we did a number of deals in immuno-oncology. That didn't work out so well. And I wonder also, when you do that, do you crowd out other innovation within your R&D portfolio? So rather focus on places where we have differentiation, we can win, rather than being now what might be the 4th or 5th or 6th oral obesity first class drug, or maybe the 7th or 8th injectable drug. I don't think that's a good use of our capital.
Nas, you made some mention to what the world, kind of looks like going forward. And I am curious, your CFO on the call post-earnings did talk about U.S.-China relations and, no matter what the political scenarios are, what do you think the environment looks like for big pharma, the business environment post the November U.S. presidential elections? Does it matter who is in the White House? And just got about a minute here.
Yeah, I think first, we're not taking sides with respect to the election. Most importantly, we need better policies in the United States to support innovation and support patient access. We think the IRA is a flawed policy for at least the healthcare portions. We need to fix 9 to 13. We need to keep addressing out of pocket by fixing the PBM situation, fixing other legislative areas like the 340B program. That's on the U.S. side, and hopefully whichever administration and constellation of government is there takes that head on to create the right innovation ecosystem for the long run. And then I think we're obviously want free trade. We believe our ability to provide medicines around the globe is absolutely critical. China is a very important market for us. We grow double digit, but also Japan and Europe. And so we're hopeful that we can keep shaping policies that recognize that ours is a very global industry. Healthcare is a global area, and we need policies that enable us to work freely around the globe to bring our medicines to as many patients as possible.
Vas, so appreciate your time today. Thank you so much. Really appreciate it. Vas Narasimhan, he's the CEO of Novartis, joining us from their headquarters in the United States in East Hanover, New Jersey. All right, everybody, coming up on the other side of the break, our C-suite conversations continue. We're going to check in with the CEO of Ardent Health Partners. They IPO'd today. We're going to talk about that and the way forward. That on the other side of the break.
Before that, though, checking the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Former President Barack Obama has reportedly told allies that President Biden's path to victory has greatly diminished. The Washington Post quotes unnamed sources saying Obama has spoken with Biden only once since the debate and that his concern is now protecting Biden and his legacy. White House officials reportedly believe former House Speaker Nancy Pelosi backed Representative Adam Schiff's call for President Biden to withdraw from his re-election campaign. Reuters quoting a top White House source saying that Pelosi has told Biden he cannot win. Pelosi's office says that conversation was misrepresented. The Biden-Harris campaign is not working through any scenarios in which President Biden is not the top of the ticket. That's according to campaign manager Quentin Fulks, who tells reporters in Milwaukee that Biden is, quote, and will be the Democratic nominee. Still, Axios reporting top Democrats say the pressure from party leaders and friends will cause President Biden to leave the race as soon as this weekend. Meanwhile, White House physician Kevin O'Connor says President Biden is still experiencing mild upper respiratory symptoms from COVID-19. He does not have a fever and is isolating while continuing to work. And Donald Trump is set to address his party tonight for the first time since officially becoming its presidential nominee and surviving an assassination attempt, with a speech aimed at uniting Republicans in his campaign for the White House. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day right now for the S&P 500 index, down 50, 55.38, drop right now of about 0.9%. We've got the Dow in the red by 479 points, down 1.2%. The Nasdaq Composite Index down 175, a drop right now of 1%. 10-year, 4.17%, with a 2-year that's yielding 4.45%. Spot gold lower by 0.3%, 24.51 the ounce. And West Texas Intermediate crude oil down 0.1%, 82.73 for a barrel of WTI. A week-long decline in mega-cap tech stocks, broadening today to encompass small caps and financial shares as signs of economic weakness overwhelms optimism about rate cuts. Taiwan Semiconductor Manufacturing has lifted projections for 2024 revenue growth after quarterly results beat estimates. Taiwan Semi lower now by 0.9%. Among other chip makers, NVIDIA up by 1.8%. Advanced Micro Devices down 2.8%. Broadcom up 0.4%. And Intel higher by 0.9%. Again, recapping stocks lower. S&P down 48, down 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. That is your update on the markets. We also, folks, had an IPO today. Ardent Health Partners began trading around 12:38 p.m. Wall Street time. The stock opening at $15 a share. It was a red sticky, I think, on the Bloomberg, opening at $15 a share. It was below its IPO price. Just some numbers for you. The company raising $192 million in that IPO, shrinking the size of the share sale, pricing it below a marketed range. So selling 12 million shares for $16 each. This was yesterday. They had marketed about 14.3 million shares for $20 to $22 apiece. I'm looking at the stock. It is lower in the trade, but we're looking at a market cap, Tim, of about $2.2 billion.
Okay, so let's get more on the business, on the outlook, and of course the IPO with the president and CEO of Ardent Health, owner of 30 hospitals in 8 markets, 6 different states, and many more sites of care, a couple hundred of them, actually. We got Marty Botnick here in our studio. Marty, good to have you. First of all, congratulations on the IPO. This day, a long, long time coming for you and the team.
Thank you. You know, I'm delighted to be here, and it's an exciting day for our company, and most importantly, the 24,000 team members we have caring for patients across the United States. So it's a great day. Thank you.
Carol mentioned the reception. Not ideal on an IPO day when you see a share price fall when it starts to trade.
The market is down overall, so
yeah, to be fair, the market is down overall. But give us your thoughts around that and the way that it's been received, at least on the first day.
Yeah, no, we're really excited about the future of this company. We've got a strong balance sheet, modest leverage, and a strong growth profile that we're confident in the future in. And so this is something that, you know, this is a long journey. I'm an endurance athlete, and I tell my team all the time that this is a marathon, not a sprint, and any one day is not going to make or break our training. And that's how we think this. This is the starting point of a new journey for this company.
Well, speaking about endurance, right? The second time you guys filed for IPO, did it in 2018. You withdrew in 2020. Was it much better market conditions to do it now?
Well, we've been preparing for this for years, and I don't believe you can ever time the market. That's not what we were trying to do. We've got a great company that's poised for growth, and so we were really making sure that we can come out of the market as a strong public company, and we know that the performance and the growth trajectory we have is going to set us up for the future.
So the market conditions had nothing to do with it?
No, we really see the tapping the IPO market as a currency for our future growth, and that's what we're focused on.
There have only been 5 healthcare services IPOs so far this year, including yours. So there aren't that many of them. Why is now the right time to go public? And also, how do you differentiate yourself out there?
Yeah, so for us, we always said we'll go public when we're ready, and we are ready. Our team has been working relentlessly to prepare for this moment. We're going to be a strong public company. And we said we'll go ready when it's time for us to grow. And we know that the markets right now are ripe. We've got a lot of inbound interest based upon the joint venture partnerships and the markets that we're in to continue to build. And we've got multiple growth strategies to do that.
Marty, talk about the markets you're in. What is the strategy? Because my understanding is you're very much in acute care, mid-sized urban markets, growing populations. Explain kind of the thesis for the growth trajectory.
Yeah, we operate in mid-sized urban communities, and we go really deep into those communities. Hospitals are obviously the front door of what people see, but every day we see 20 times more patients in our outpatient clinics than we do our hospitals. And so we really believe in building an ecosystem of care around the person the patient as a person and a consumer. They have choice. And so not everybody has to come to the hospital for care. We want to have an ecosystem that provides for that care wherever and however they need it.
Explain that a little bit more. The reason we are, I want to ask that. Tim and I had a great conversation with a doctor at a public hospital, I should say, in San Francisco, and talked a lot about the pressure on doctors in the medical community to kind of get through their patients quickly. And as a result, they're not talking to their patients. What does it mean when you say you want to develop the care around a patient when we've all experienced in, out, I can't even get appointments, that doctors are like, well, call me back in 6 months, or how about an appointment in 6 months? How do you develop care around a patient when there's a lot of stress points right now?
Yeah, no, it's a great question. I'll give you a personal anecdote. I was training for an Ironman, and I got hit by a car. So I got to be a patient for the first time.
Running or cycling?
Cycling.
Okay.
Wow. Okay.
And so I got to be a patient for the first time, probably in my career outside of a clinic visit or something. And what I realized is we have really great caregivers in this industry, and we have challenging systems and processes. And this industry hasn't always catered to people's input or their money or their time. And so at Ardent, putting the patient at the center of everything we do has become our North Star. And so we're creating that ecosystem that we want to embrace technology to make it easier for our caregivers to deliver care to those patients and safer and more effective for patients to receive it. So that is a really big portion of our strategy and how we go at it.
How do you do it? And then as a publicly held company where Tim and I and everybody's going to be watching those quarterly reports, how do you balance making sure you provide that care and really put the patient first, but also you've got to be a profitable company, and we're all watching.
Well, I mean, having great people is the start of it, and our chief medical officer always says, creating good process workflows lead to good clinical outcomes, which lead to good financial outcomes. I've been doing this for over 25 years, and what I've always said is that if we take care of the patient, provide good service, good quality, good safety, the finances will follow, and that's what we've seen.
I want to go back to that anecdote that you shared about becoming a patient, because obviously we're glad that that wasn't a worse outcome, because that can be really bad when a cyclist is hit by a car, obviously. But how did that specifically change the way that you're doing business? Like, what changes did you make as a result of becoming a patient?
Yeah, I told that story, which we don't have time to get into, to our entire leadership. And I said, this is an opportunity. My wife said, God gave me a second chance to be here and do something with that. And so whether it was ban the clipboards in terms of making it easier for patients to get into our clinics, focusing on technology that, again, is going to allow our nurses to be able to provide more effective care. We're not immune from the headwinds that this industry has faced. There's been a lot of turnover in nursing, physician burnout issues that you were talking about, Carol.
Yeah.
Yes. And so we are just embracing technology to make that easier for our consumers. We think about it. I can control my whole world from my iPhone, no matter where I'm at. But in healthcare, it's always been a challenge.
It's not necessarily HIPAA compliant.
Yeah, well, you call somebody, you go through a phone tree, you get disconnected or rerouted. So we want to make it easy for people to access our system.
They're still using faxes to send and CD-ROMs for MRIs, for example.
And so we've introduced virtual nursing, bringing more nurses to the bedside to help take care of the more detailed, cumbersome, time-consuming tasks, so our nurses at the bedside can go and address acute emergencies for the patient. And so being very thoughtful and methodical about how we are embracing technology, supporting our team members, and creating good retention. That's what this is about.
What do you do with the IPO proceeds? What's the focus for a lot of investing going forward right now?
Yeah, no, we are a company that's poised for growth. We have built a scalable platform that we know is in demand. That there's still a lot of hospitals struggling. We've had a lot of inbound interest in terms of expanding our footprint. And so these proceeds are to help fuel the next round of growth as we grow into new communities and continue to invest in the communities that we're in today.
Equity Group Investments is the majority owner, or an affiliate of Equity Group Investments, I should say. And they're going to continue to hold the majority shareholder voting power. Just very briefly, 20 seconds. Does that give you more freedom, or does it constrain you?
Equity Group has been a great partner. They've been part of us for 9 years. And for this audience, which I know Sam Zell, I wish he could have been here to celebrate with us today. This would have been his 14th company that went public. He had that vision for us. And so they're a great partner and will continue to see us grow. We've doubled the size of the company since they've been a part of us, and we're going to continue on that trajectory.
All right, going to leave it on that note. Look forward to hearing more in the future. Thank you so much for coming in. The President and CEO of Ardent Health, Marty Botnick, joining us in studio. As we mentioned, an IPO today. It's first day of trading, stock down right now just about 2.5%. We'll continue to track it into the close. Hey, coming up next, we're going to get into a busted turbine, wind turbine?
Yeah, wind turbine off of Nantucket. It's creating a lot of issues.
All right, one more thing. That's next on Bloomberg Business Week.
Company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. A major sell-off underway on Wall Street right now with the Dow, the S&P, NASDAQ in the red. A week-long decline in mega-cap tech stocks is broadening. Case in point, Apple. That stock moving lower now by 2%. In the meantime, sources do tell Bloomberg that Apple's having discussions about licensing more films from major Hollywood studios as it looks to bolster its Apple TV Plus streaming service. Shoppers spent $14.2 billion online during Amazon's 48-hour Prime Day sale. That is up 11% from a year ago, and in line with estimates, according to Adobe. Amazon shares today, they are lower as well. Again, part of that broader tech sell-off. Amazon right now down by 2.3%. Consumers were taking advantage of steep discounts to update their electronics, apparel, and small home appliances, according to Adobe, which tracks online spending across all U.S. retailers. Netflix will be reporting after the close of trading. Yes, Bloomberg Television and Radio are going to be all over that report when it breaks. Netflix shares ahead of earnings today. We've got Netflix trading lower, down now by about 0.7%. On average, Wall Street analysts are forecasting second quarter subscriber additions of about 4.9 million. Semiconductor manufacturing has lifted projections for 2024 revenue growth after quarterly sales beat estimates, reflecting its confidence in the longevity of the global AI spending boom. The chipmaker to Apple and NVIDIA now expects sales to grow more than the maximum mid-20% it had guided toward previously. Shares of Taiwan Semi down 0.7%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 991 Newsroom in D.C. Hey, Amy.
Hi, Tim. White House physician Kevin O'Connor says President Biden is still experiencing mild upper respiratory symptoms from COVID-19. He says the president does not have a fever and is isolating while he continues to work. We're also learning former President Barack Obama has told allies in recent days President Biden's path to victory has greatly diminished, and he thinks the president needs to seriously consider the viability of his candidacy. The Washington Post reports Obama has only spoken with Biden once since the debate. White House officials believe former House Speaker Nancy Pelosi backed Representative Adam Schiff's call for President Biden to withdraw from his campaign. Reuters cites a White House official with knowledge of the matter, saying Pelosi also told Biden he cannot win the election. Pelosi's office says her conversation with the president was misrepresented. Still, Axios is reporting top Democrats say the pressure from party leaders and friends will cause President Biden to leave the race, perhaps as early as this weekend. And tonight is the final night of the Republican National Convention. Donald Trump is set to take the stage in Milwaukee to formally accept the GOP nomination for the White House. It will be the first time he addresses the nation since surviving an attempt on his life Saturday at a rally in Pennsylvania. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, Amy Morris, thank you so much. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters. This story popping up on our radar, and it has to do...
It's popping up on beaches.
Can we just read that first paragraph?
Yeah.
It's pretty wild.
Okay, so our own Jen DeLewin, Cameron Baker writing that shards of a broken wind turbine blade washing ashore in the wealthy enclave of Nantucket Island are ramping up political risks for an industry already struggling with public acceptance and putting pressure on the companies involved.
Yeah, the story goes on to report that more of the damaged blade at the Vineyard offshore wind farm broke free from its turbine and plunged into the water. That happened this morning following a pretty tense yesterday evening meeting between Nantucket residents and company representatives. Even as workers tried to pull chunks of the blade from the sea, the facility's owner warned more debris could land on local beaches. And we should point out, we are seeing some equity reaction among GE Vernova because they made the compromised turbine. It dropped 9%, more than 9% in yesterday's session, and losing another 3.5% in today's trade.
Yeah, it's at least the second incident involving the company's massive Haliade X turbines, with a blade breaking in May at the offshore Dodger Bank A wind farm. That's near England. And it's interesting because, you know, the whole idea of wind energy is that it's renewable and it's something that's safer and better for the environment than using fossil fuels to create electricity. And this incident is providing fodder for those folks who say, you know what, it's not a perfect solution. And it's also a very politically sensitive one because you have folks who argue that these blades disrupt marine life, they disrupt wildlife when it comes to birds, and they don't want to see them off the shore of wherever they live.
I should point out the Federal Bureau of Safety and Environmental Enforcement did order the suspension of construction and power production at the site 14 miles off the Massachusetts coast, and investigations are underway into the cause. Tim mentioned some of the industry critics of the wind industry, and that includes Donald Trump, who has a long-standing disdain of wind turbines. And one of the things that we talk about, we'll see what he has to say at the RNC tonight in his acceptance speech, but we do wonder about what will environmental policies potentially be under if Donald Trump is back in the White House. It's just one of the many things that we're wondering about.
They drilled for oil off the beaches that I grew up going to in California, and there were beaches closed many times as a result of oil spills when I was growing up. So nothing's perfect.
Exactly. All right, coming up next, folks, for those of you watching on television, the close coming your way in just a moment. Tim and I continuing on Bloomberg Business Week. We're counting down on Netflix earnings. Do not go anywhere. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are just about 1 hour away from the closing bell on this Thursday, July 18th, 2024. I'm looking at stocks. They're pretty much bouncing around their lows of the session, so we are seeing a fair amount of selling on this Thursday. This as we count down also to Netflix earnings after the closing bell. Good afternoon, everybody. Carol Master along with Tim Stenevec.
Hey, we're going to get a market update from Charlie Pellet in just a minute, but we're seeing the S&P 500 down 0.8%, and the Russell 2000, Carol, down close to 2% today. This following quite a few days, not yesterday notwithstanding, of gains for the Russell.
Yeah, and bouncing around on the equity markets overall. Netflix shares, which report after the close, they were up 1.5% at one point. They're now down about 0.5%. But we're going to have a preview and talk a little bit more about those numbers and what we need to know. And of course, we'll be breaking them down after the closing bell.
Okay, we chatted with the CEO of Novartis a little earlier. In just a few minutes, we're going to talk about the battle for supremacy when it comes to those GLP-1s. Yes, those blockbuster weight loss drugs. So we're going to get the lay of the land from Madison Muller in just a few minutes.
Yeah, Roche was moving big time yesterday on its plans for its GLP-1. We're also going to check in with the mayor of Oklahoma City. We love talking to mayors, really getting an idea of what's going on with various city citizens. He's going to tell us about what is going on, the economy, and also his city has been chosen as a venue for the 2028 Los Angeles Olympics.
Wait a second. Oklahoma City,
Oklahoma,
is going to be a venue for the Los Angeles Olympics?
You heard me correctly.
Okay, well, we'll take out the map and we'll look when we get to the mayor in just a few minutes. All that and more over the next 2 hours. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Thank you very much indeed. 58 minutes to go now ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index, yes, Russell 2000, all declining. A week-long drop in mega-cap stocks, mega-cap tech stocks, broadening today to encompass small caps and financial shares as signs of economic weakness overwhelms optimism about rate cuts. S&P right now down 43, drop of 0.8%. The Dow down 446, down 1.1%. And the NASDAQ Composite Index down 144 points, down 0.8%. Cannot ignore the Russell 2000 as it has been on a tear in recent sessions. Today, that index down 1.8%. 10-year 4.19%, the 2-year 4.46%. Gold down $7 the ounce to $24.50, a drop of 0.3%. And West Texas Intermediate crude lower by 0.3%. Subhadra Rajap is head of U.S. rate strategy at Societe Generale. She says the Federal Reserve is definitely walking a tightrope.
They have to be very, very careful. If they cut too aggressively, that could again lead to froth in the market. We've already seen an easing of financial conditions. You know, if you look at the equity market, it's extraordinarily, it's performing really well. Credit spreads are very, very tight. So you're looking, and the dollar is very strong. So all of these metrics lead us to believe that financial conditions are easy. So they have to be careful about cutting and not causing financial conditions to ease further.
Subhadra Rajap of Societe Generale. By the way, you can hear more of the conversation on the Surveillance podcast, which you can download wherever you get your podcasts. Netflix, after the close of trading on average, analysts forecasting second quarter subscriber additions of about 4.9 million. Netflix ahead of earnings, down now by 0.4%. Recapping, stocks lower across the board. S&P now down 44, down 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Hey, there's a lot happening in Ed Ludlow's world
always
today.
a lot happening in Ed Ludlow's
First,
world. This is why he can't take off any day ever.
Okay, yeah, that's true. Fortunately, he's here right now. Shares of EssilorLuxottica finished higher in Paris trading today. This after the FT reported and Bloomberg confirmed that, according to people familiar with the discussion, Meta Platforms is in talk to take a minority stake in the company. Reminder, Luxottica makes Ray-Bans, Oakleys, and glasses for many other brands. It is the world's biggest maker of eyewear, after all. And oh yeah, after the bell, Netflix is going to post second quarter earnings. So we're going to get to both of those things with Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV. He joins us from our San Francisco bureau. Ed, at first blush, many people who don't follow the industry closely would say, wait a second, the maker of Facebook is interested in an eyewear company. But I got to tell you, those Meta augmented reality glasses that they partnered with Ray-Ban on, I was in a meeting with someone recently. He really liked those glasses. He loves them. Talk to us a little bit about what they're doing.
So I actually don't own a pair of the Meta Ray-Ban glasses, but famously, I was randomly pictured in the Wall Street Journal because they had borrowed a stock image from Bloomberg on a shoot that I'd done wearing them. So anyway, point being,
I hope you get royalties for that, Ed.
I can tell you that I do not get royalties for it, but anyway, of internet fame, you can see the photo of me wearing them, and everyone's like, who's this idiot? He must be the... This is why I'm telling this story. At the time, this was like 2 years ago, they were like, Ed Ludlow must be the only idiot who bought these things. Wrong! They've ended up being a really big success for Meta, and and I've been down to Palo Alto and tried the latest versions, etc. This Luxottica story about Meta taking a stake, which I think our sources have confirmed as well, isn't a surprise though. So go back to the April earnings transcript of the call, and Zuckerberg was pretty explicit that if they're going to make progress in this area, which has been a success, they're going to need to offer lots of different glasses of different designs and styles. Because look, I'm wearing glasses right now for our video audience. People wear different styles of glasses, and so this kind of makes sense, right?
I guess. I don't know. Wait, so the Meta Ray-Ban sunglasses, have they done well?
They've done surprisingly well.
Okay.
And let's be honest, Meta, formerly known as Facebook, has been really inconsistent in its strategy. It was a social media company. Then it was focused on the metaverse, where we interact with one another using virtual and augmented reality headsets. Actually, the glasses are much more simple than that. They have a camera functionality for both picture and video, and microphones and speakers in order to communicate with Meta AI. They're a much more simple product, and it's one that they clearly seem determined to double down on, as they also work on their AI ambitions and their metaverse ambitions at the same time.
Yeah, Carol, I mean, one of the guys I had a meeting with a few weeks ago, not about this at all, but he is in the tech industry and he had them, and I was talking to him about them, and he said what he likes about them is that he can listen to music and take phone calls without actually having like AirPods in. Yeah. So they have little speakers in them so you can do those things. And you say, hey, Meta, take a picture or do whatever. So it's like a personal assistant. Ed, why have these been successful but Snap's spectacles haven't?
That's a fantastic question. Google Glass, RAP, this idea that we wear glasses, and again, for our video audience or non-video audience, I'm holding my glasses, that do more simply through the addition of a speaker or camera, it ain't new. But for whatever reason, Meta has found the price point and functionality that seems to be resonating. And I guess that they very quickly changed the bigger picture story at the company, where they've been really seriously cutting costs and cutting projects that burn cash, to now sort of investing in these areas, bringing new generations of the product each year. And, I had one very good source at Meta who basically told me, like, yeah, it surprised even us. Like, this is something that people apparently want.
Why does it make sense, though, for them to take a stake? Is it just to have more control, more involvement? I mean, this isn't... Yeah. Is it a step towards owning a bigger chunk of the company? I don't know.
Yeah, and I would also say, like, remember, this is reporting both by us and originally the FT citing anonymous sources. Meta hasn't really explained it, other than the parent company, Luxottica, that makes Ray-Bans, has very broad brand appeal. They have a lot of designs. And I just go back to that quote, which I just had in front of me from Zuckerberg, and I've lost it. But he basically said, if this is going to work, we need to offer lots of different glass designs. And I guess that if they take a stake, they'll have a more direct say in the development of that technology, rather than taking the existing Ray-Ban Wayfarers and trying to do something different with them.
Like almost 20 years ago, Oakley had some MP3 glasses, and Oakley's owned by Luxottica. I know. They were like kind of Terminator looking. I remember those being, they were super expensive at the time. I mean, this was like this was before the iPhone. This was like barely, the iPod
back.
was
I just
huge.
want an old watch. I want glasses
They looked
glasses.
pretty cool. It was like kind of like Dog the Bounty Hunter. Remember Dog the Bounty Hunter? It's like what he would wear. Oh, I think he wore those. Yeah. That's what they look for.
Hey, listen, before we let you go, we had a great conversation with Geetha Ranganathan of Bloomberg Intelligence about Netflix. It's our focus after the close. What's front and center for you on Netflix today?
Yeah, like the strategy to gain 9 million users in the first quarter of the year was the password crackdown, right? Just last night I was watching Netflix. I do have some free time to do that. And when you log onto the app on the Samsung TV, it comes up with, hey, why don't you get this new additional cost option so you can open up access to other members of your household and non-household members. In other words, pay for a greater access to more people. That's how they drove subscriber growth, because they weren't giving consumers a choice. How do they keep subscriber growth going after that? And new content is interesting, but I think the street's estimating about 4 million new subs. That's down from 9 million 1Q. And for me, that's the story. Like, what's next? What's the strategy for growth?
Are you going to watch the hot dog competition? That's all we want to know. Apparently they're going to be doing, Geetha said there's like a hot dog stream. I don't know.
Like, of all of the intellectual property they could have gone out and got, I don't know that resonates with me, but no.
Hey, IP is IP, whether or not you argue that it's intellectual.
Eyeballs are
not.
eyeballs if
Yeah.
it brings them in, right? If people want to see, a hot dog competition.
All right, good stuff. Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV. He's going to be back with us a little later when Netflix earnings break, if they break, just after 4 o'clock Wall Street time, which we think they'll do.
We look forward to it.
Yeah.
Speaking of eating a lot of hot dogs, which gets us to insatiable demand for weight loss drugs, has made the market so feverish that any positive mention of a potential obesity therapy can send a company stock surging. We saw that certainly yesterday. Roche Holding jumping nearly 6% in the trade after an experimental pill showed meaningful weight reduction in an early stage study among obesity patients. That was yesterday's trade. That was one of my gainers yesterday, Tim.
Madison Muller is here, waiting patiently in the Bloomberg Interactive Brokers studio. She's Bloomberg News health reporter. And I don't need to tell you this if you're a regular listener or viewer of our program. She knows everything about GLP-1s. She is here to
Do you
help
get
us
lots of questions
understand.
from friends and family?
Oh yeah,
yeah.
I feel like there's questions daily. There was a while where my aunt was like texting me questions every week just about the drugs, and then she'd be like, "Oh, I saw this thing about side effects. Like, have you heard about this?" And I'm like, yes, I did write an article about that like a couple months ago.
Thanks for reading my
okay.
stories.
Yeah. I'm like,
to Bloomberg.com.
Well, I also have some questions for you about Botox and sweat, which we're going to talk about as well. But before we get there, Novo and Eli dominate the market, at least right now, with Wegovy and Zepbound, respectively. But a bunch of companies are going after them. What's Roche doing?
So Roche acquired a company called Carmot Therapeutics to get into this red-hot obesity market. And so Roche is developing a pill and also a shot. And as we've talked about on the show, pills are seen as one of the next big things in this market because they are easier for patients to take. A lot of patients prefer pills over needles. And so, I mean,
raise your hand. Everybody raise your hand. Yes.
Doesn't really need to be said. But, it's interesting. There are a lot of other companies that are trying to develop pills now versus trying to come in with a shot when we already have 2 really, really good shots on the market. And so that is what Roche is trying to do. That's what Viking and Structure and Zealand and a lot of other companies are trying to do.
I mean, is the market going to be big enough? Because, I mean, we joke about it, but the truth is, people are finding, okay, you lose weight, it means it's good for a lot of other serious health ailments that can be really tough on people. So is it the market continuing to grow in terms of the market size so that it can feed, no pun intended, a lot of players in the industry?
Yeah, I mean, that's definitely what we think. That's what experts think. I mean, the demand is so insatiable. It just doesn't really seem like there's a ceiling for these drugs. And as we've seen, 2 companies are having a really hard time supplying even the demand right now. I mean, the supply shortages are still ongoing. So that indicates, there's room for other players to come into this.
We asked Vas Narasimhan, the Novartis CEO, a little earlier today about this because they're not in the market right now. And we asked him the question of whether or not they're missing out. And he basically said, the drugs that you hear about every few months, not the ones that are already on the market, those aren't going to be out till 2029, 2030. And where they see the opportunity is to differentiate and actually address some of the side effects that these drugs that are currently on the market have. What do you make of sort of that strategy?
Yeah, I mean, that's a good point. It's like when especially with the Roche news yesterday, that was a phase 1 study. It's an early study, a small study. That drug is likely still years from hitting the market. And so when companies are looking at the next opportunity, it's like, there's going to be ample opportunity to address the side effects or different formulations or less frequent dosing. But on the other hand, I've also heard analysts, experts, investors say, we just want companies to get a foot in the door. Like, it can be anything. It can be buy something and get into this market now and then keep working on the science and just capitalize on the opportunity that you have in front of you right now.
How many little, it's funny, I think about our space conversation yesterday and satellites, right, in low Earth orbit, and how many hundreds of companies, I feel like, from that documentary, that are out there.
Wild space.
Wild space. But I just also think about this market. How many companies, smaller players, are trying to create something at this point?
A lot.
A lot.
Yeah, I mean, a lot. And there's a lot of private companies, too, that we at Bloomberg maybe aren't talking about as often or covering as frequently. But there's a lot of private companies that are doing pretty interesting things as well. Including here in New York, there's like a company, Calliope, that is pretty interesting. So, yeah, there's a lot going on.
Well, what do we know about the durability of these drugs in the sense of if somebody takes them at one point and does have success with them, will they have to take them forever?
I mean, it's still a question. Like, there are studies, and from what we hear anecdotally, like when people go off of the drugs, they gain weight back.
I mean, that's great for the drug companies.
Yeah, right.
It's like, truly though, it's like
kind of like
that's
that's
recurring
drug,
revenue.
Right?
Yeah. But I mean, the companies are all studying how to maybe make these results more durable, or are there ways to combine drugs? Do you step down to a less strong dosage after you reach your goal weight? Things like that. They're still trying to figure out how to. It's not necessarily a problem, but what comes next after this, especially for patients who want to keep the weight off, ideally.
For the moment, Novo and Eli Lilly have nothing to worry about?
For the next couple of years, probably not. I mean, they are really still the front runners in this market.
If you had to pick one or two other companies that you think the investing audience should keep, not suggesting anything, but keep on your radar really closely, who would it be?
I think I've mentioned Viking before. Viking is just an interesting company, and a lot of analysts bring that one up as one to watch. Zealand and Boehringer Ingelheim are also pretty interesting. Yeah.
Okay, I promise we talk a little bit about other needles. These are for Botox. And the reason I'm talking about this is because the Prognosis newsletter, which you contribute to, and you can sign up at bloomberg.com/prognosis or on the Bloomberg terminal, just hit subscribe right there. The heat wave that we're seeing in New York, turns out it's, at least according to the plastic surgery folks you talk to, causing some demand for some underarm Botox?
Yes. So, I mean, Ozempic face, another thing that has apparently helped Botox sales. Well, now the heat wave in New York is also maybe a boon for Botox sales.
Botox pits.
Yeah. I mean, I say this in the newsletter. I'm from Chicago. It gets warm in Chicago over the summer, but not quite like this. And the last few summers living in New York, I'm like, this is horrible.
It's terrible.
Horrible. Yeah. So I'm always searching for ways to not show up to the office drenched in sweat. And it's
hard.
Apparently, plastic surgeons are seeing an increase in patients coming in asking for underarm Botox, which is really, really effective for preventing sweat.
For a few months.
I had no idea.
For a few months,
yeah,
effective.
Better than deodorant. Yeah. Deodorant lasts like a few minutes in the summer in New York.
Yeah, but deodorant doesn't cost $1,500 to $3,000.
That's a good point.
Yeah, but you're not sweating. What is that worth? Millions, right? Priceless.
You know what?
I mean,
just come to the office. There's air conditioning.
The surgeons are saying that their patients are saving money on dry cleaning, so there you go.
The surgeons. How much dry cleaning are these patients doing?
It's another miracle drug, Botox.
Right.
All right, gonna leave it there. Hey, Madison, thank you.
Thank you.
So appreciate it. Madison Muller, Bloomberg News health reporter, and do check out certainly her newsletter as well. Up next, we get the latest on the ground at the RNC from Margaret Talov. She's director of the Institute for Democracy, Journalism, and Citizenship at Syracuse University. So we're talking RNC. We're also talking about misinformation when it comes to politics. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got 39 minutes to go until that closing bell clangs on Wall Street with the Dow, the S&P, NASDAQ, worst level of the day right now. Right to the numbers, S&P down 61, a drop there of 1.1%. 55.27 is where the S&P now stands. We've got the Dow down 578, down 1.4%. NASDAQ lower by 214, down 1.2%. 10-year 4.20% with a 2-year that's yielding 4.47%. Gold now down $17 the ounce, 24.41, a drop of 0.7%. And West Texas Intermediate crude oil down 0.5%, 82.40 for a barrel of WTI. A week-long decline in mega-cap tech stocks broadened to encompass small caps and financial shares as signs of economic weakness overwhelms optimism about rate cuts. As for the overall market backdrop, Linda Dissel is senior equity strategist at Federated Hermes.
We have expected, as many have, a broadening market as this year progresses. But if you're just moving from one area to the other, you're treating the market like a casino. And we still expect the broadening, though. Just this is trader short covering, and much of what I'm reading is it's technical.
Linda Dissel of Federated Hermes. U.S. shoppers spent $14.2 billion online during Amazon's 48-hour Prime Day sale, up 11% from a year ago and in line with estimates, according to Adobe. Amazon shares today, all part of that broader tech sell-off. We got Amazon right now down 2.6%. So again, recapping, stocks lower, S&P down 1.1% at 55.21. The 10-year right now, 4.20%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. Redhead crossing the Bloomberg terminal that we wanted to get to. OpenAI is in talks to Broadcom to develop a new AI chip. This is according to a report in The Information.
Right, just a headline right now. Looking at shares of Broadcom in the trade, we're seeing the stock just up about 1/3%. Just trying to see if there's any kind of blip to the upside. A little bit of a blip. It did bounce higher, spiking, but backing off of that. So we'll keep an eye on it as we head into the close. Just about 37 minutes to go here.
Okay, there are signs, according to The Information, that the effort to build a new chip is actually taking shape, starting within OpenAI rather than via a separate venture. Very interesting. Check this one. It's on the Bloomberg terminal, even though it's in The Information.
Sounds like our world, right? Like partnerships and just trying to figure it all out. Hey, listen, you know our focus is certainly the RNC. Donald Trump is set to address his party tonight for the first time since officially becoming the presidential nominee and surviving an assassination attempt with a speech aimed at uniting Republicans in his campaign to defeat President Joe Biden.
Meantime, President Biden faces a growing drumbeat of calls from lawmakers for him to stand aside, with the Washington Post reporting today that former President Barack Obama has told allies that Biden needs to consider his viability as a candidate.
Margaret Talev is the director of Institute for Democracy, Journalism, and Citizenship at Syracuse University. She's been on the ground in Milwaukee. She is also a former colleague, senior White House correspondent for Bloomberg News, and contributes to Axios. She joins us from the RNC in Milwaukee. Margaret, so great to have you here with us. How are you?
Thanks. It's so great to be back home, as it were. I'm doing great, but this has been an exhausting week, as you can imagine. This seemed like sort of the most least action-filled election year for so many months. It was like, okay, we know Donald Trump, we know Joe Biden, we know the contours of this race. It's about turnout. What else could happen? That's every reporter's mistake. In the last 3 weeks, we've seen a complete turn of fortune. Donald Trump and his followers here at the convention feel that all the winds favor him now. And so you see a tremendous amount of almost jubilation and enthusiasm in the convention hall. At least these folks think it's now his race to lose.
Yeah, it's hard not to feel whipsawed. The headlines, it feels like over the last couple of weeks, changing very dramatically, you know, post the debate with Joe Biden and a really tough showing there. And of course, the assassination attempt on Donald Trump. And then, of course, just the momentum that we're seeing at the RNC. Having said that, are you getting ready to be whipsawed again in terms of maybe Joe Biden stepping aside, at least for the next run here come November?
We might very well. I think we all need to be prepared for any contingency. What we're hearing here on the ground from folks around the former President Trump and his orbit, is that they don't think it makes any difference. They're running against the Biden administration and Democrats' record and the inflation and some of the other economic factors of the last few years. They think if it's not Biden, they're most likely to be running against Harris. And if they're running against Harris, they're running against Biden. They're saying that even if it were to be someone else, they think they would still run against the Biden record. But in reality, I think they have not really prepared for a different contest that is not against Joe Biden or Kamala Harris. So the next few days are going to be obviously very determinative, and nobody knows what's going to happen or when it's going to happen. And that is the only wild card, per se, at this convention. You know, Vance, well received last night. I would say not jubilant, but the crowd liked him and was interested in his message. And I think outside of the convention hall, it's a message they are banking on that resonating in Rust Belt states.
That's so interesting to hear that. I want to go back to what you were saying about a potential change at the top of the ticket. What if there isn't a change at the top of the ticket? How does the nominating process move forward when there is so much division within the Democratic Party, at least in certain levels, and also when, you know, every little moment of the current president's day is sort of seized on for signs that he's not fit to run?
Yeah, I think you're asking the question that a lot of journalists covering this race are asking, and that a lot of Democrats who have a vested interest in this race are asking. I mean, there are a few different ways that if President Biden decides that he's going to continue his reelection, but there's a few different ways that things could emerge. Either, number one, they could do a virtual nomination. There is a possibility that that could happen as soon as next week, but it just doesn't feel like that's where the mood of Democratic delegates is now. He could be nominated at the convention, or there could be a challenge. So those are essentially the scenarios that all of the Trump campaign's planning is for a campaign to run against Joe Biden. So I don't think they're looking at switching it up, but I think even if Biden decides to stay in the race, his campaign is going to need to rethink the way they are messaging in the final weeks of the race, because right now, the majority of the American public, and it seems that in some polling, majority of Democrats are not confident that he's best suited to carry on for the next 4 years.
Well, the presidential race is on, so is the messaging race. I'm looking at your election graph report that you guys have put out. More than 2,200 Facebook pages have run ads since last fall mentioning U.S. presidential candidates, collectively exceeding 1 billion impressions, billion with a B, as of the end of April. That's according to your analysis. But one of the things that you guys identified that is troubling is these inauthentic actors. Information versus misinformation, it is critical, especially when it comes to a presidential race.
Oh, that's right. I'm so glad you're into this project. I'd love to tell you a little bit about it. My institute at Syracuse University, which is focused on the connection between people's civic involvement, their trust in government, and their trust in the news, right? That's our sweet spot. Was very happy to be able to apply for and receive a grant from a company called Neo4j. If you have not heard of these guys, they're really interesting. They've been involved in everything from NASA projects and projects in London to that great reporting on the Panama Papers. And what they are is they are an analytics and graph database company. And if you think about spreadsheets or kind of old school research in terms of rows and columns, they allow you to see in sort of more of a 3D way the hidden connections between actors. And you can see patterns that are hard to uncover. My lead researcher, my colleague Jenny Stromer-Galley, and her team built these searches, these algorithms, to look at messaging right now in paid ads on Facebook and Instagram. And that is what they found. A portion of these ads around the campaign involve inauthentic influencers. These are groups that seem like they're unique and different, but they really appear to just be shells of other groups. They're carrying the same, often misleading videos or texts. Some of them are spreading financial scams. And as social media platforms like Facebook seek to shut them down, there's another one under a slightly different name just ready to pop up and carry on. In some cases, these could be misleading voters about policy, and often they are. Sometimes they're just financial scams, and so they're taking advantage of people's interest in the presidential election in order to capture voluntarily their credit card information, their CVC code, and then they're getting bills for things they never thought they were authorizing. And so you really, it is really voter beware, because they're not just trying to manipulate your vote, they're just trying to take your money too. And that's not the majority of ads, but it's impossible to tell the difference when you're just online and trying to get information.
We only have about 40 seconds left, but I'm wondering if you think that the social media companies are doing enough.
The reason our research only looks at Facebook and Instagram is it's the only research we have access to. And my group is not an advocacy group. We don't lobby for anything. But I will tell you, just as a journalist, Congress needs to get much more involved in compelling these social media platforms, other ones, to make this kind of information available. If they truly want to stop it, it's impossible to stop it on their own if they don't, if the public and journalists and researchers don't also have access to do this sort of tracking.
I feel like journalists know this. We have to really understand our sources and where things are coming from. That's kind of journalism 101. But even as, voters, citizens, especially in a social media world where we get so much of our news from social media, you have to be really smart about understanding exactly where the source is. And that's true, certainly when it comes to political campaign messaging. Margaret, great to reconnect. Really appreciate your time today. Margaret Taleb, she is director of the Institute for Democracy, Journalism, and Citizenship at Syracuse University, and of course, former senior White House correspondent here at Bloomberg News, joining us from the RNC in Milwaukee.
Coming up next, we drive to the close with Max Wasserman. Before that, though, a check on the latest world and national news. Amy Morris is in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. Democrats at the highest levels making a critical push for President Biden to reconsider his election bid. But New York Governor Kathy Hochul reiterated her support for President Biden's election campaign.
Once he said he's in, my view is he's going to be in. He's staying. As long as he's staying in this race, I am with him. He has delivered for New York in extraordinary ways that I look forward to talking about even more. And I believe in his vision for our country. So I am with him as long as he wants to do this, and he's been an extraordinary president.
Kathy Hochul speaking with Bloomberg's David Gura. Blackstone executive and billionaire Democratic donor John Gray says he hopes President Biden reconsiders his physical demands.
Well, the president is a good man. He has been a wonderful public servant. He's gotten the votes in the Democratic primary. This is his decision. But I would hope he considers the really extreme physical toll of this job over the next 4.5 years. And so, again, his call, but it is a very challenging physical job.
And some Democratic donors have said they will withhold any future contributions until Biden's off the ticket. In other news, there may be some important movement in the 9-month war between Israel and Hamas. We learn more from Bloomberg's Nathan Hager in Washington.
Bloomberg News has learned Israel is discussing a transfer of control of the Rafah border crossing between Gaza and Egypt to the European Union and the Palestinians. Sources tell us Israeli officials are discussing the proposal with the U.S. and EU, even as Prime Minister Benjamin Netanyahu has dismissed the idea in the past. Netanyahu is due to meet with President Biden next week and address Congress in his first trip outside Israel since the war began after the October 7th Hamas attack. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are just about at the lows of the session. 20 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, Russell 2000, all very much in the red. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks under pressure today with the Dow currently down 524 points. S&Ps are off by 0.8%, and NASDAQ is also down 0.8%. The U.S. 10-year yield at 4.2%. Gold is down 16. Oil is in the red. And Bitcoin, that's also down by 2%. Among the main 11 S&P sectors, only energy was in the green. Healthcare and consumer discretionary were under pressure. And leaders to the upside in the Dow, Chevron and Intel, while Goldman Sachs and J.P. Morgan each fell 3% and led to the downside. After earnings, Domino's plunged 14%. And in the chip space, the information reported that OpenAI has talked to Broadcom about developing a new AI chip. Wrapping things up, Netflix and Intuitive Surgical report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session on this Thursday, July 18th. Charlie just breaking down the numbers. We're just coming off our lows of the session, but it's definitely more of a risk trade, or risk-off trade, I should say. If I look at the S&P 500, though, if I pull it up on the Bloomberg, I've got, most names lower, 381 names to the downside, Tim, 120 gaining ground, 2 unchanged.
It's pretty amazing to see. Oh, thank you for turning on my microphone.
Assist, turning on your
Carol.
mic.
What I was saying, it's pretty notable to see the broad-based decline today, also hitting the Russell 2000, as we just heard from Charlie. Let's see what Max Wasserman has to say about it. He's founder and senior portfolio manager at the RIA Miramar Capital. He joins us from Northbrook, Illinois. Max, how are you?
I'm doing well, thank you. How are you guys?
We're doing pretty well. Hey, we're going to get to your stock picks because you sent us, thanks for sending us some really interesting companies to talk about in a second. But I want to talk big picture first because you argue that the haves are doing pretty well in our country, but the have-nots are not doing so well. Talk a little bit about that.
Well, when I say the haves, what the ability is to trade down, what we're seeing is people who have the resources are trading down in their picks. So they still have the ability, but inflation, high-cost real estate is affecting their choices more. People who don't have that ability, they're really suffering more. I mean, if you only have $10 and inflation's higher, then it's hitting you harder than somebody who has $100 who has more flexibility. So what we're seeing is the people in the lower to middle class are being hit by the inflation, the rising cost, and their ability to navigate through this expensive inflationary environment is much harder than somebody who has much more discretionary income.
Always important to point out, and we have been saying, I feel like fairly regularly too, that we have to remember that our society, not everybody's in the stock market. A lot of people are not, and that Wall Street is not necessarily Main Street. Why are you, though, thinking that it's really important to make the point that you just did?
Well, I think what you just said. I mean, basically, the stock market, is reflecting financial assets and everything that goes into that. Federal fund policy, fiscal policy. But if you look at people who are living the day-to-day and they go to the grocery store, higher inflation, higher cost of goods, milk, gas, it affects their day-to-day and it makes tough choices. Where people, again, who have the ability. So if you look at where people are shopping, you look at, are they trading down? So you look at companies that can benefit from the change in consumer spending. So that's really the key thing, who has the money and who doesn't have the money. And what we're still seeing, even in this environment of the haves, the stock market is extremely well off right now. And I say extremely because you're still looking at an index about 17% up. So people who have money in 401ks, they're not feeling hurt. Even with any pullback in the market, they're feeling like they're doing well. But people who don't have money in the market, who have to go to the grocery store, who have to pump the gas, they're feeling inflation a lot more tangibly.
Interesting. Yeah, I mean, it's not something. It's interesting that we're talking about this now, when inflation has come down, Max, then,
right.
you know, and you know, because we were talking a lot about this over the last 18 months, but the Fed is, I'm not going to say it's winning, but every person we talk to pretty much says there's going to be a soft landing, and the Fed chair is pretty confident that we will see inflation return to that target 2%. Why is this on your radar right now as we speak?
Well, I think what you're going to see is you're going to see a hiccup. You're always going to do it. There's no such thing as a pure smooth landing. It could be sparked by politics. It could be do anything. But with these valuations levels at this high, at what we have right now at the S&P, the NASDAQ, anything that hiccups this market is going to pull it back. But the reason I'm bringing that up is because everybody knows it, and everybody's been concentrating their investments in the top 7 technology stocks. Like, there's a big discrepancy between the S&P 500, which is cap-weighted, and the equal-weighted index of the S&P. And the general market itself has been struggling, but the market caps of these big, large tech companies have been doing extremely well. So when you listen to companies' reports, as I do, you listen to conference calls, you're seeing the majority of companies are being hurt by inflation. They're being hurt by the cost of goods, and that reflects the consumer. But the high tech has been immune for now.
Do you need to be, or should we be worried about the rotation? But what's interesting, even today, we've seen mega cap tech pulling back, but we've also, small caps were on a move to the upside, a rise, a little bit of a trend there, but we're seeing small caps financial shares also weighed down today. Concerns about economic weakness. Is there something, though, in the economic outlook that should make us start to be, as investors, a little bit more worried and concerned about some kind of economic downturn?
Well, I think there's 2 ways you look at it from the investors. From people who are relying on income, like fixed income or money markets. Right now, they're getting about 5% on short-term money markets. So if the economy were to slow down and the Fed cut interest rates, that's going to affect those people looking for what I call safe money market returns of 5%. So that could affect them. Although a rotation in the market is perfectly healthy. When you look at these valuations of these top tech, they're 37, 40 times earnings. When that money comes out, it's going back into companies that have been hit hard. You look at healthcare, you look at financials, you look at consumer staples. These stocks have already reflected this slowdown in the market. So when money comes into them, that creates opportunity. So if we look at risk reward in the market, we think you have better reward outside of technology than in the fact that you have technology.
So let's go there. Hershey is one of the names that you like. It's up 3% year to date. Tell us why Hershey.
Have you ever had a s'more? Come on, Carol. Why Hershey?
How do you not like s'mores?
Yeah.
All right. I got
Sorry.
it.
Gotta love those.
What's
Sorry,
the
Max,
investment
please.
thesis beyond some more?
But we're dividend investors, so we're looking for companies that are mispriced, paying a good dividend. So right now it's paying about 2.8%. The average dividend increase over 5 years has been 12%. Traded roughly 20 times earnings. 5-year average is 23, and it's been hit by cocoa prices. So cocoa prices and inflation's been hurting them, but their organic growth is still 2 to 4%. So when I look at a company that's trading at a discount to its 5-year average, underlying growth is still there. It's paying me a growing dividend. The year high on the stock was roughly about 248. So I'm not buying it near the top. I'm actually buying it near the lower half where it's been trading. I think there's more upside, especially as inflation comes down. This company should benefit when it has organic growth already.
Okay, I want to get to one more. We only have about 40 seconds left, but you like defense stocks, including General Dynamics, up 13% so far this year, around $293 a share. Make your case for it.
Okay, look at 80% of it is defense and 20% is the Gulfstream. So 80% is the Stryker, the Abrams tanks, and the nuclear subs. So you look at China, you're looking at nuclear subs. You're looking at Eastern Europe, you're looking at the Stryker, you're looking at Abrams tanks, the Middle East. Then you got 20% of their business, the Gulfstream, is coming online with the new G700s, which would really help them benefit them. So we think it's a core defense company, and it has a cyclical kick with the airline industry, with the G7, 700, 800 series, which would really propel their earnings.
All right, going to leave it on that note. The stock, by the way, General Dynamics, up about 13% so far here in 2024. Max Wasserman, thank you so much, founder and senior portfolio manager at the registered investment advisor Miramar Capital, joining us from Northbrook, Illinois. All right, everybody, just about 10 minutes left in today's trading session, seeing some selling, but rounding off the bottom right now. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet, 3:53 on Wall Street. Coming up after the close of trading, all about Netflix. Ahead of its report, Netflix now down by 0.7%. On average, Wall Street analysts are forecasting second quarter subscriber additions of about 4.9 million. That would follow estimate trouncing additions of more than 9 million users in the first quarter. You'll recall Netflix warned at that time that subscriber growth will likely be lower this quarter due to typical seasonality. It also did say that it plans to stop reporting the metric in 2025. Again, Netflix coming up after the close of trading. Netflix right now down by about 0.7%. Sources tell Bloomberg Apple is having discussions about licensing more films from major Hollywood studios as it looks to bolster its Apple TV Plus streaming service. Nvidia shares higher after yesterday's 6.6% drop. Andrew Sliman is head of Applied Equity Advisors at Morgan Stanley. He says now is the time to be getting in.
You had a 14% correction in the stock. I'm not putting my finger and saying this is the low, but these are the opportunities you want to take advantage of to accumulate companies, that are doing well. And I look back to last summer, and we started buying NVIDIA back then, and the stock basically traded flat to lower through the summer before it took off. And I think this is an opportunity to begin to increase exposure if you don't have it or if you've pared it back previously.
Andrew Sliman of Morgan Stanley interviewed this morning on Bloomberg Open Interest. Again, NVIDIA right now up by 2.1%. Netflix after the bell. Those are our top company stories. And this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, just a few minutes left in today's trading session. You just heard from Charlie breaking down the trade here, and it's been a very different tone, if you will, but just forget, or do not forget that we're in the beginning of earnings season. We've got a lot of reports to get through. We haven't had our busiest weeks, and we've been talking about the importance of what we get from earnings and what companies have to say. CEOs, the C-suite has to say about the outlook, what it says about the economy, what it says about their business environment going forward. So, we're in this kind of funny middle ground, waiting for the next Fed meeting, waiting for all the earnings to come out. There's a lot going on here. Oh, yeah, and politics.
There is a lot going on. Speaking of politics, among the most read on the Bloomberg terminal in the last hour,
where are you
the
going?
9th most read story, okay?
I'm going there.
Trump asks $844,600 for fundraiser at a seat at a Bitcoin conference. He's inviting supporters in the cryptocurrency industry to a private fundraising event in Nashville that's coming up on July 27th. It includes an asking price of $844,600 for a seat at the round table.
I love this part.
I was just going to say the crypto community has really, really embraced Donald Trump.
Yeah, I forgot that.
Or I should say Trump has embraced the crypto community. That might be a better way to put it.
And listen, if you're in the crypto community, you go to this conference and you want a photo with the presidential candidate, it'll cost you $60,000 per person, slightly less than the current price of one Bitcoin, by the way, or $100,000 per couple, according to an invitation.
Wait, so if there's more than one person,
if
there's more than one person in your photo, it costs more?
It says a couple. Does it have to be what is that? Could it just be
no,
two
but
people?
I mean, like, what if you want a photo with the president, but then
Yeah.
you want one other person in the picture?
Yeah.
It's going to cost $100,000.
Correct.
Wow.
But if you did
I
it
was thinking,
separately, it would cost each of you $60,000.
Yeah, so you're saving some money.
$20,000.
Okay.
Yeah. Fundraiser will be hosted amid the Bitcoin Conference 2024. It's an annual event organized by BTC Media for fans of the original cryptocurrency. Trump is set to speak on the main stage of the conference on the same day.
The asking price of $844,600 for the roundtable seat, it represents the max combined campaign contribution to the Trump campaign and the Republican National Committee that's allowed under campaign finance laws.
Yeah, presidential election race, it is on in a big way. RNC, Donald Trump tonight, our team, Joe Matthew and Kelly Lyons will be all over it and certainly taking all of the events, all the speakers leading up to Donald Trump. So be sure to tune in at 8 p.m. Wall Street time on Bloomberg Television. Do not go anywhere, though. Folks, we're 2.5 minutes away from the closing bell. We see stocks off their worst levels. Time to head over to our TV colleagues. That's because Beyond the Bell, closing bell, also starting right now.
Big tech companies.
Well, it is now. It's big tech.
Absolutely. Here, stick with us. We are moving closer to those closing bells. You see the clock flipping. Full market coverage coming up right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlett Fu, taking you through the closing bell. It's our global simulcast, starting now with Carol Masser and Tim Stenovic joining us from the radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube here on this Thursday afternoon. Alex Steele taking a well-deserved day off, and she's missing a lot of action today.
Yeah.
Another sell-off here, though it looked like we were going to get a rebound earlier in the day, Carol. I'm not sure what you said or did, but stocks right now back to lows on the day.
I did nothing, anybody, or everybody. Listen, though, I'm looking at pretty much broad-based selling because you've got most of the industry groups in the S&P 500 lower today. So you're seeing it really broad-based. It's not, for a while I felt like we had small caps coming back, but even they're having some struggles.
Yeah, I think that's what's really notable about today is that it's not this rotation trade out of mega cap tech and big names and into small caps. We're actually seeing the Russell 2000 underperform the other major indices today, Scarlett.
Yeah, within the Russell 2000, all 11 industry groups are down. The best performers are utilities. They're losing 0.9%. But within the S&P 500, interestingly, energy and utilities are holding up better than the others. Utilities unchanged. Energy stocks up by 1/3 of 1%.
And that's been the story really over the last few days. So we are seeing somewhat of a macro story to this and maybe an interest rate story to be a little bit more specific. We should point out we get some big earnings after the bell, including out of Western Alliance and Intuitive Surgical.
Oh, is that what? It's interesting that you say those names, Romaine. There's also a company you stream it.
A little-known
streaming
company.
services.
Little known,
Yeah.
All right, Netflix results are imminent here. Let's get you through the numbers before those results hit here. Red across the screen for all of the major indices. The Dow Jones Industrial Average down about 1.3% here on the day. The S&P down about 0.8% on the day. The NASDAQ composite is going to finish lower by 0.7%, and the Russell 2000 down by 1.9. Netflix earnings crossing the wire right now. Let's take it, guys, here. Revenue in the most recent quarter coming in at about $9.56 billion, a slight beat over what the street was looking for. EPS at $4.88 a share, a slight beat over what the street was looking for, 4.74. And here are your streaming numbers here. 2Q streaming paid net change, 8 million subscribers added. The street was looking for roughly about 4.9, and the company also guiding somewhat higher here for the third quarter, though it does look like the revenue number might be at just a tad light, 9.7. Street was looking for about 9.8 billion in revenue.
Yeah, but what's interesting is that second quarter streaming paid net change, a big beat, as we said, 8.05 million versus the estimate. But having said that, the company also says it sees third quarter net adds lower versus a year ago. You are seeing the stock bouncing around big time, Scarlett, in the after hours, but right now we're down about 3%. I'm looking at it in real time, down about 3% here.
When it comes to free cash flow, Netflix still sees full-year free cash flow at about $6 billion. Analysts were expecting something more at about $6.6 billion as well. Netflix may be making some changes to its debt burden. It's going to refinance $1.8 billion of maturing debt in the next 12 months. It took on a lot of that debt, of course, to pay for the original content that it's been pumping out.
You know what's interesting is everybody says that the streaming paid net change, subscriber numbers, is what everybody cares about. And this came in almost double what analysts expected, at least for the current, for the previous quarter, at 8.05 million versus estimates of 4.87 million. Yet third quarter revenue coming in a bit light, and perhaps that's why we're seeing shares down right now by 4.8%.
But I'm curious, though, with the boost in that revenue forecast for the full year, is that maybe a testament to some of the changes that they made to with the ad tier and everything else?
Could very well be. That's all things that we'll need to get from the company when they host their earnings call. Let's go over now to Bloomberg Technology co-host Ed Ludlow, who is standing by. He's been looking at the numbers. Ed, what do you see?
Yeah, I think a lot of emphasis on the current period. You know, when you saw that beat in the second quarter, 8.05 million new subs, you think, wow, the stock surely is going to go up. But they're kind of holding our hand towards the future. Remember that starting next year, they won't give us those net new subs numbers at all. And for the market, that's been a concern about the long-term growth narrative. There are some factors at play, including FX as a factor in the current period. We emphasize so much how they perform in America, but in other emerging markets, in Latin America in particular, they talk about markets like Argentina, local inflation there, currency impacts there being a factor. I guess the story, even though the stock's down 6% after hours, is the ad-supported tier is working and the password crackdown has worked in the quarter gone. Maybe the market just doesn't see a story of what's going to drive growth from this point onward.
Well, what maybe is going to drive it is some of the new genres it's going into in terms of content. I'm thinking about NFL, right? There's going to be 2 live NFL Christmas games. There are also WWE. These are things that they're rolling out in terms of content that maybe bring in new subscribers, new eyeballs. So they obviously have to spend for these things. That's an important part of the Netflix story.
But you don't want to talk about the hot dog eating competition? I thought that's where you were going to go with that. I mean, in the quarter just gone, one of the big factors they call out was the roast of Tom Brady, which was a live event. And again, it's really interesting to see this negative reaction. It's astonishing what they did in that quarter. They account for 8% in the most recent month of the total streaming market, almost double the percentage value of all their competitors in that streaming market. And they have a pipeline of things to come, like you say. So I don't know, maybe the street, even though they weren't so expectant on the subscriber growth in the fiscal second, maybe they were hopeful about somewhere else. And I think I heard you, Scarlett, talk about the debt burden or debt situation that they're rethinking as well. They've been calling on the market to say, judge us by traditional financial metrics, not by our subscriber base. Here's some judgment for you.
Yeah, and that judgment's going to get a little bit harder. It's interesting, too, when we're going through their strategy, at least as what they laid out in their shareholder letter. They make a very explicit lob here at some of the bundling that we've seen in the streaming space by some of the, I guess, more traditional providers here, and basically saying they're not participating in that. They don't actually see a need to have Netflix bundled with other streamers like Disney Plus or Max because, as it says, Ed Ludlow, Netflix already operates as a go-to destination for entertainment thanks to the breadth and variety of their slate. Is that slate going to hold up?
Yeah, I think that people seem to be willing to take the slate with ad support, right? Look at the ad growth in the quarter gone, 34% growth in the ad-supported tier quarter on quarter, but all the new signups, half of them were in the ad-supported tier in the quarter just gone. They don't mind ads, and one success that the bundlers have had is to say, okay, pay us a little bit more, get maybe like ESPN, Hulu, Disney Plus, but with no ads. You're getting value there, and Netflix has resisted the urge. One area that it is trying to not bundle but give more value is also in video games. You know, there's a clear commitment here to bring out video games and more cadence tied to some of their key titles.
You know, when are they going to do that, Ed? I mean, it says in the release they're going to plan to launch 1 title a month, but it seems like most of the titles that I've seen are like, you know, like whack. Let's just say it. I mean, they're just not very good. Yeah.
And they're also mobile focused, right? So if you go onto your smart TV and look at Netflix, there's no reference to game at all. They had the June refresh on that. When I go on my smartphone and I look at Netflix, there are loads of sort of mobile games that I could get anywhere else through the iOS App Store or otherwise.
Hey, Ed, for years, Netflix talked about basically anything that anyone did with their time other than stream Netflix was competition. Now they're actually getting a little more concentrated in the letter and talking about what their key to growth is the 80% of TV time that people spend not watching Netflix. Yes, some of that is streaming, but also some of that is broadcast and some of that linear. And to that end, the company said in its letter that it's redesigning that landing page for discovery, for content, when people go to Netflix on their smart TVs. I mean, is that the golden egg that Netflix needs to figure out? That it has to give you exactly what you want to watch, when you want to watch it, and that's going to keep you there?
They've also talked historically, though, that in the battle of eyeballs, it's the TikToks and the other social platforms that they feel they're competing against, not Disney. And the market's not really ever paid it that much credence. They want to have a good product. It's not directly Netflix news, but the other big story today, of course, was, according to sources, Apple is going to spend more on backfilling its catalog.
Right.
And Netflix, while we can talk about the cadence at which they bring new content, video or gaming otherwise, they do have a decent historic catalog as well. Make it nice to look at. I think that might be the logic.
All right. Well, Ed Ludlow, thank you so much. We're going to continue to certainly break down these earnings results. Just a quick rehash, folks. Netflix extending its lead over streaming competition, adding 8.05 million customers in the second quarter, so crushing even its own forecast. But the stock has been bouncing around. It's still down, Scarlett, about 1.5% here in the aftermarket, off its lows, though.
Yeah. I mean, one thing that has become really clear from all the analyst notes is that, and the company itself, is that this ad-supported tier is very valuable because they can make more money on it. But we know that the U.S. viewers generate more of that revenue than international viewers. So at what point do they tap out on U.S. viewers who pay for the ad-supported tier versus having to find that growth in the international markets?
And they do talk about in the letter, we don't expect advertising to be a primary driver of our revenue growth in 2024 or 2025. So they talk about some near-term challenges. So we're getting some more specifics, if it will, in terms of the advertising impact and certainly some of the build out here on what it means really for top and bottom line growth. All right, guys, that's a wrap. Continuing to watch Netflix down about 1.7% here in the aftermarket. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you same time, same place tomorrow for the closing bell.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We're watching shares of Netflix down 2% in the after hours. The company reported streaming paid net change for the second quarter that beat the average analyst estimate. But I think what has investors concerned, Carol, is the outlook and the third quarter forecast. The company seeing revenue at $9.73 billion. That's just shy of estimates of $9.83 billion, though it does see EPS coming in above estimates at $5.10 versus estimates of $4.74.
Yeah, I really get a feel that investors are trying to make a little sense as the stock's been bouncing. It's been lower in the aftermarket, but bouncing around at different times. Let's get to it. Let's make sense of it. Back with us, so grateful to have Bloomberg Intelligence Technology and Media Analyst Geetha Ranganathan and also Bloomberg News earnings reporter Red Brown. Geetha, to you, that number, I know you guys were looking for about 5 million on subscribers. They easily blew that out of the water. It seems like everybody's estimates.
Oh, absolutely. Complete blowout, crushed it. 65% higher than obviously what consensus was expecting. So the subscriber momentum is very, very much intact. And you're absolutely right there, Carol, about the guidance being a little bit tepid, and I think that is what is kind of weighing on the stocks at this point of time.
Are you worried by that guidance? Forgive me, Tim. Are you worried about that guidance?
Yeah, because this is where it's getting really, really hard to kind of model out this company. Remember, they're going to stop reporting subscriber metrics altogether. They're going to stop reporting that average revenue per user metric altogether in a few quarters. And so it's kind of becoming hard to figure out all of the different puts and takes. So we were kind of expecting 15% revenue growth in the third quarter. That's obviously a little bit light. They point to, Argentina being a source of the weakness. But then going forward, as more and more, subscriber growth comes from emerging markets, comes from some of these other, developing countries, is that really going to weigh on revenue growth? I think that becomes the big question. And then the other thing, of course, as you had pointed out earlier, was that they are not expecting a meaningful acceleration in the ad business in 2024 or even in 2025. And I think that'll give investors some pause as well.
What's interesting, though, is that even though revenue, Geetha, is coming in below estimates for the third quarter forecast, we're seeing the company at least tell us it's going to be more efficient because earnings per share is going to be $5.10. That beats estimates. An operating margin significantly higher than the 25.7% analysts had expected, coming in at 28.1%. So what's happening to Netflix where revenue is going down but efficiency is going up?
Efficiency is going up big time. And this is really, we've been talking about the operating leverage in this model, Tim, for such a long time right now. And this is that operating leverage that we get to see. They are giving that to us in the margin guide. Remember, they had first predicted 24% operating margin for the whole of 2024. They took that up to 25% last quarter, now up to 26%. That's a 500 basis point increase from last year. So, very likely that we can see up to 30% margins, maybe even as early as next year. This is huge in terms of just what the streaming models unit economics are, how they're shaping up. Just because there's been so many questions about whether it could ever be profitable and whether it could ever generate those 30% margins that the pay TV bundle was generating. And obviously, we have a resounding yes with this report from Netflix.
Which is why, as you said earlier, kind of Netflix stands alone and is the one to beat. Red Brown, I want to bring you into it. Also, listening to Geetha and going through the numbers, what stands out for you?
Yeah, I think it's just kind of this confluence of the revenue drivers that we're kind of looking to pay dividends when they say don't look at our subscriber numbers anymore. We're all saying, okay, we won't. We'll look at the revenue growth, and they're not kind of painting as pretty as a picture, I think, as the market would like to see for the time being. Maybe that does raise some questions on where is the levers that they can still pull to hit the numbers that everyone was expecting them to do.
Red, on the content side, I mean, what sticks out to you? Because the company did call out Bridgerton Season 3, Baby Reindeer, which I heard was really good. I haven't seen that.
I didn't watch Baby Reindeer. Bridgerton, yes.
Queen of Tears, The Great Indian Kapil Show, Under Paris Atlas, Hitman. Oh, I have heard of Hitman. I'm like, so many of these I'm reading, I'm like, these are not on my radar at all. The Roast of Tom Brady, though, that was one that everybody watched, it felt like.
Yeah, I mean,
except for Paul Brennan, who's just shaking his head in there. Oh, he watched it. Okay, he did watch it. Thumbs up. Two thumbs up.
All right. Well, if Paul watched it, then it must have been good. I think you are pointing to something interesting there. Is that the live? I think the thing that generated the most content, not on Netflix, but the most buzz was the live roast of Tom Brady. So I was reading some analyst notes that kind of called the content besides that a little bit lackluster this last quarter. So maybe that is, again, kind of pointing to the direction that they need to be heading is the live entertainment because it seems like if they're still attracting people with the content that they are, but it's, we don't get to speak to every subscriber, be like, did you sign up because it was live TV or because it was Bridgerton, right? So remains to be seen, I guess.
Geetha, I want to go back to you earlier when we talked to you to preview what Netflix, you talked about Netflix having the durable advantage over the long term. I look at, part of, I guess they have that durable advantage is I think about the cash that they generate. Talk about cash flow and what we got from Netflix on that front.
So cash flow still continues to be really, really strong, Carol. So they're still guiding to $6 billion in cash flow this year. And remember, they had generated about $6.5 billion last year. But the reason we're seeing a little bit of lumpiness this year is because of all the strikes that happened last year, and so much of production kind of got pushed to this year. But the real metric that we should be looking for is, the 2025 free cash flow. And I'm thinking just with the kind of profitability and the operating margins that they reported, we could easily be seeing about $10 billion in free cash flow going to next year. And that now gives them a lot of flexibility. They could invest in more content, of course, but it also gives them flexibility to do buybacks. And that, again, it becomes then your EPS booster over the long term.
They did say in the release during the second quarter, we repurchased 2.6 million shares for $1.6 billion. We have $5 billion remaining under our existing authorization. So I guess stay tuned to see whether or not we see more. What's the number one question you would be asking Netflix on the call here, Geetha?
I think a lot of concerns are still going to center around the advertising business. So I think we definitely want more clarity on that. Yes, they did give some perspective in terms of how many new signups came, but they still haven't actually given us a number in terms of how many number of subscribers are on the ad tier or what is the revenue that they're generating. I mean, they say it's not, it's de minimis, but still, I think we would definitely like to have a little bit more clarity on that.
Red, I want to bring you back in. You watch the earnings, you watch the market, certainly for us. I mean, Netflix is a big one when we think about the earnings season. We're just getting kind of started, but how are you thinking about it in terms of maybe what it means for some of the other players?
Yeah, I mean, it's the first tech name, really prominent tech name that we're getting. I guess we'll have to wait and see kind of how things shake out here with the market reaction. I mean, it's not as bad as I guess it could be. I think there's definitely some areas of a little bit of optimism, I think, to take away from this. The fact that they did add more subscribers than were expected. They did it across all of their regions, even with some of that weakness that they're pulling out in Latin America. I think that still speaks to maybe some strength for the tech companies that are a little bit more consumer-facing to maybe have a decent earnings season still here.
Hey, Geetha, on page 3 of the earnings release, they talk about engagement and competition, and there's this donut chart that shows that streaming now accounts for 40% of U.S. TV screen time. Still, broadcast and cable account for more than 40% together. Netflix and YouTube, though, are the clear leaders when it comes here. Everyone else, they kind of leave in the dust. That's according to Nielsen. Who are they going to pull more share from, or who do they need to pull more share from? Is it competition, or is it the traditional cable and broadcast?
It's a little bit of everybody. So, clearly we're seeing cord cutting. I mean, we've already seen 30 million subscribers leave the pay TV ecosystem. Where have they gone? Well, they've gone to Netflix, they've gone to Amazon Prime, they've gone to all of these other streaming services. But what is going to happen is, as all the competing services and Netflix raise prices, people are going to have to make a choice. And they are going to make that choice. And we think that default choice is going to be Netflix. So we're going to see their share kind of increase from the current 8% or 9% that it is and go higher. Not only because people are moving from linear to streaming, but also moving within streaming, gravitating more towards Netflix and YouTube.
All right, Geetha, 10 seconds left here. This is a strong report, good report. How do you describe it?
I would say definitely a very strong report. In terms of subscriber momentum, they've kind of checked all the boxes here.
All right, gonna run. Hey, Geetha, thank you so much. Of our Bloomberg Intelligence team and, of course, our Bloomberg News earnings reporter, Red Brown.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Netflix, the big story after hours, the big earnings report. Shares are trading lower now, down by about 3.5%. Netflix did extend its lead over the streaming competition, adding 8.05 million customers in the second quarter, crushing its own forecasts and those of Wall Street. Analysts expected a total of 4.87 million new subscribers on average. Geetha Raghunathan follows media and technology for Bloomberg Intelligence. She has been sifting through the report, and she spoke with us moments ago right here on Bloomberg Business Week.
Remember, they had first predicted 24% operating margin for the whole of 2024. They took that up to 25% last quarter, now up to 26%. That's a 500 basis point increase from last year. So, very likely that we can see up to 30% margins, maybe even as early as next year. This is huge in terms of just what the streaming models unit economics are, how they're shaping up.
Bloomberg's Geetha Raghunathan interviewed right here on Bloomberg Business Week. Turned out to be a down day, perhaps putting it mildly on Wall Street. Let's quantify it in terms of percentages. S&P today down 0.8%, falling 43 points, now at 55.44. The Dow dropped 533 points, down 1.3%. And NASDAQ was down 125 points, down 0.7%. 10-year at 4.19%, with a 2-year yielding 4.46%. Spot gold down $13 the ounce, down 0.5%. Bitcoin down 1.5% today, 63,571. And West Texas Intermediate crude down 0.5%. WTI 82.40 for a barrel of West Texas Intermediate crude. So again, recapping here, stocks lower. S&P down 0.8%. One more check on Netflix after hours, down now by roughly 3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Oklahoma, where the wind comes sweeping down the plain and the waving.
How can the song not make you smile?
I know.
Well, Donald Trump is set to address his party Thursday night for the first time since officially becoming its presidential nominee, with a speech aimed at uniting Republicans in his campaign to defeat President Joe Biden. But you know what they say, Carol?
Yep. All politics is local.
Yeah, and mayors know this firsthand. They're the ones on the front lines, seeing how the policies that are made at the federal level affect people in their cities. One of those mayors is David Holt, mayor of Oklahoma City. He joins us not from Oklahoma City, but from the Jersey Shore, where I believe he's on vacation.
You have some explaining to do, Mayor Holt.
Are you on vacation, Mayor?
I am on vacation. I'm in like the jankiest studio environment ever, our bedroom. But the city, our city never rests, nor should the mayor. So I had to take this opportunity to talk to you guys today.
Well, we definitely appreciate you joining us, and we have a good bit of time with you, so we're going to cover a lot here.
And as someone who was born and bred in New Jersey, still lives in New Jersey, thank you very much for being in our state.
Carol would be at the Jersey Shore right now if she didn't have to be here with us right now. We're going to get to
I married a Philly girl, so that's how I ended up here.
Makes sense.
We're going to get to your city being chosen as a venue for the 2028 Los Angeles Olympics. Yeah, you heard that right, everyone. We're going to get out a map out and we're going to explain how geography works here, okay? But first, we're going to start with politics because you are a Republican and you were an aide early in your career to Speaker of the House, Dennis Hastert. You helped re-elect George W. Bush in your home state. You were in the Oklahoma Senate, yet you're not at the RNC right now. You're on vacation. Why?
Well, I don't know. I guess I haven't been in a while. There was a time in my life when I was a delegate to the RNC, and I've been very involved. And I served in the White House for President George W. Bush for 2 years in legislative affairs. But I have not been a supporter of Trumpism personally. And what I love though is that I serve in an office as the mayor of Oklahoma City, where technically I'm nonpartisan. I mean, I recognize when I go on, national appearances like this, that's hard to process, and everybody's got to say how I'm registered, and that's fine. But all mayors, Republicans, Democrats, or independents, we really have found that we've just got to bring people together. We really can't be partisan. We will work with whoever, and in our cities, no matter where you're mayor, you're going to have a lot of people who come from all those different perspectives, and nothing's going to get done if you don't find a way to unite people. So, I proudly serve as a nonpartisan mayor. It is very true. I have a very Republican pedigree, but it would be a very uncomfortable place for me to be on many levels to be at the RNC this week. So, no, I wouldn't have made it whether I was on vacation or not. my key focus is serving the people of Oklahoma City, and the people of Oklahoma City largely are very purple politically, and that's how we get things done. We find ways to set aside those things that divide us and find common purpose.
It's interesting that you say that, because we speak with Maddie Parker, Mayor Maddie Parker, the mayor for Fort Worth, quite regularly, and she sort of gives a similar answer, that she has an R by her name, but doesn't necessarily believe in the sense of what the National Party is doing. And I'm wondering if that makes your job as mayor more difficult, or if it actually just doesn't matter, because what you say is you're a nonpartisan mayor, but like you said, your pedigree is in Republican politics.
Well, I think, I've been mayor for 6 years. Maddie's been in office for several years as well. I mean, ultimately, you build trust with your voters regardless of their registration. And I think I've long since passed that threshold with people in my city who are not registered Republicans. I think Democrats and independents know that they get a very pragmatic approach and a very open door from me. So maybe initially, maybe they would have been suspicious that, that I was going to be farther to the right than they would have liked. But I think they have found that, again, my sole purpose really is to find that outcome that I think is attainable at every level of government, that outcome that represents about 70% of people in the middle, regardless of their party registration. That's essentially what American democracy produced for 230 years. And it's really only in recent times that we've really struggled with that. But I think mayors are still practicing this art the way it was practiced for 2 centuries in this country. And we're often elected in a way, Maddie and I are both elected in a nonpartisan way that allows us to build that coalition. So, yeah, I think I've transcended party politics in Oklahoma City, and I'm glad to have done so. To me, that's how American politics is supposed to work.
Well, I love listening to you. We love talking to mayors. This idea of building coalitions, transcending parties, going across aisles. How come, is it just you have to do it on a local level? Because we certainly don't do it well on a federal level.
Well, I have 2 answers to that. Yes, I mean, one is necessity, right? It's like if we acted like they do in Washington or even in our state capitals, I mean, people would literally die, right? I mean, we provide like life-preserving services at the city level. Like, we got to get our stuff together. We can't play these games. We can't consider a great tweet or a press conference to be an accomplishment. Like, we have to reach outcomes. So we have to work together. But the other major reason, and this is pretty important, and I'm a bit of a zealot on this. I try to talk about it. I'm glad you've given me the door. Other offices in most states, state and federal offices, and certainly presidential candidates are elected through closed partisan primaries. And most mayors, for whatever historical, political science reasons, are not. I am not elected through a closed partisan primary. So when I seek office and when I seek re-election, I love to build, I am incentivized to build a coalition of people in the middle. That option is not even available to most people who serve in state capitals or in Washington. They have to first go through that closed partisan primary process. And whether they're coming from a red place or a blue place, they basically have to try to cater to the most extreme voters, people who in my form of elections, I basically, I respectfully listen to, but basically can ignore. I don't have to listen to the extremists at either end of the spectrum. That's the biggest difference. And I'm a huge proselytizer for the idea that if we start changing the way that we elect people at all levels of government, you will find that actually we're not as polarized in this country as people think. It's just that the system has sort of siloed us out in that way.
That's fascinating. Right?
It's incredible. I mean, I think many people would argue and maybe agree with the mayor that we perhaps would be in a better place without a primary process that encouraged extremism.
Yeah.
I think people could argue. People could argue that. Yeah.
Hey, we're going to get into other stuff. We promise. But I do wonder, as a mayor, does it matter to you, not personally, but in terms of what you can or can't do, ultimately, who is in the White House come November?
Sure. I mean, largely in Oklahoma City and probably in most cities, we've learned how to be somewhat self-reliant. But if we can get assistance from the federal government, we like that and we prefer that. And we've had some great examples over the last few years. We got direct funding through the CARES Act, which was actually under President Trump, and then we got direct funding through ARPA, which was obviously under President Biden, and then the bipartisan infrastructure law is a huge benefit to cities. We've already gotten over $100 million. Other cities have gotten a lot more, and we certainly have hopes and expectations of getting a lot more as the years advance. So, the last few years have been very beneficial for cities. Again, like if they aren't, then we figure out a way to get it done anyways. But obviously, when we have an administration in the White House that's sort of pro-city, understands that American cities are the chief economic and cultural engines of the country, that does make our life a little easier. And we communicate and work together as a nation of mayors through the U.S. Conference of Mayors for that reason. I mean, we do care what happens in Washington, and we like to speak with one voice. I'm actually the current vice president of that organization. I'll be the president in 11 months, and that's an important opportunity for us to speak with one voice in Washington, and we do it often.
Mayor Holt, stick with us because we're going to do some news, and then we're going to come back and speak more with you, including talking about the projects that you're working on, and then, of course,
the Olympics,
the Los Angeles Olympics coming to Oklahoma City. We're speaking with David Holt, the mayor of Oklahoma City, joining us on vacation. So a big thank you to him for doing that. We're going to talk to him more in just a few minutes. First up, though, a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Democrats at the highest levels making a critical push for President Biden to reconsider his election bid, but not New York Governor Kathy Hochul, who reiterated her support for Biden's campaign.
Once he said he's in, my view is he's going to be in. He's staying. As long as he's staying in this race, I am with him. He has delivered for New York in extraordinary ways that I look forward to talking about even more. And I believe in his vision for our country. So I am with him as long as he wants to do this. And he's been an extraordinary president.
Kathy Hochul speaking with Bloomberg's David Gura. Blackstone executive and billionaire Democratic donor John Gray says he hopes President Biden weighs the intense physical demands of running the country for another 4 years.
Well, the president is a good man. He has been a wonderful public servant. He's gotten the votes in the Democratic primary. This is his decision. But I would hope he considers the really extreme physical toll of this job over the next 4.5 years. And so, again, his call, but it is a very challenging physical job.
Some Democratic donors have already said they'll withhold any future contributions until Biden is off the ticket. Former President Obama has reportedly told allies in recent days President Biden's path to victory was greatly diminished, and he thinks the president needs to seriously consider the viability of his candidacy. The Washington Post reports Obama has only spoken with Biden once since the debate, and he's been clear in his conversations with others that the future of Biden's candidacy is a decision for the president to make. And White House physician Kevin O'Connor says President Biden continues to experience mild upper respiratory symptoms from COVID-19. He says the president does not have a fever and is isolating while he continues to work. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We got Netflix shares after hours trading lower. Right now, Netflix is down by just about 2.5%. Netflix did extend its lead over the streaming competition, adding 8.05 million customers in the second quarter, crushing its own forecasts, and those of Wall Street analysts were expecting a total of 4.87 million on average. But again, after hours, right now we've got Netflix trading lower by just about 0.4%. It did turn out to be a down day on Wall Street, with the Dow, the S&P, NASDAQ all declining. S&P ending the session at 5544, down 43 points, a drop of 0.8%. The Dow down 533, down 1.3%. NASDAQ lower by 125, down by about 0.7%. 10-year yield 4.20%, with a 2-year 4.46%. Spot gold down $13 the ounce to $24.44, a decline of 0.5%. And West Texas Intermediate crude oil down 0.6%, $82.37 a barrel. Well, as for the market backdrop, Max Wasserman is founder and senior partner at Miramar Capital, and he was a guest right here on Bloomberg Business Week.
A rotation in the market is perfectly healthy. When you look at these valuations of these top tech, the 37, 40 times earnings, when that money comes out, it's going back into companies that have been hit hard. You look at healthcare, you look at financials, you look at consumer staples. These stocks have already reflected this slowdown in the market. So when money comes into them, that creates opportunity.
Max Wasserman of Miramar Capital, interviewed right here on Bloomberg Business Week. Again, after hours, Netflix, as we check one more time, lower now by 2.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our conversation. We're talking with David Holt. He's the mayor of Oklahoma City, Oklahoma. As we said, he is on the Jersey Shore, not in Oklahoma City on this Thursday. Mayor Holt, talk to us a little bit about what you guys are doing for the Olympics. Because at first, to be quite honest, when our producer was laying it out for us this morning
I saw it on the calendar. I saw it on the calendar, and I was like, "What? This makes no sense to me."
Wait,
because
aren't the
Olympics are in LA?
Right.
Yeah.
And so, what are you doing? Tell us about what you guys are doing.
Absolutely. And I may just at a macro level kind of explain that for 30 years in Oklahoma City, we've been making, I would say, kind of historic investments in our city. I mean, it is definitely, if you're in urban circles, you kind of know the Oklahoma City story. We've been passing by huge margins these major initiatives after major initiatives. And as a result, it trickles down to the two venues I'm going to talk about here in a moment. We basically invested in two particular sports and ended up kind of being at the right place at the right time. We have the world's greatest softball stadium. That is like really beyond argument. The second largest softball stadium in the world is half the size of ours. Like we just doubled down on softball. We are now the home of the Women's College World Series every year, and this is a major capital for, if not the world capital for softball, is right in Oklahoma City. The other thing that happened to be fortuitous was we made a huge investment in whitewater. We have really the only whitewater course west of the Mississippi. And this started by putting dams on our river just because 30 years ago, just because we were sick of mowing it. We wanted some water in our river. We wanted a better aesthetically pleasing body of water. And that just one step, one thing grew from the next. And eventually we had this rowing community. Eventually, we decided to invest in it through whitewater to kind of have all of the paddle sports there on our river. And lo and behold, obviously, LA gets the 2028 Olympics. I became really good friends with Mayor Garcetti back when I got elected in 2018. And late in that year, he first broached the topic. So it's actually been a 6-year journey. He first broached the topic of hosting whitewater in Oklahoma City, which obviously, so I mean, I think I'm like most, people in America and around the world. I mean, I consider the Olympics like the brand beyond all other brands. I mean, it transcends sports. So the idea of getting that in Oklahoma City kind of was beyond our wildest imagination. And 6 years later, now the conversation includes softball as well. And LA 28 announced a few weeks ago that it is their plan to host all of the whitewater sports. It's actually at least 6 different gold medals in all of the softball tournament in Oklahoma City. That's nearly 2 weeks of events. We'd have 300 athletes, 200,000 tickets, and an opportunity for tens of millions of people in that part of the country to have a direct engagement with the LA Olympics. So Obviously, we're very excited. I do want to say there's still some process still remaining. The LA City Council has to consider certain aspects of this proposal from LA 28, and we want to be deeply respectful of that. But just to get to this point, even where we're even having this conversation, is obviously a big deal for Oklahoma City, and I think kind of reflects a renaissance that's been happening, maybe below some people's radar, but definitely is positioning us as, you know, a top-tier American city. Something I certainly couldn't have said 30 years ago, but this overnight success has required 30 years of investment in venues like these that we're going to enjoy and put forward in the 28 LA Olympics.
It is pretty cool how it comes out. Although I have to say, I was just checking. I'm like, it's 1,327 miles between LA and Oklahoma City. It's a 20-hour car trip. I mean, so I guess you guys are going to be putting up athletes, obviously fans. Like, there's a lot, and I know you can probably only talk about so much, but there's a lot of logistics to all of this.
Yeah, I think we are been in this conversation for a while, and we're fully committed to providing, the kind of energy and experience that the fans and the athletes expect. And we do. It does appear, that LA 28 is absolutely committed that the athletes will still be able to participate in the opening ceremonies, the closing ceremonies, possibly both. But in the meantime, yeah, we're gonna, I think, treat them so well that they'll ultimately be grateful that they got that opportunity. But we'll obviously probably have to prove ourselves in that regards. But we feel really confident that we're going to be able to provide that dynamic environment. And I think, the big picture here from sort of an Olympic movement perspective is that, the IOC wants to see cities not keep investing in venues that don't have a long-term operating plan, right? Mm-hmm. And so these two venues don't exist in California. They arguably don't exist anywhere west of the Mississippi, right? So I think that you'll see maybe more of this in the future. It is a little without precedent right now, with some occasional exceptions. I mean, people have, observed that Paris is holding surfing in Tahiti or whatever. I mean, so there's always certain things maybe that move a little bit farther. But I think moving forward beyond LA, I think you're going to see more of this because we did go through that period for those who followed the Olympic movement where, cities were building these mega stadiums that they just didn't have a use for beyond the Olympics. So I think we're helping LA present a more sustainable games, which pleases the IOC and the Olympic movement. And we're just so grateful to have that opportunity to support LA and to support these Olympics, these LA Olympics, and this partnership, obviously, I hope will be mutually beneficial.
Hey, Mayor Holt, beyond the Olympics, I want to speak a little bit about the local economy in Oklahoma City because the city's certainly known for quite a bit: energy, agriculture, aviation, aerospace, logistics. What would you say is the area, the sector where you see the most growth opportunity?
Well, probably just for sheer volume would be aviation and aerospace. We have a big Air Force base, Tinker Air Force Base, in our city limits. 30,000 people at least drive in there every day. And that has had a lot of spin-off activity, which we've obviously been very grateful for on many levels. When I talked about these investments that we started making in our city 30 years ago, part of that was a response to the economic depression that we experienced in the 80s, which was largely due to an over-reliance on just one industry, oil and gas. So ever since, it's like our vision for city leadership has just been anything we can do to diversify. You name the economic purpose and we'll be there, right? Because we've just got to find other things besides oil and gas. So aviation has been the biggest. But I mean, we got all kinds of stuff going on. I was part of hosting a premiere of Twisters Monday night because we have this,
the new one.
This growing film industry in Oklahoma City. I mean, there's lots of cool stuff happening in many different sectors.
Mayor Holt, we'd be remiss not to ask you. We've got about 25 seconds left here. Any signs of economic slowdown or recession? Just quickly.
A little bit. Our sales tax growth, and that's a big leading indicator for us, is slowing down. It is not like down year to year, but the growth is less than it was in the past. So we're being a little cautious for sure, especially from a city budgeting perspective.
All right. Well, we count on you guys to get some idea of really what's happening on the ground among the nation's cities. David Holt, enjoy your time on the Jersey Shore. Mayor of Oklahoma City, Oklahoma, of course, joining us, though, on this Thursday. You are listening and watching Bloomberg Business Week. Carol Messer, along with Tim Stanovic, and we are Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Indeed, the focus is on Netflix After Hours, extending its lead over the streaming competition, adding 8.05 million customers in the second quarter, crushing its own forecasts and those of Wall Street. Bloomberg's Geetha Rakanathan is with Bloomberg Intelligence. She's been sifting through the report.
Remember, they had first predicted 24% operating margin for the whole of 2024. They took that up to 25% last quarter, now up to 26%. That's a 500 basis point increase from last year. So, very likely that we can see up to 30% margins, maybe even as early as next year. This is huge in terms of just, what the streaming models unit economics are, how they're shaping up.
And she was interviewed right here on Bloomberg Business Week. And again, after hours right now, the stock is narrowing its loss, down now by roughly 0.8%. Sources tell Bloomberg Apple is having discussions about licensing more films from major Hollywood studios as it looks to bolster its Apple TV Plus streaming service. Those sources say the iPhone maker has spoken to several of the largest studios about acquiring more programming from their libraries to offer customers both in the U.S. and abroad. Ford Motor is investing $3 billion to build its highly profitable Super Duty F-Series pickup trucks at a plant in Ontario, Canada. Infosys raised its sales forecast for the year in a sign that clients are gradually beginning to boost technology spending, encouraged by a resilient global economy. India's $250 billion software services industry is betting that falling interest rates and slowing inflation will spur technology spending. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week on this Thursday afternoon. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The president has reportedly now asked for polling on how Vice President Kamala Harris would do. That, according to an ABC reporter in a post on X, citing an unidentified senior White House official. ABC also reporting that Biden appears to be more receptive to hearing out calls for him to bow out of the race, although he remains committed to running. New York Governor Kathy Hochul reiterated her support for President Biden's campaign.
Once he said he's in, my view is he's going to be in. He's staying. As long as he's staying in this race, I am with him. He has delivered for New York in extraordinary ways that I look forward to talking about even more. And I believe in his vision for our country. So I am with him as long as he wants to do this. And he's been an extraordinary president.
Kathy Hochul speaking with Bloomberg's David Gura. In other news, there may be some important movement in the 9-month war between Israel and Hamas. Let's get more on that story from Bloomberg's Nathan Hager in Washington.
Bloomberg News has learned Israel is discussing a transfer of control of the Rafah border crossing between Gaza and Egypt to the European Union and the Palestinians. Sources tell us Israeli officials are discussing the proposal with the U.S. and EU, even as Prime Minister Benjamin Netanyahu has dismissed the idea in the past. Netanyahu is due to meet with President Biden next week and address Congress in his first trip outside Israel since the war began after the October 7th Hamas attack. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Biden administration's student loan debt forgiveness program has been temporarily halted by the 8th Circuit. The appeals court granted a motion from a Republican-led coalition of states asking the court to stop the program while the court considers the case. The program reduces student debt payments based on income, in some cases to zero, and speeds up loan forgiveness for some groups of borrowers. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, Amy, thank you so much. Carol Masser along with Tim Stenivek, getting ready for all of the coverage of the RNC as it wraps up with that acceptance speech from Donald Trump. Having said this, Tim and I always do this like at the end of the day. It's like, we kind of go through some of the most read stories on the Bloomberg, and this one popped up. The IRS has issued final regulations raising the age at which workers must start taking funds out of their qualified retirement accounts.
Okay, so the final rules released today reflect changes from the Secure Act that allowed account holders to leave 401k and other retirement account savings in place past the previously prescribed age of 70 and a half, while still avoiding heavy excise taxes typically associated with late withdrawal of those assets. So is that, minimum distributions, right? So RMDs. That age change will allow workers to leave more cash in retirement accounts longer in order to accrue savings. It's the result of broader legislative and regulatory efforts to attempt to address a looming retirement savings gap.
Yeah, that's because we're all living a lot longer, and I guess we're getting a little concerned.
Maybe we're working longer.
Well,
right?
Well, you think about this. Like, if you're working longer, then maybe you don't have to tap your retirement. Well, hey, listen, let's be fair. And I feel like Stefan Seelig, reminding us too very clearly that not everybody's in the stock market and are, having these retirement benefits. So it is for a certain sect of the population.
Okay, so let's tell people the required start date. So if you were born before July 1st, 1949, you have to start taking distributions at age 70 and a half. Somebody who was born between that date and January 1st, 1951 would need to be 72 before they started taking those RMDs. Then, if you're born from 51 to the first day of 1959, you don't have to start removing